to the Benzinga Cannabis Hour.
There are more people who are in favor of legalization.
I saw the benefits of it for myself.
I just have to ask, was there pot pasta in the cannabis cookbook?
Oh, it was gorgeous. There was pot pasta.
We were talking about cannabis pasta.
That opened my eyes to the cannabis industry.
It's this new industry where now billions of dollars are being made.
We're here to bring cannabis into culture.
Welcome to Track 2 of Benzinga's Cannabis Capital Conference. I am so excited to be here with you all today. This is our first Cannabis Capital Conference of the year. I am here with my fearless co-host of Cannabis Hour, Javier Hasse. He is the managing director of Benzinga Cannabis's editorial team. We all know and love him. Javi, how are you today?
I am doing great. Very, very, very excited for first Benzinga Cannabis Capital Conference Virtual Edition 2021.
Yes, 2021.
High energy.
Do you still get confused saying 2021? Because I feel like we've never said a year more than 2020 in our lives. But anyway, we're out. We're here.
Didn't win.
Yes, I mean, I did it.
Did you get the joke?
The most incredible, yeah, kind of. We have the most incredible lineup today. I mean, just look who we're starting with on the Cool Kids track here, Jushi. Huge company. I mean, a company everybody should know, and we're going to definitely be diving into them a little bit further. Mm-hmm. I have a few logistical things to cover before I open it up to Javi for some updates. So we do have two streams. We have two streams for 2 days of content. You can catch these on two YouTube channels, or if you are on the platform, you can switch back and forth, but please make sure you are aware of the agenda. Please make sure you look ahead and get the content that you want to get, because there's so much of it here for you. And if you do want replays, yes, bzcannabis.com. Secondly, there are networking capabilities for those of you in the platform. Please filter who you would like to meet. Get connections here. That is the whole point of these events, is to meet people, investors, entrepreneurs, service providers, operators, whatever you are, there is somebody else here for you to meet. Thirdly, if you are on YouTube, if you are on the event platform, you can ask me questions throughout the day. I will translate those as best I can, if time allows, to the presenters, as well as to the moderators. Again, no guarantees, but I will do my best to engage you. This conference is for you, and for your knowledge and your enlightenment. So I will continue to plug some of these items throughout the day to make sure you guys remember. But Javi, we have 1 minute for a few news items. Can you run through them for me?
Let's talk about some of today's news. Philo just tapped a high-level Twitter executive. Go to benzinga.com/cannabis to find out who it is. Red, White, and Bloom, one of our good friends, acquired Acreage's Florida operations for $16 million. Verano expanded in Arizona and secured $80 million in financing. Also earlier this week, Coda Signature raised $6 million to finance development, including U.S. expansion. Sundial, hot stock, and you all know the story, close to $22 million strategic investment into Indiva. And most of all, an exclusive you heard first on Benzinga, Coach Capital launched a $100 million fund and added Mitch Can to the team. What do you think? That's a lot of news.
That's a lot of news, honestly, and there's so many questions for you, but they're going to see us throughout the day. Javi, you're going to join me again at the end of the day to recap what we see here, and I'm going to ask you a few questions on the news. But my friend, it's time. It is time for us to go.
$56 million to support Virginia, an acquisition in Virginia. We're going to hear about that and a lot more. Jushi.
I love it. All right, Javi, I'll see you again in a few hours, my friend. But until then, I enjoy your day. Enjoy the content.
Track 2. Stay on track 2.
Yep, Cool Kids track.
That's the track.
All right, Javi, we'll talk to you soon, my friend. I'm going to trade your space here with our good friend, Michael Perlman. He is the EVP of Investor Relations at Jushi. Incredible company. Starting off with a huge bang here, I think. No longer the sleeping giant. Michael, how are you today?
I'm doing well. Thank you for having us. Appreciate
we're thrilled. We're thrilled to have you. Michael, I'm going to turn it right over to you, my friend. Why don't you take it away? Share your screen with us if you can, and we'll go.
Great. Thank you very much. Let me just get that going right now. All right, away we go. All right, well, thanks, Ellie, for the introduction. I really appreciate it. Thank you for having us here at the Benzinga Conference in 2021 to kick off the year. I'm going to start on slide 5, highlighting our senior executive management team. Jushi is led by Jim Cacioppo, CEO, chairman, and founder of Jushi. Jim had a very accomplished career prior to founding Jushi, including founding and managing multiple multi-billion-dollar hedge funds with a stress on distressed assets. We also have Eric Moff, president, board member, and founder. Eric had a very distinguished career at Deutsche Bank, 20 years, serving as managing director and vice chair. We have John Barak, president and founder. John has an extensive financial and cannabis investing career, worked at multiple hedge funds over the last 10 to 15 years. And Kimberly Bombach serves as our EVP, Chief Financial Officer. Prior to joining Jushi back in April of 2019, Kim served as CFO of about 6 high-growth early startup companies. So great team. This team, our senior management team, is supported by a number of talented executives, all with diverse backgrounds, including cannabis and non-cannabis experience. I'll switch to slide 7. So this is Jushi at a glance. We have a very targeted footprint in limited license markets. Currently, we operate 16 stores. We have plans to open up 16 additional stores for a total count of 32. We operate 3 cultivation facilities and 4 extraction and processing facilities. Jushi has reported very strong sequential revenue growth over the most recent quarterly reporting periods. In fact, Q3 over Q2, we've reported 67% revenue growth. And we just recently increased our fourth quarter revenue guidance from 28 to 30 million to 32 to 33 million for the fourth quarter. We also expect Q1 2021 revenue to be approximately 37 to 40 million dollars. From a liquidity perspective, Jushi has a very solid balance sheet. We have about 180 million of cash and marketable securities. Since inception, we've raised nearly 400 million dollars. And founders and insiders have contributed about 50 million of their own capital that's included in that 400 million. The next slide geographically illustrates our national footprint. We operate in 6 markets: Virginia, Pennsylvania, Illinois, Ohio, Nevada, and California. In a couple of minutes, I'll spend more time on each of the individual markets. But as I mentioned, we have 32 cannabis retail stores at fully built out. 3 cultivation, 4 extraction and processing, 3 offices, and over 600 team members and growing by the day. Moving to the next slide. This slide illustrates that we have broad exposure to both medical and adult use markets. So highlighted in dark blue, you'll see our 3 core markets: Virginia and Pennsylvania and Illinois. Virginia and Pennsylvania are high quality medical markets. Virginia is more of an early stage medical market with positive regulatory developments. Pennsylvania is a more mature medical market, probably arguably one of the best medical markets in the country, with also a strong positive market trajectory. Our 3rd core market is Illinois. Many of you know Illinois went adult use back in January 1st of 2020. That market is one of the best adult use markets in the country. We'll talk a bit more about that. And then highlighted in that grayish purple are what we define as our developing markets. These are markets we're in the process of building out our footprint and developing scale. This is Nevada, California, and Ohio, which is a very early medical market. Moving to the next slide, slide 10, that's slide 11. We're going to open up the conversation with talking about our 3 core markets. First one is Virginia. Some of you may be aware of Virginia, some of you may not. It's one that's becoming much more part of the conversation to date because of the positive legislative movement in the state. But overall, it's a very sizable state, 8.5 million people. What they did with Virginia was they carved up the market into 5 health service areas with 1 license holder in each health service area. You are required to be vertically integrated. And at this time, you're able to open up to 6 locations in your specific health service area. You also can wholesale outside of your health service area and deliver. So currently, Jushi's assets stand at the 1 co-located facility within that vertically integrated pharmaceutical facility. We have plans to open up an additional 5 locations in health service area 2. Expect to open up about 1 to 2 locations in 2021. The vertically integrated facility is about 93,000 square feet. We built it out modularly so we can essentially do a phased approach. The first 30,000 square feet is built out today, and we plan on expanding that facility as the market matures. We have also announced that we're looking at the adjacent properties around the facility to ensure that we can expand as the medical market expands as well. Moving to the next slide, takes a closer look at health service area 2. What we have here are identify the specific targeted locations that we're looking at for those 5 additional locations. But overall, we think health service area 2 is quite special. I mentioned 8.5 million people in the entire state. Well, 2.5 million people are in health service area 2. The median age in health service area 2 is 37 years old. High tech, dominated by millennials, great population for our product. It's also the smallest geographic HSA, which is great for delivery, which we can do within the health service area and outside. And that's also home to 5 to 10 wealthiest neighborhoods in the entire state. Next state overview is Pennsylvania. As I mentioned earlier, Pennsylvania is arguably one of the best medical markets in the country, population of nearly 13 million. A growing medical patient and caregiver program. That program has probably gone up 5-fold since the first year it rolled out. Medical is a highly limited license market. Currently, there's 150 retail licenses, of which about just over 100 are open today, 25 grower processor licenses, and we also have a clinical register program that will add 48 retail and 8 grower processors on top of the numbers I just mentioned. Jushi's assets, 10 medical dispensary operational today. We have plans to open up the remaining 8 locations by the end of this year. Expect the first location to open up in March of 2021. We have a 90,000 square foot grower processor facility. We have plans to expand that to 160,000 square feet and almost triple canopy to nearly 100,000 square feet. Next slide, zero ins, back one more. Next slide, zero ins on our assets, retail assets by geographical location. We have currently 6 assets, 6 stores open up in the Philadelphia region, with 2 stores expected to be open this year. In Pittsburgh region, we have 1 asset open, 2 additional coming online. And then Scranton, we have 3 assets online with an additional 4 assets coming online in 2021. Great locations across the state. Next state overview is Illinois. As I mentioned, Illinois is one of the most successful adult use markets in the country. Population nearly 13 million. As I mentioned, commenced adult use sales on January 1st, 2020. Projected to reach $2.5 billion at market maturity. It's running at a run rate of about $1 billion as of the most recent month on adult use only. Currently, up to, as I mentioned, a limited license market, 110 dispensaries in total, with the 75 additional licenses coming online, and 21 grower processors in the state. Currently, Jushi operates 4 operational dispensaries, 2 of which we acquired back in January, February of 2020, and 2 of which we've just opened up in December, January, most recently of January of this year. This is a zeroed-in approach of what Illinois and our assets look like. So we're operating 2 markets, Sauget and Bloomington Normal. Our 2 operational stores in, we have 2 operational stores in Sauget. The Sauget 1 store that we've been operating since late January, early February is the top performing store in our entire portfolio. The 2 stores we have in Bloomington Normal, College Town, great location. We expect that market to be better when kids start going back to school. But from a competitive perspective, we have a great position within that market, given the nearest competitor is 40 minutes or nearly 40 miles away from us. This slide goes, since we walked through the core markets, these are the developing markets. Ohio, early stage medical market. We plan on opening our processing facility in the first quarter. Nevada, we have a cultivation and extraction business that we plan on expanding. But Nevada, we think it's a great market, hit hard by COVID, but recovering. In California, we have 1 asset in Santa Barbara. We recently announced, signed definitive agreements for 2 additional stores, 1 license, 1 act operational store in Grover Beach and Palm Springs. And we also have a 4th store that we plan on opening up in 2022 in Culver City based on an application we won. This next slide talks to the online channel that an online reservation system that we launched back in late April, May of 2020. So what we did back in May of 2020 was relaunch beyondhello.com, and which provides customers real-time access to inventory, as well as an easy to use online reservation system coupled with easy in-store pickup or potentially curbside delivery where permissible. So these are the key metrics we've been able to deliver on since relaunching beyondhello.com. So online sales up nearly 180%, conversion rates up over 100%, traffic's up, and we're seeing new daily customers in the over 600 on a daily basis through December. Moving to our financial performance and outlook, the company has reported strong sequential revenue growth, as I mentioned before. Looking at Q4 quarterly annualized revenue versus Q3, we see revenues up 30%. As I mentioned before, 4th quarter revenues, we expect to be between 32 and 33 million. We expect 2.5 million to 3 million in adjusted EBITDA for the 4th quarter. And we're also projecting 37 to 40 million of revenue and 4 to 5 million of adjusted EBITDA in the 1st quarter. We also have been one of the few companies that provided guidance for 2021. So we expect revenues to be between 205 to 255 million, adjusted EBITDA between 40 to 50 million. The next slide breaks out 2020 revenue on a state-by-state basis. You can see that Pennsylvania and Illinois account for about 75 to 80% of overall revenue. Currently, that's a buildup of our current assets that we have running today and the incremental assets we have coming online through 2021. Moving to the next slide, this is our share count analysis. So essentially on an as converted basis, we're running around 170 million of shares. On a fully diluted basis, just over 241 million. I'll let you guys spend time on that if you'd like. And then from a liquidity perspective, as I mentioned earlier, we have about 180 million of cash and marketable securities on the balance sheet. Our total debt position is 86 million. Based on our most recent stock performance or in the first week of February, we're looking at market cap of on a subordinate voting basis about 1.2 billion, on a fully diluted basis over $2 billion. And that wraps up the presentation for me, and I'll hand it back over to Elliot for questions.
Man,
whip through that,
potential.
Elliot.
Yeah, that was a beautiful timing there, my friend. Also, incredible growth story. You and the team have obviously been working very hard. I'm trying to, kind of temper my excitement between the facility expansions, the online store growth, the beautiful store you have behind you. I mean, where do you all see the majority of your growth? I know you all have been putting a ton of emphasis on data recently.
Yes.
So I'm curious, how does that impact, where you put your priority? Do you have to prioritize one over the other? Maybe a bad way of asking that question.
No, it's a good question. And, we've stressed data, the accumulation of data, the aggregation, also the mining, as well as the analysis of the data. We have a great team of individuals that's led by Andreas Newman. He's got Silicon Valley experience. He started multiple creative agencies and sold them off. He's got a team of user experience experts. All those insights, whether it be proprietary research, the data we're mining from, whether it be off of our own systems or the other third-party systems that we're using, we're not looking at that data in silos. We're aggregating that data so we have a more holistic view of the entire market. We then take those insights and develop better processes within our own systems, but also not only from an online perspective, but also from a retail perspective. Our most recent store, Sage 2, is like a culmination of all the data, all of our learnings that we've gotten over the last year, and put them into a store. What we're trying to do is remove all the friction points for our customer to make it as seamless as possible for them to come on to beyondhello.com, choose from a live store inventory, select a window of time in which to pick up their product, and do so in a matter of minutes. So by taking down all the barriers and making it easy for a customer to transact, engage with the Beyond Hello brand is a big part of the success and why we've seen such a ramp in our online platform, because we just make it easy for our customers to engage with us and go through the entire customer shopping experience.
Yeah, kind of a follow-up to that, and this may be more out of my own personal curiosity. Do you see common trends between these different state markets? Because obviously Illinois and Pennsylvania, the focus may be different, versus medical and recreational, but I'm curious, product trend wise, is it similar or do they differ? And also, I guess that depends on demographics as well, where you are.
Sure. Well, I would say across the board, flower is the most popular product. It's a key driver behind anyone's assortment. What I would say also is that customers like variety. They want to see multiple brands on their shelves. They don't want to see one or two or three brands. They want to see 15, 16, 17. We see in our results, we see in our daily results, if we have a wide, broad assortment of product, the stores perform better. So from that perspective, it's pretty similar across state by state in terms of what customers are looking for. In terms of like online engagement, I think it's similar across the board in terms of how customers engage with the Beyond Hello brand. We see customers flocking to the beyondhello.com online reservation system, being much more accustomed to what they want before they even enter our store. I mean, we've put out the fact before that 80% of our customers are using mobile devices, and they know exactly what they want before they even enter our store. I mean, that's across the board, which is just a fantastic figure, but also makes you rethink how you redesign the retail experience. And those learnings are, because we're building out our store base. We're going from 16 to 32. We got 10 to 12 new stores coming online. It makes you rethink how you serve the customer if the customer is already coming in knowing exactly what they want.
Right.
Does the experience become more transactional? Do you need more POS systems to serve the customer? That thought process is coming into play as we build out the retail footprint into 2021 into 2022.
Very, very cool. A very polished and data-driven company should excite any investor, in my opinion. Michael, one last thought for the investors, or if you wouldn't mind, actually you might have it on the screen where they can reach you.
Yeah, I have it on the screen. So my email address is my first initial mperlman@jushico.com, but investors@jushico.com will get to me or someone on my team. More than happy to do a deeper dive. I know we've had a limited time, so I ran through the presentation fairly quickly, but more than happy to spend time with those folks that are looking for a deeper dive on the company. We're excited to tell the story.
Great. Michael, thank you so much for being here. Please do reach out to Michael. They are available for meetings today and tomorrow. incredible company, one of the leaders in the space. Thank you again for joining us, Michael.
Great. Thanks for having me. Take care.
All right. You as well. All right. We started off with a bang. I don't know how else you would say that. Jushi is truly a leader in the U.S. cannabis space. And if you don't know them now, you do. Please reach out to the investor team over there. Todd, Michael, Lisa are all incredibly knowledgeable about the space and Jushi. All right. So I do, of course, have to plug some things here. So I want to set us up for a little commercial on the Cannabis Hour. This is something I host with a few other incredibly knowledgeable Benzinga members in the cannabis industry. Nicole, Sarah, Aaron, would you mind go ahead and queuing us up?
Welcome to the Benzinga Cannabis Hour.
There are more people who are in favor of legalization.
I saw the benefits of it for myself.
I just have to ask, was there pot pasta in the cannabis cookbook?
Oh, it was gorgeous. There was pot pasta.
We were talking about cannabis pasta.
That opened my eyes to the cannabis industry.
Is this new industry where now billions of dollars are being made?
We're here to bring cannabis into culture.
I love it. Gets me pumped up every time. I am still excited for the day ahead because for our retail investors and those investing in the space specifically, we have a special treat for you all today. He is a good friend and partner to all of us here at Benzinga Cannabis, Alan Brockstein. You probably know him from New Cannabis Ventures, from 420 Investor, from MarketFi. Alan, I see you there, my friend. How are you?
I'm doing all right. Just trying to get my presentation up. Give me one sec.
Oh yeah, you take your time. You take your time. I'm hoping Alan is going to give us the secret to making all the money in cannabis. I doubt I'm going to get that secret, but you all may, and I think this is exciting. If you wanted to give us some insight on where Sundial is and going, I wouldn't argue, but that's. There's like a look of worry and confusion on your face right now, Alan.
I'm just trying to get this to work. I'm not worried or confused.
Oh, never. Alan has all the answers.
Screen, but I can't see. Am I just sharing one screen?
I don't see your screen shared at this point in time.
Okay, hang on a sec.
Yeah, you may be a different window option there. Zoom gets us all. I have 2 mute buttons now with my microphone, and I swear every single day I miss it and just start talking with a mute button on. There you go.
I'm in business.
Yeah.
We're a couple minutes early, so I can talk a little bit longer, right?
Yeah, man. I'm going to let you take it because they're here for you. Alan, again, a leading knowledgeable person when it comes to investing in cannabis, and he's going to tell you why right now. Alan, I'm going to let you take it away.
All right, thanks, Elliot. And it's a tough act to follow Michael's presentation. And for any of you who saw that, you can tell I might have had a look of worry just a moment ago, trying to get the technical down. But when I hear stories like Jushi and many of the other ones right now, what a great place we're in right now. I've been following the space for a long time. We're going to talk about that in just a moment, but just a little bit about myself. I'm sitting here in Houston. It is approximately 60 degrees warmer today than it was a week ago. So I'm glad it wasn't last week because I was without power. That would not have been fun. So this is my background for those that don't know me. I've been following the space for 8 years full time. And the funniest thing about me is I've never owned a cannabis stock, which sometimes I have to think about my business models. But it makes sense for me to not own cannabis stock so I can be as free of bias as possible. So it's a funny thing. So just a little bit about what I do. I have 2 businesses. One is 420 Investor, which I do in partnership with Benzinga on their MarketFi platform. And it's a subscription-based service. Like I said, that launched 8 years ago, almost 8 years ago. And it has a lot of different features. So obviously this is something that people pay for. I also have a service that's free, New Cannabis Ventures on the right. And so beyond no paywall, the biggest differences are there's a lot of information on New Cannabis Ventures and not a lot of analysis, really. The analysis goes to my paying subscribers, but there's one nice exception, our weekly newsletter. People in the industry love it. And it's the one time I put my editorial slant into what we publish. But it's a great way to stay on top of the industry if you're not already familiar with it. So with that, let's talk about today. So we just had a big change with the federal elections, and I'm going to talk about what that means. And then I'm also going to share some ways that I think you can think about how to invest now, given this information, and also how not to invest. And we'll wrap up with some Q&A. So for those that aren't familiar with the politics of federal legalization and what it means, we've had a real problem the whole time I've been covering the cannabis space. We've never had the federal government have any sort of desire to move forward on getting rid of the total hypocrisy of having cannabis on Schedule I, having it be an illegal substance. And the House, actually, which was controlled by the Democrats a little bit more narrowly now, but still controlled by the Democrats, made some historic moves last year, but they were for nothing because the Mitch McConnell would not let anything get to the Senate floor. So that's really what we've been dealing with. And so now we have a Democrat-controlled Senate, but with a big asterisk. It's not really that controlled. They're sharing committee leadership, for example, and any sort of legislation to pass would require 60 votes. So if you really think about it, we've made a giant step towards progress, but the pace of that progress is going to be limited by the fact that the Democrats can't just do what they did in Canada a few years ago and legalize. There's no mandate to do so. They don't have enough votes to do so. So it's going to take some negotiating. So the last Benzinga conference took place in October. And this is a slide, I just copied it. I just put what I said in October in the title. But if the Democrats take the Senate, and of course it took us a couple months to figure that one out due to the special election in Georgia. But I think this is important to go over because I think it helps frame where we are right now. So I said that I expected a big rally due to expectations of full legalization. And I also pointed out, as I just mentioned, that full legalization is complicated and will take a long time. And we'll talk about that. But the main issues are interstate commerce, taxation, social equity, and how it's going to be regulated by the FDA or what have you. And so I also mentioned that there are some risks to the status quo. Right now, the status quo is awesome. We have a whole bunch of multi-state operators or MSOs that are growing revenue very rapidly, raising capital, generating profits, redeploying that capital. All that's great, but the future could be a little bit different, and I'll discuss that. So I said then this could be a rally to fade. Now, good news, I didn't sell the next day, and I'll talk more about that in a minute. And when I say I didn't sell, I mean in my model portfolios at 420 Investor. The long term, as I mentioned back in October, a few months ago, that there's some fantastic potential changes that fall short of legalization, including credit cards being able to be used, mortgage debt being available, higher exchanges becoming an option, and more research, which is very important. So what I said in conclusion was it should be a big catalyst in the short term. It should raise some questions, and that it's a solid long-term driver. So there was a big rally. The one on the left shows the index, the Global Cannabis Stock Index we published at New Cannabis Ventures over the last 6 months. And just to kind of walk you through this, I have to be careful. So the first election was down here. The Benzinga conference was down here. The first election took place, and Biden being elected president was probably perceived, not because of him, but because of his vice president, was perceived positively. We got a little bit of a rally, but we really took off in January. So I think I had that one right, that the Democrats taking control could lead to a big rally. Now, in all truth, I was very nervous up here about the price action, and I did something I very rarely do. I raised a ton of cash in my model portfolios at 420 Investor, and it was literally a one-day decline of 17%, and I put most of it back to work. So I don't really try to time the market. We can talk about that later, but I did kind of, that was my reaction. I got really nervous this day, went to cash and redeployed it the next day. And we're a little bit lower now. You can, for some perspective, you can see on the right as well, from those March lows, we're up a ton. This was done as of last Friday, by the way. So what's been really interesting about this rally, and it's infuriating to some people, frustrating to others, maybe some don't understand it, but I certainly understand it. The Canadian LPs have been doing better than the American MSOs. And this is rather perverse. The American MSOs seem to be in the best position to benefit from the state elections that took place in Arizona and New Jersey, as well as potential changes like uplisting. And so you can see on the right how the MSOs have performed through Friday. And for the most part, they've trailed. And you can see some really odd performance from Tilray and Aphria that have gone up just a ton, and really good performance from the other large LPs. So what's going on is that on the left, these all trade on the NASDAQ and the New York Stock Exchange. On the right, they don't. And so this is something I've been talking about at 420 Investor and even writing about at New Cannabis Ventures, that this is just a technical situation. And you have services like briefing.com that I subscribe to, that when they say things like Virginia is set to legalize, then they'll put Tilray, Aphria, Aurora. It's crazy, but the traders out there don't understand that that the real beneficiary are most likely the American companies. Now, we can talk about it. I think that the various large LPs, they may be able to enter the United States, but there's a really terrible argument. The argument is that these are well-funded companies and they can raise capital more easily and deploy it effectively. And the reality is none of these companies have been very good at deploying capital. This has been proven, that while the ones on the right have been very effective. And for the ones on the left, the Canadian LPs enter the United States, the ones on the right will be uplisted and it will make it more equivalent. So what now? So recently the Senate leadership has made some positive statements about advancing cannabis legislation. Well, of course. So this isn't a surprise. The market took it very favorably, but so far there's been no new legislation introduced in the Senate or the House. So what really matters, if you're a cannabis investor, don't pay as much attention to this federal stuff. I'll talk about why in a moment. This is what really matters. We have this state-by-state legalization. It's a little bit complicated. Every state's different. No, there's no interstate commerce. It's a big pain in the ass, but it works. And so that's the first point. And as I mentioned earlier, in the elections, there were 4 states that went from having, actually, that's not true. When there were 4 states where the voters approved legalization, one of them, they didn't even have medical. That was South Dakota. But in any event, 2 red states, very small states, voted, and it's not a big deal. But Arizona and New Jersey are very big deals. First of all, as I've been discussing, these are states where for really almost the first time, we have a situation where the publicly traded companies are already in these states. So it really has this very quick feedback into the publicly traded stocks. When Colorado legalized, publicly traded companies weren't even allowed to own cannabis dispensaries or grows. So things have really changed. So Arizona and New Jersey legalizing were important for that reason, but also one of the things I talked about in my last Benzinga presentation and in other places was this domino effect, where when New Jersey legalized, it would set off other states wanting to do so. And this is through the legislative process, which is a better way to go legal. We saw Illinois go legal this way, and it's been a great success. And so just this year, Connecticut, Delaware, New York, Rhode Island, and Virginia have all made statements, either the governors or the legislature, and there's even been legislation introduced in some of these states. So we're already seeing this play out, and it makes sense because these states need tax revenue, and plus they know that this is going to happen anyway. They might as well move forward. It makes sense for their citizens, and popular vote is behind it. So the domino effect is taking off. This is what matters. And finally, another thing taking off is California. California is often talked about as one of the largest global cannabis countries. It's just a state. This is the place, and it's been a rough time for the last 3 years since they went legal. It was a very complex process where they tried to go from an unregulated medical market and to introduce, sorry, I didn't silence my phone, to introduce both adult use and medical at the same time, which was really crazy. That if you look at Canada, if you look at California, if you look at any state that's new, one of the keys to success is having distribution, i.e. having stores open. And California opened without legal stores and without enough legal supply. The black market, the illicit market was winning for a long time, but now the illicit market is taking heat. Maybe we can talk about that. So what to expect? I think the federal developments will be slow. I think it'll be a very optimistic outlook where we shouldn't see any interference at all from the federal government. We should continue to see very robust growth in both revenue and profits for the MSOs, and we should continue to see new state markets opening up. All three of these things should make you feel very bullish about the industry. Doesn't mean to buy today. Certainly didn't mean to buy 2 weeks ago, maybe buy today. There's some other things that are happening that are really supportive of a bullish view. So we've seen more institutional investment. Most recently, GTI, for example, was able to raise $100 million the day after its SEC registration went effective from a single unnamed institutional investor. I later uncovered another institutional investor that I wasn't even familiar with, but they put about, I think 7%, maybe it was 5% of 7% of their money into GTI, which was about 5% of GTI. We've seen some others like Wasatch get involved, Putnam. So this is a big change. I've been covering the space for 8 years. I knew this day would come. It is here. Institutional investors have figured out how to get into our market. This is just beginning. Also, one of the problems for these companies has been access to capital. And so the equity markets seem to be opening up, but debt has been really tough, very expensive to borrow. And they've had to rely on sale leasebacks with IIPR, very expensive. Talk more about that in a moment. So the debt, we're starting to see the debt capital become more available and at better rates. So now that these companies are cash flow positive in their operations, debt makes a lot more sense. Before you'd be taking on debt without having the ability to properly service it. So this is a good thing. And also another thing to expect is M&A. We've already seen a lot this year. It's going to be mainly public companies buying private companies. Just yesterday, Verano went public very recently, and they announced what amounts to about $100 million acquisition in the state of Arizona. We've seen Ayr buy publicly traded Liberty. That deal will go through soon. We've seen Cresco Labs buy publicly traded Bluma. Both of those transactions were public companies, but they were single state operators. So let's talk about what you're here to learn, which is how do you make money? So I think, there are a lot of people who, there's a hashtag now, MSO gang, MSOS gang. I don't participate in it. I think it's very chauvinistic. It's, I think the best way to make money in the market is to open your mind to that there's a lot of different ways to make money. So my first statement is do not go all in on just MSOs. There are other ways to play, but the MSOs are a great way to play. There's going to continue to be high growth. We're going to see consolidation. Consolidation is usually thought of as, okay, I'm going to go find the companies that are going to get bought but I think you should think about it more as I'm going to invest in the companies that are going to be able to buy private companies on the cheap. So we're starting to see those, like Columbia Care has done a great job on this. We're going to see a lower cost of capital, and that means a higher equity price, all things equal. And most importantly, there's a shot at getting listings on the New York Stock Exchange and NASDAQ. Game changer. There's nothing more important than this right now if you're an MSO investor, in my opinion. Now, I have to say there are some risks. So first of all, CBD was thought to be legalized in November of 18. This was not true. Hemp was legalized, but CBD was put into purgatory. It's still not legal to sell the CBD. People do it. The FDA has said, they're going to regulate it. They've been very slow. It's caused a lot of problems. So imagine what happens if the FDA wants to regulate the cannabis industry. Terrible. Now, I don't think this will necessarily happen, but it's my responsibility to make sure people are aware that this could happen, and we'll have to adapt to that if so. Another thing that people don't talk about, right now, many of the large MSOs with multi-state operations, obviously is MSO, they have small production facilities spread out across the country because there's no interstate commerce. Now, I'm not sure we're going to get interstate commerce, but if we do, these assets could become what's known as stranded assets, where these companies are on the hook for expensive lease payments to IIPR, for example, and they're not the best assets. What you really want are large production facilities, not a bunch of small, inefficient ones or less efficient ones. So single state operators, I just mentioned that Bluma Wellness and Liberty in Florida have been acquired, and that's not supposed to be it. And so we've seen that, and there are a few other single state operators that could be acquired, or even some small publicly traded ones. Don't expect hookups right now between large MSOs. Regulatory issues constrain them. So an SSO is easier to acquire, or a small MSO. The regulatory issues are, for example, you can't have 2 licenses in Florida right now. Massachusetts similarly. So all these states have controls over how many stores you might be able to have or production facilities. So the M&A gets complicated for larger companies. Verano went public. They didn't have a presence in Florida and Arizona. AltMed did. They bought AltMed. So that's the kind of thing to expect. So it does favor SSOs. Honestly, there aren't that many SSOs left. There's a few. But I want to talk about the hidden potential upside beyond M&A, and that's the opposite of the stranded assets. There are a few companies out there that have large-scale production facilities that would really benefit from the ability to ship out of state. And I'm not necessarily suggesting investment in them, but I will tell you 3 of them off the top of my head. So the parent company just went public. That would be 1. Indus Holdings would be 2. And while they've had some financial trouble recently, Flower One in Nevada would be 3. There's more, and there's some that are private, obviously, as well. Copper State in Arizona might be a good example. So this is something to think about as well for the SSOs. As I mentioned earlier, don't put all your eggs in the MSO basket, in my opinion. Ancillary is great. Now, I'm happy to see that people are investing in these companies now. We're seeing more of them. Hydrofarm went public, Agrify went public. There's been a lot of interest in GrowGen, which I followed for many years. People didn't care about these in the past, but these can be some great companies. Urban Grow just uplisted to the NASDAQ. Weed Maps is going public through a SPAC. So we're starting to see more of these. So this is another way to capitalize. These companies don't pay 280E tax. So if that's going to take a while to resolve, better after-tax cash flow on these kind of companies. So back to my point from earlier, I like smaller Canadian LPs, not every single one of them, but some. I like Canadian retailers, not every single one of them, but a few. But the big Canadian LPs are probably not the way to play US legalization. You have 5 big LPs, 2 of them are merging, Aphria and Tilray. Canopy Growth is set to lock in the acquisition of not a very good company, in my opinion. I'll just leave it at that. And, they're sitting on $1 billion, but I think GTI could raise that overnight if they were uplisted. They've already pretty much proven that. So they're also very beverage focused, which is probably not going to be the best way to capitalize on the market. That's more of a long-term driver. So then you have absolutely nothing from Aurora. They have no US. They have the ability to buy part of Australis, which has nothing. So those are two. Then you have a free Tilray. They're playing it the CPG route. They have absolutely no access to any existing US cannabis assets as of this moment. And then the one that I find most interesting is Cronos Group. Cronos Group, as you know, has Gotham as big investors. Gotham owns or controls MedMen and Ianthus, which have some good assets, not good companies, but good assets. And you can imagine that that might be a way, plus the strategic partnership with Altria. So I don't want to say that they're so bad you should never own them. There are some ways they could participate in the US market, but I think if you really want to participate in the US market, these MSOs are probably the best way to play. So the takeaways, and I'll go to Q&A. We have an improvement in the federal regulatory environment, but the timeline is very uncertain in what it looks like. State by state legalization is working great. Full legalization is complicated, but there's some things that could happen, like uplisting particularly, but also access to mortgage debt, for example, or being able to take credit cards that would be beneficial. And finally, this huge rally in the large Canadian LPs is a technical thing. It's not driven by fundamentals. So I appreciate your interest this morning. I think we have time for some questions. If you want to learn more, here's how you do it. Elliot.
Yeah, definitely have questions in the chat. There's never not a question for you, Alan. Let's start with a good one from Z Zelek. A question for Mr. Alan Brockstein. MSOs should focus on wholesale or retail long term? I know that's a complex question, but throw it to you.
Yeah, it's a simple question and a complex one, and I don't have a great answer. Here's my answer. They should focus on what they're best at. And so when you think about the cannabis space, there's been a lot of vertical integration. And what that means is, like, let's take Canada, for instance. In the early days, every gram of cannabis that was sold had to be produced by the seller. There were no, it was all seed to customer, essentially. And in Florida, that's the case right now. So every state's a little bit different, but just like every other industry in the world, I mean, think about the beer industry. You don't see Anheuser-Busch selling out of their stores. I don't think there's Anheuser-Busch stores. So there are some MSOs that are going to be really good at retail. It doesn't mean they can't do these other things. And right now, like we just heard from Jushi earlier, they have a real retail emphasis, and that's really where they're trying to excel. Ellie, I know you asked them about using data. Mm-hmm. So I think that everybody is going to have to be good at what they want to be good at. And the idea of we're going to be the best at everything is not a good way to go. So that's really my answer. The most value, it depends on the market. In a federally legal market, I think that the value would be created in both, honestly, in wholesale, making the products, and in retail. Now, I will say this, you got to be really careful because the cultivation side can become very commoditized. Now, you can make a lot of money in a commoditized market, but you have to be growing in a large scale facility with a low cost of production.
Very interesting. I mean, look at Tilt. Tilt Holdings is one that, I feel like are supporting other MSOs. Mm-hmm. That's just my own example that comes to the top of my head. A couple other questions. I think you did touch on this, but I don't think it hurts to go a little bit deeper. If when MJ is federally legal, does it pay to own a cannabis brand, or should we be more interested in a quote unquote Amazon of cannabis / pick and shovels? Thoughts on how many brands there are right now?
Yeah, so I would say right now, I'm not going to pick on Curaleaf when they start talking about how they have the best brand. It's just not true. There are no brands yet of the caliber of beer brands, cigarette brands, all these other CPG brands. There are some brands that are developing, and there are good brands, but there's not that dominant brand yet. This will come, but there's no reason to think that you can't make money investing in the brands itself. That's for sure. As far as the Amazon, whoops, sorry. Let me stop sharing my screen real quick.
You're fine. I don't see it actually on mine.
Oh, so as far as the Amazon of cannabis question goes, I think
Will that be Amazon?
yeah, it might be Amazon is true. I do say that, but I'm trying to give an updated version of that. So it just depends on, do we have interstate commerce or not? I mean, I think one of the best things for the cannabis industry during the pandemic was that we were finally able to have online ordering with either delivery, kind of the Amazon experience, not exactly, couldn't use your credit card, you had to do something different, and it wasn't the prime person and all that, but it was pretty close. And I think that was a game changer. So when we start to see interstate, you could see a large company that last mile, a lot of people are focusing on the last mile, but I think there's a lot of ways to win, Elliot, and one shouldn't put all their eggs in one basket.
Here's another question. This is actually a personal question for me, but it does address a bit, I think, of what we have a couple members in the chat looking toward here. I talked to Michael Auerbach on Cannabis Hour a couple weeks back, and he was talking about CanDoc potentially, or will be listed on the NASDAQ in the future. Is that something that, while we have the obstacle of 280E here in the US, that we should look more to the international markets like Israel, like maybe a Mexico coming online?
So I don't usually do these predictions at the beginning of the year, or I don't put a lot into them, but I did this year say that for the first time, international is worth paying attention to. And it's been on the back burner for me for years, and things haven't lived up to their expectations. I noted sometime in Q4 how rapidly the Israeli medical cannabis market's evolving, and also how legalization appears to be imminent there. And so there are a lot of different ways to play. You mentioned one, CanDoc, with the SPAC that hasn't closed yet. And then another one is I Am Cannabis, which is uplisting Monday. And I actually think this is very interesting because you have companies that are generating revenue that seem to be market leaders, and now they're going to have higher exchange access. And in the past, I would have said, if you want to invest for international, and you have Clever Leaves trading now too, by the way, not the Israel thing, but international. So in the past, if you wanted to invest in the international theme, really the only way to do it was through an LP, and you just took on huge market cap to do so. And so I think investors are fortunate that we're starting to see these new developments right now where, for example, they can pinpoint into Israel, get that higher exchange. So without me endorsing these, because I'm not going to at this moment, but I think this is a very positive development.
Well, and Alan, I mean, you cover all of this on New Cannabis Ventures, and I do want to shout out that I read your site daily. So one of my favorite places to get updated information, of course, along with Javier and his team at Benzinga Cannabis. Can you leave us with a last thought here, and really specifically toward those that are excited about potential cannabis markets?
Oh, I'm so glad you're giving me that opportunity, and people are going to think this was scripted, and I don't want to be leave on a negative note, because I am so bullish. I told my subscribers at the end of Q4, we were up 61%. Usually a nervous Nelly like me would be saying, whoa, hold on, be careful. But I think one day I said, put the pedal to the metal, and people are like, who is this guy? So I do want to say we are starting to see a lot of enthusiasm, and I see this through the number of people that subscribe to 420 Investor increasing, or the people who sign up for our weekly newsletter at New Cannabis Ventures starting to really pick up after a long lull. And so and it's obvious in the prices and the trading volume, and there's great reason to be excited. But we're up 60% year to date. I just did the math the other night.
Wow.
If you do that and you annualize it, it means we're going to be up like 1,455% or something like that at the end of the year. And it's not happening. Right. So what I try to do for my subscribers at 420 Investor, and what I want to do for our audience here, is to just set the expectations realistically. Now, I think you can make money if you go all in today. You may be feeling hurt in a few days or weeks. So I just want to caution to be very careful. I talk to this about daily with my subscribers. I don't have a crystal ball, but I know the setups are not great right now, especially for these large LPs. So I'm not going to tell you they can't keep going up, but I can tell you I'm a little bit cautious right now. And so the message I'd like to leave is you should be very bullish on cannabis. In my opinion, things are moving in the right direction. I think there's a little bit of confusion right now about the beneficiaries. The media kind of pushes the wrong tickers. The right tickers are doing very well. They're great buy on dip. If you have any doubt, buy half your position now, because they may keep going up. The setups can get worse. They're not so great right now. They're getting a little bit better as we kind of flatline recently. So that's where I leave it.
Fantastic. Alan, a huge pleasure to have you with us as always. There are a ton more questions in our YouTube chat if you want to hop in there and take a look at those. Either way, the information that you are providing is available on New Cannabis Ventures, and I highly recommend subscribing to 420i. Outside of that, Alan, always a pleasure, and we will see you next time, sir. Great. All right. I mean, I don't know how you can get more educated than listening to Alan Brockstein on the cannabis industry, but we're going to attempt to keep it rolling with, honestly, one of the OGs in the space. I don't know if you've heard of Delta 9. You're about to. Listed on the OTC as VRNDF and the TSX as DN. We have their CEO, John Arbuthnot, probably the youngest CEO I have spoken with in the cannabis space, but don't be fooled. The man knows his stuff. John, how are you?
Elliot, I'm very well. Thank you for having me.
Yeah, absolutely happy to have you. I'm going to throw it to you. I want to hear about what you do, the Canadian market a little bit, but you are not just in Canada. And I think you're probably going to tell us a bit about that now. So I'll turn it to you, my friend.
Absolutely. Thank you. Good morning, everyone, and welcome. Thank you for joining us for the Benzinga conference this morning. My name is John Arbuthnot. I'm the CEO, co-founder of Delta 9 Cannabis. Today, I'm going to lead you through the company's history, our most recent financial and operating results, chat a little bit about our experience in the space and why we feel now is an attractive time to be investing. Just before we begin, I do want to remind everyone that today's presentation may contain forward-looking statements that reflect our views with respect to future events. As such, these statements are subject to risks and uncertainties, which can cause results to differ materially from those projected. For more information on the legal, please visit our public filings, which are available on SEDAR. And with all of that said, let's begin. We are, as Elliot mentioned, one of the oldest cannabis companies in the space, with over 7 years now of operating experience. In 2013, we became the fourth licensed commercial cultivator up here in Canada under the Health Canada MMPR program. Now, the early years of our company were quite modest as a small, privately held licensed producer, producing cannabis products, selling those direct to medical patients. 2017 became the real growth year for us. We raised about $10 million privately. Throughout the year, we listed our shares publicly on the Toronto Venture Exchange in November 2017. Since that time, we've raised a little over $85 million through a mix of debt and equity.
John, not to cut in here, my friend. I don't think you're sharing your screen if you're looking to at the moment. Sorry about that.
No problem, Elliot. There is no share screen.
Okay, perfect. Sorry, I just wanted to make sure with you.
No problem. Since that time, as I mentioned, we've raised about $85 million through a mix of debt and equity to fund the expansion of our various businesses. We're now one of the few vertically integrated and diversified cannabis companies operating in Canada. So licensed by Health Canada for cultivation, processing, extraction, and wholesale distribution. We're licensed as a retailer. We're currently operating 10 cannabis retail stores with plans to open an additional 10 stores throughout this calendar year. And we operate a business-to-business segment where we sell our proprietary cultivation platform to other licensed and pre-licensed operators across North America. We provide, the company shares now trade on the main board, Toronto Stock Exchange, under the symbol DN. We also trade over the counter in the United States under the symbol VRNDF. And to give people a little bit deeper dive on our main business segments, on the cultivation side, what really makes us unique is how we grow. As opposed to the big open warehouse and greenhouses used by many of our competitors, our proprietary cannabis production methodology is based around a small modular unit that we call the grow pod. Now, we believe there's a number of benefits to the grow pod model versus traditional open warehouse or greenhouse or outdoor production. But most namely, it gives us a very high level of control over the growing environment. Obviously, we're looking to position as a high quality producer, less so as a commoditized producer. It gives us the ability to customize the growing environment. We grow a number of different genetic strains of cannabis. This allows us to maximize quality and output for each genetic variety. These pods are relatively inexpensive. They provide a very attractive return on invested capital for the company. The modular format minimizes the risk of contamination. And obviously putting these into compartmentalized areas means that we are minimizing the risk of systemic crop loss through the spread of contamination or disease or pests through the facilities. We've scaled our operations significantly over the last few years. We now have 297 of these grow pods under license by Health Canada and operating in our state-of-the-art cultivation and processing facility. Now, beyond the operating benefits, we feel that there's a strong economic case for these grow pods. We manufacture them on site, as I mentioned here. They are proprietary to Delta 9. We've historically expanded for less than $100 per square foot, and with industry average CapEx for purpose-built facilities typically ranging in even upwards of $300 a foot, this low or relatively inexpensive CapEx per foot model translates into that higher return on invested capital that I mentioned. Also, as we've scaled our production operations, we've invested heavily in automation of key processes within our facility, fertigation, bucking, harvesting, trimming, bottling, all of these activities fully automated. This has translated into significant efficiencies as we've scaled the operation. We recently pre-announced our Q4 results for our cost per gram, hitting 67 cents in the fourth quarter last year, down from 74 cents in the third quarter. So putting us in an industry-leading category in terms of production efficiencies. From a scale perspective, again, 297 of these pods under license, about 95,000 feet of flowering canopy under production, and about 8,300 kilos per year. So translating into about $25 to $30 million a year in just wholesale flower. Over the long term, we plan to continue to bring on additional supply capacity as the legal Canadian cannabis market continues to expand, and as we see the demand curve continue to expand here in Canada. In terms of our product offering, we currently offer about 30 different SKUs of dried cannabis flower, making up about 70% of our product offering. The remaining 30% is comprised of cannabis pre-rolls, ingestible cannabis oils, cannabis vape products, and a powdered cannabis kief, currently a number of SKUs of 2.0 cannabis products in development. There's been a significant amount of excitement in the cannabis space over the rollout of these 2.0 derivative products here in Canada, but dried flower continues to demand the most significant market share by revenue. In our cannabis flower portfolio, we have a number of high potency, high quality varieties. And with access to an on-site seed bank, we have over 75 unique cannabis genetics and a pipeline of new products that we can continue to deploy to make sure that we continue to remain a leader in high quality indoor hydroponic cannabis products here in Canada. In 2020, we also developed and launched a number of house branded products in the mid-range potency or value segment in 3.5 and 7 gram settings to compete with other value platforms introduced by our competitors. These products are often retailing at $4 to $6 a gram. So now directly competing with the black market. We've seen, I would say, very strong uptake in terms of these mid-positioned products in the value segment over much of 2020 and now into 2021. Pre-rolls have become a very important category for us. We are investing further in automation of our pre-rolls manufacturing in 2021, getting us to a point where we will be able to produce 20,000 cannabis pre-rolls per day through our production line, increasing our capacity from about 4,000 cannabis pre-rolls per day currently. But again, pre-rolls, cannabis flower continuing to dominate the overall market share here in the Canadian market, giving up a little bit of market share to these new 2.0 derivative products. We are licensed for these edibles, extracts, derivatives for sale. Really, our focus has been on the ingestible oil products. We will be relaunching our line of ingestible oils here this year, including THC, balanced, and CBD focused products. We will be relaunching our vape line as well, again, including THC dominant 1-to-1 and 2-to-1 ratios in our vape segment, and more news to come on the full launch of our vape line shortly. And we are in development on a number of cannabis concentrate products. This will give us kind of full exposure in terms of the 2.0 product offering here in Canada, except for edibles and drinkables. Those are a little bit outside of our bandwidth currently, but again, giving us, I think, a significant breadth in terms of products that we can access and put into the cannabis wholesale market here in Canada. From a distribution standpoint, we've undertaken a strategy to add new distribution markets incrementally as our increased supply capacity has come online over the last 2 years. Our ultimate goal is to become a national or international distributor as regulations allow for all of these cannabis products. We're currently licensed for distribution in Manitoba, Saskatchewan, Alberta, British Columbia, more recently Ontario and Newfoundland. So this gives us coast-to-coast reach here in Canada, upwards of 25 million potential Canadian consumers that we are able to target through these existing wholesale supply agreements. As our capacity continues to increase, again, we plan to continue to add distribution markets through supply listings and formal supply agreements in those markets. On vertical integration and cannabis retail, we opened our first Delta 9 branded cannabis store on Legalization Day in Canada on October 17th a few years ago to lineups around the block. Since that time, our retail store chain has grown to one of the largest in the country in terms of revenue per store and revenue per square foot. We now operate 10 Delta 9 branded cannabis retail stores spread across Manitoba, Saskatchewan, and Alberta, the prairie markets here in Canada. We feel there's a number of benefits to this vertical integration strategy into retail. It really is leveraging what a number of US MSOs are doing very successfully in the US. It gives us control over the direct-to-consumer sales force for product distribution, gives us control over consumer branding and marketing initiatives. We're very restricted on how we can market and advertise ourselves here in Canada. The retail segment gives us the ability to do that. We capture different additional revenues and gross margin from retail sales. And I would say significant value in getting direct feedback from our customers, from the end consumer of cannabis. This helps us improve our product offering, track pricing trends, and things like that. A number of benefits to operating vertically integrated into the retail segment. Our stores have produced significant economics over the first full years of operation, with revenue per square foot nearing $3,000 for some of our largest stores. We have put up same store sales growth quarter over quarter throughout 2020. So very positive metrics coming out of our retail chain. Our intent is to build a network of dozens of Delta 9 cannabis branded storefronts over the coming years in markets which allow for private retail here in Canada. And we've made significant progress over the last 12 months in expanding this chain. Again, look for us to expand from our current 10 operating stores up to 20 stores by the end of this calendar year. In our business-to-business segment, our B2B, we derive a portion of our overall revenues from sales of our proprietary grow pods, sales of cultivation equipment, providing facility design and consultation services, licensing services, getting people set up, really providing a turnkey platform for cannabis industry entrepreneurs that are looking to enter the space. We feel that this more picks and shovels business gives us a number of benefits, including complementary business vertical, which produces diversified and high margin revenue for us. It validates our company's proprietary grow pod growing platform, produces valuable partnerships with other licensed and pre-licensed cannabis operators, and it gives us the opportunity for international expansion. So we will just focus on that for a moment. Obviously, this business segment providing unique exposure to the picks and shovels side of the industry, but also a unique opportunity for us to push sales into the United States. While as a TSX listed company, it is prohibited for us to touch the cannabis plant, to invest in operations in the US. We are able to sell cannabis equipment. So we successfully built out facilities in Michigan and Maine in 2020. We're continuing to expand our business segment into the United States in advance of federal legalization south of the border. So unique value proposition in investing in Delta 9. We do have some of that near-term US exposure to the upside in the US market. I'll turn quickly to the financials. Revenues for our third quarter were $13.1 million this year, up significantly, almost 100% over the previous year. Revenues for the 9-month period were $37.9 million, again up 95% from the previous year. We recently pre-reported our Q4 2020 numbers, targeting revenue guidance of up to $14.2 million for the fourth quarter, our fifth consecutive quarter of revenue growth in the wake of legalization here in Canada. We've now produced significant revenue growth in each year since we listed our shares publicly. Revenues have grown from less than 1 million in 2017 to 7.6 million the next year to over 32 million in the following year. We've now pre-released guidance again for 2020 of up to 52 million in top line revenue for 2020, continuing that track record of year-over-year revenue growth. Most notably for a cannabis industry operator in the Canadian space, this year we began to reach that inflection point to profitability. We produced positive net income from operations in 3 of our last 4 quarters, positive adjusted EBITDA of 1.9 million for the first 9 months of 2020. So again, creating a profitable Canadian cannabis company is really the focus near term for Delta 9. On the balance sheet, finished the third quarter last year with a very strong balance sheet, 7.2 million in cash, over 25 million in working capital. We've subsequently raised another 5.7 million through an equity unit offering, which saw strong interest from Canadian institutional investors. We're well positioned to continue to expand, to continue to execute on our expansion, both through organic store build-outs and through acquisition in the Canadian space. Now you see on the cap table, we have a fairly tight cap structure, about 101 million shares outstanding, giving us a market capitalization of about 58 to 60 million. We would suggest that on a pound for pound basis, there is no company in the Canadian cannabis industry with more revenue and profits relative to current market cap than Delta 9. I'll just finish off with why we feel Delta 9 is a value play in the Canadian cannabis space and why to invest now. Firstly, we are an essential business. We've been declared essential through the pandemic, mitigating the risk of financial fallout due to government shutdowns. We have a track record for success. We're focused on execution on our diversified growth strategy, and we've produced significant revenue growth across all of our businesses in the wake of legalization. You've got investment from management. Management is highly invested. We represent about 40% ownership in the company. We are diversified. This diversified revenue approach mitigates risk in an uncertain market environment. We've demonstrated the path to profitability. Investors are seeking cannabis investments increasingly that have achieved profitability, and they can demonstrate that the business model makes some sense. Again, as I mentioned, we reached that point in 2020. And really that attractive entry point valuation. Delta 9 trades at a relative discount for our financial and operating results versus our peer competitors. And we present an attractive opportunity for investors looking for a value play in a cannabis company with a track record for financial and operating performance. As always, I would encourage investors to conduct their own due diligence before investing. All of our investor materials are available, including our most recent financials and MD&A documents. Investor presentations, fact sheets are all available on our website at invest.delta9.ca. And please don't hesitate to reach out to the company and our investor relations folks with any questions you may have. With that, I think we have a few moments left here. I'll turn things back over to Elliot if there's any final questions.
Yes, sir, John. We have one from our good friend Matt Berlando from the platform. Great respect for Delta 9. Your strategy and focus has been amazing. Does Delta 9 have near or long-term strategies to invest in the EU GMP cannabis market?
Yeah, good question. I mean, there's been significant investment in the Canadian space toward EU GMP compliant facilities. It is something that we have been exploring for our facilities that are existing here in Winnipeg. Although at this point, I would say it may be more attractive for us to acquire a facility that already has EU GMP certification. Yeah, historically, it's always been a challenge given the actual sales, dollar volume sales of Canadian produced EU GMP cannabis in the EU has been relatively small for the investment that's gone in. But I think there are, I would say, good tailwinds in terms of the expansion of, the German market, expansion then across the EU. So I think that market's starting to get traction to a point where return on invested capital can make some sense. So EU GMP certification, I think certainly, I would say is a strategy that the company needs to look at some point in order to breach that EU market.
Fantastic. Great answer. So I have one really quick question. If you can answer this in like 30 seconds for me. With you expanding via this super creative business model into the US, does the difficulties of the Canadian tax structure and the Canadian illicit market become less of an obstacle to you?
Good question. I mean, I don't think there's any significant concerns from our perspective on the Canadian tax structure. I mean, the excise tax has become a challenge in terms of that structure. I think the government will need to revisit that at some point. I think this diversified model, though, really works well for Delta 9 in that, if we feel that there's margin compression from, say, the Canadian excise tax structure on our wholesale business, we're able to then recapture margin in our retail business. Again, exposure to the US through sales of grow pods and that diversified revenue stream through B2B. It de-risks us from a tax perspective as well. So I think a number of merits to that business model. But I think the companies continue to demonstrate that we're able to drive through some of these nearer term challenges in what has been an uncertain market environment in the wake of legalization.
Absolutely. John, it's been a pleasure, sir. Again, that is invest@delta9.ca.
Invest.delta9.ca.
Invest.delta9. I'm sorry. Invest@delta9.ca or invest.delta9.
.delta9.ca.
Okay. All right. There we go. That is the website because I was thinking email address and apparently I'm single-minded. John, it's a pleasure, my friend. It's good to have you back. Glad we got you on this time, October. Some technical difficulties, but incredible company, incredible growth opportunity. And we thank you again.
Elliot, thank you for having me.
All right. All right. Awesome company. I think one of the older Canadian plays that obviously is making moves into other markets. So please pay attention to them. OTC VRNDF. We are moving right along, though. We have Sky Bioscience with Khiron, the VP of Investor Relations, here to give us his presentation. Khiron, how are you, sir? You may need to unmute yourself if possible and turn your video on for me.
Good morning, Elliot. How are you?
I am well, my friend. There you are. All right. I'm going to let you take it right away, but just so everybody knows, Sky, S-K-Y-E, Bioscience, OTC, S-K-Y-E. All right. Thank you, my friend. I'll talk to you soon.
Perfect. Thanks, Elliot. And thanks to the whole Benzinga team. My name is Khiron Takar, VP of Corporate Development and Investor Relations at Sky Bioscience. And happy to have the opportunity to talk to you about the mission at Sky, which is unlocking the pharmaceutical potential of cannabinoids. I will be making some forward-looking statements during the course of this presentation. For the entire profile of the risks associated with our business, I do refer you to our annual filings with the SEC. So jumping into things, who is Sky? We're a biopharmaceutical company that is developing synthetic proprietary cannabinoid derivatives to treat disease with high unmet need. And what we think we offer to investors is a unique investment opportunity into the cannabis space that is different from a lot of the other companies that people are familiar with. So we're taking a purely pharmaceutical approach. We're not touching the plant, and we're working with novel derivatives. And this pharmaceutical approach really had some validation earlier this year as to the value for both patients and investors through the recently announced acquisition of GW Pharma by Jazz Pharmaceuticals for $7.2 billion. So GW has done a tremendous service for players like ourselves in the space of going through the rigorous steps of the regulatory pathway to get a cannabinoid approved for medical use in the US and in other jurisdictions as well. And so just a little bit more specifically on what our approach is and how we differentiate ourselves is that, once again, we're developing synthetic cannabinoid derivatives. So these are not cannabinoids that you would naturally find from the plant. Rather, what we've done is we've taken cannabinoids that are found in the plant and then modified them to enhance the therapeutic benefit. Our initial program that we're going to go after is glaucoma. It's a relatively large opportunity, nearly $7 billion. Once again, what makes the value proposition here unique is that we can actually apply intellectual property to our molecules because we're not working with naturally occurring cannabinoids. We've got a very experienced team. We recently onboarded a new group that started in the fall. This team has had an opportunity to work together in the past, all come from the life sciences and pharma space with decades of experience and moving preclinical products rapidly into the clinic. This is an exciting time as we've got multiple preclinical data points coming out in this coming quarter, and we are going to be initiating our first in human studies in Q3 of this year. So glaucoma, what is it? It's the leading cause of irreversible blindness worldwide, and it's a set of diseases that affect the optic nerve, and basically you get progressive damage to the cells that make up the optic nerve, which leads to irreversible blindness. So just to help depict this and what a patient might go through, if you look at the graphic here on the left, obviously is what normal healthy vision looks like. As you progress and you get damage to these cells, you start to get a tunnel-linked vision effect. And unfortunately, there are no other symptoms that patients really experience until they actually see effects to their vision. And once the vision is lost, there is no replacing that. It's permanent. So this is a large and growing segment. There's currently about 78 million patients diagnosed with glaucoma, and this is expected to grow to nearly 100 million patients by 2040. That makes up about a $7 billion market today, and is expected to grow to about $11 billion by 2027, given the aging population. So a little bit on the biology here. So a common trait for glaucoma is intraocular pressure, or an elevated intraocular pressure. And how that works is that in a normal healthy eye, you've got a constant production and drainage of fluid. And this is responsible for maintaining the health of the eye as well as the shape of the eye. What happens in patients with glaucoma is that you get a blockage of the drainage, but you're still getting production of the fluid. This allows the fluid to back up and increase pressure in the eye. That pressure then exerts a force on the cells that make up the optic nerve, causing a crush-like injury to those cells. Once those cells are injured or damaged, you start to lose your vision. So the current landscape, there's multiple different classes of drugs available as a topical medication. A lot of these drugs, all these drugs essentially all address IOP, and some of these are much more historical drugs that reduce IOP in the range of 20 to 25%. The main first-line therapy is prostaglandins. They reduce IOP in the neighborhood of 30 to 35%. And the issue is that most of the patients within this segment are what we call non-responders or poor responders, and will develop a tolerance over time. And ultimately what that means is that more than 50% of patients will be required to take 2 or more of these medications, which 1 causes issues with compliance, and 2 could also result in added side effects. So it looks what might be a crowded or fragmented market, but essentially the top 2 classes here make up 80% of the market. The rest in the middle there are historical drugs, and they're required because of this tolerance issue, and people will need to continue to switch drugs. And really there's been a lack of innovation in this space, and what this represents is an opportunity for a new class of therapies, either as a first-line therapy or even as a second-line therapy. So tying in the cannabinoids with glaucoma. So most people have heard of anecdotes of THC helping with glaucoma, or maybe some people using excuses for their cannabis because they have glaucoma. But what most people don't realize is there's actually a tremendous amount of science to support this. So throughout the body, we've got this endocannabinoid system made up of cannabinoid receptors and endocannabinoids, which are known to play vital roles throughout the body. What's interesting is that the eye actually has the largest density of cannabinoid receptors outside of the brain. And more specifically, those cannabinoid receptors are found on components of the eye that manage both fluid production and drainage, as well are found at the back of the eye where the cells that are responsible for vision reside. In vitro data has shown us that the specific interaction between THC and CB1 are involved with lowering of IOP. There's been clinical studies done going back to the 70s in humans. The first one's actually commissioned by the US government that has shown THC's ability to lower IOP. So we know THC works, and we know it works in humans. So this is just a table highlighting some of the studies that have been done historically by other groups that have all demonstrated THC's ability to lower IOP. However, all these studies used a systemic route of administration, and there's challenges around that. And so some of the challenges around systemic administration of cannabis or THC is that you require a relatively high dose to get a therapeutic effect into the eye when you're delivering it systemically. Additionally, you get variable pharmacokinetics and dynamics. When ingested, you have poor absorption, less than 10% actually gets into the bloodstream. And when you're smoking or inhaling it, you've got very limited duration. The half-life of THC is only around 90 minutes, which to require a steady state of therapeutic effect, you'd basically be needing to inhale every 2 hours, which would ultimately lead to some negative side effects. The most obvious is the psychoactive effect or the high from THC. Additionally, there could be detrimental drops to blood pressure that can have further negative effects on the cells that make up the optic nerve. So the obvious thing then is let's look for a local delivery. Why not just drop THC into the eye? Well, the issue with that is that when you extract THC, it's lipophilic or oily, and the surface of the eye is watery. And we all know water and oil don't mix. So that's where Sky comes in. What we've been able to do through rational drug design and using a synthetic bioengineering approach to come up with a prodrug of THC called THC VHS. And what we've done with this prodrug approach is we've added an additional molecular structure known as valine hemisuccinate that now modifies the characteristics of the molecule that allow it to be more soluble and better penetrate the ocular tissue. Once our molecule is in the eye, it is actually converted back to natural THC or the native structure of THC. And then the THC has the ability to perform its therapeutic functions. However, it's now delivered in a microdose locally into the eye. So we know THC works in humans through systemic delivery. We've developed a way to deliver that locally. We've now been able to test and demonstrate the ability of our molecule as a local delivery in a rabbit model. This is a well appreciated model within the glaucoma space. And we went head to head against the top two therapies in the market that make up over 80% of that $7 billion market. And what the results showed is that we not only lower IOP to a greater extent, but we also have stronger duration, the potential for once a day dosing, and most importantly, there was no detectable THC found outside of the eye. So basically, the THC is doing all the work in the eye, and it's not leaving the eye. That could pose any sort of systemic side effects. So we've got another interesting study coming up, another head-to-head with data next quarter, where we're going to go up against a newer entrant, Repressa, as well as latanoprost in combination, and that will further validate the commercial viability of our drug. A little bit on the mechanism. So the full mechanism isn't completely understood. However, we've done some experiments with a group called Glaucomics using a 3D ex vivo model of human trabecular meshwork cells. These are the cells that make up the drainage canals in the eye, and these are the ones that get clogged. And basically what this data showed is that THC can help reduce the inflammation and fibrosis that potentially leads to the clogging of these cells. And in this study, both in a healthy and diseased tissue, THC was able to increase the outflow of fluid. So we spent quite a bit of time there talking about elevated IOP, but another interesting aspect to our proposition is that there's a large segment of patients that do not present with elevated IOP. They actually represent a third of all glaucoma patients, who are predominantly found in Asian nations, and these patients still undergo neurodegeneration of the optic nerve, which the mechanisms are not properly understood completely. Why that's interesting is that cannabinoids have previously been demonstrated to be neuroprotective. So once again, here is a table summarizing multiple studies in multiple species that have demonstrated the effects of cannabinoids and THC specifically to promote the survival of optic nerve cells and prevent apoptosis, which is the death of the optic nerve cells. So we've got a study plan that we're kicking off in the coming weeks here with data available in Q2 that is going to show the ability, or hopefully demonstrate the ability of our molecule to provide neuroprotection in a well-recognized optic nerve crush model in rats. So just the other key pivotal moment for us is going to be our first human trials. Those are going to initiate in Q3. What's unique about this trial, and particularly this indication, that the trials are fairly quick and low cost. Our phase 1 is exciting for us and could be very pivotal, is that not only is it going to assess safety and tolerability, as most phase 1 studies are designed to do, is that we're also going to be looking at intraocular pressure. So with our study design, we're going to have predominantly healthy patients, but there will be a few cohorts of patients that also have elevated IOP. And so we're hoping to get some early indications on the potential effects of our drug on IOP. So we've got a lot of milestones coming up in a relatively condensed time frame, which we think could be pivotal in driving value for our company and for shareholders. So the head-to-head study that we mentioned, as well as the optic nerve study, these preclinical studies will further validate what we've and others have been able to show of the ability of THC to lower IOP and be neuroprotective. We've got our IND enabling studies kicking off in Q2, which will set us up for dosing our first patient in Q3 of 2021. Later in the year, we do have an additional pipeline of molecules. Our other molecule that's in the hopper is CBD VLHS. That's currently going through some pharmacology studies, but we hope to have a development plan for that coming up before the end of the year. And then into Q1 of next year, reporting over phase 1 data and a submission of the IND to the FDA.
Great. Khiron, do you want to hit a few questions real quick, or do you want to finish your slides?
Sure. I'll just finish off. I think this is a unique opportunity that is presented to investors. It's been validated with this unique acquisition that was done earlier this year. We know that THC works. There's just been an issue with the delivery. We've solved that. We also offer this potential for neuroprotection, could open up another multi-billion-dollar segment, and lots of milestones fast approaching. With that, I can take any questions if we've got some time.
Beautiful. All right, I have 2 questions, so if you keep these answers somewhat succinct, that'd be wonderful. From Mark Larson on the YouTube chat, what is Sky's synthetic process? Is it yeast or another compound?
It's completely chemically synthesized, so we're not doing biosynthesis. It's a chemical synthesis process.
Fabulous. That was a very succinct answer, Khiron. Well done. All right, from my good friend Jose from the platform, how do you get the original molecules, quote unquote, formative ones, THC and VHS? What are the sources of the APIs? And last but not least, is it a fine chemical reaction required to fuse the molecules?
Yeah, so I'm definitely not a medicinal chemist, so I can't get into the weeds, but it is a completely chemical process. So I know there's other platforms out there that are looking at biosynthesis. That is not the approach that we're currently taking. We work with CROs to develop our API and final formulation.
Fantastic. And I do want a very quick thought. What do you think of that GW and Jazz acquisition? Big news for you guys specifically in terms of the year ahead?
Yeah, I think we've got an exciting year ahead of us, and that kind of just teed things off for us to kind of put some wind behind our wings there. And I think it just shows what going through this regular FDA type of pathway can result in. And it also just shows how few players are out there. GW is really the only one that's led to this type of acquisition in the cannabis space, carte blanche. So we're excited about it. We're one of the few, and we think we still have some unique attributes of our approach that are different and maybe unique to even what GW was doing.
Fantastic. Khiron, very much appreciate you being here. Sky Bioscience, that is OTCSKYE, or skybioscience.com. You are also going to be presenting in a month at our biotech event. We'd love to hear some updates there. But otherwise, please schedule some meetings. Please reach out. Is there a website or email that they can reach out to you?
Yes. So the Director or Investor Relations, ir@skybioscience.com, our website, www.skybioscience.com. Reach out and be happy to address any further questions that we didn't get to today.
Great. Khiron, again, thank you so much, my friend. We will see you soon. And we'll I guess, have a great rest of your day.
Thanks, Elliot.
All right. Thank you, man. Awesome. So we have touched on an OG in cannabis. We've touched on one of the leaders in the U.S., and we just heard a biotech plus cannabis play. We're giving up to you all here today, y'all, but we do cover this on a daily basis. Benzinga.com/cannabis. You can get your daily news within the cannabis space, as we are the leading voice for financial media within the space. So please do follow us and read Javier and his team and Tony and their team's updates. All right, let's keep this moving for a panel I could not be more excited about. We are finally talking about the subject that everybody wants to talk about: consolidation and M&A. All right. With that, we have a good friend, Michael Aiello. You know him, you love him. He's been with us for several events now. Mike, how are you, sir?
Good. How are you, Elliot?
I am well. I'm pumped to hear some expertise on the upcoming topic, my friend. But with that, I'm going to let you take it away. Introduce yourself and your cohorts.
Yeah, absolutely. Thank you. So hi, everyone. My name is Mike Aiello, and I'm the CEO and managing partner of Century, where we focus on accounting advisory services for the cannabis industry. I'd like to welcome you here to our panel today, where we're going to focus on consolidation in the cannabis industry. And it's certainly been a busy few months, and it appears that the time for consolidation is here. It's my pleasure to introduce you to the panelists here today. First, I have Dave Trower, who is the Senior Managing Director of Golden Eagle Partners. I have Josh Lawler, who is a partner with Zuber Lawler. And I have Mike Lutz, who is a partner with Crow LLP. So guys, we do have limited time here today, but I think it'd be great if we could go around the room and you could give a brief introduction on yourself and your firm. And I guess let's start with Josh.
Thank you, Mike. It's Josh Lawler. I am a partner at Zuber Lawler, where I practice mergers and acquisitions, finance, commercial transactions, much of which is in the cannabis space. We are a 40 or so person law firm with offices in LA, New York, Chicago, Silicon Valley, Denver, Phoenix, and Austin. Denver and Phoenix being entirely cannabis-focused offices. And we like to think we are very much preeminent in the cannabis space.
Great, thank you. Dave, why don't you go next?
Thanks, Mike. Thanks, everybody, for taking some time to listen. I know everybody's busy these days. So I'm with Golden Eagle Partners. As Mike indicated, we're one of the first investment banks in the cannabis sector. I was lucky to have a background that fits kind of in today's discussion. 2 undergrad science degrees, worked 15 years in operational roles in biotech companies in Berlin, Boulder, and Silicon Valley, and then got into banking in 2005, doing biotech deals, and then got into cannabis doing in 2013. Joined CERN as chief business officer in 2014, one of the first pubcos. And then we've been doing deals in the cannabis space since, 20 deals, over 20 deals. And then certainly I failed to mention that one of the things that's interesting we can talk about today is innovation. I have 3 patents due in bioprocessing. I'm also the chair for the Scientific Advisory Council for Athletes for Care.
Great, thank you. And Mike, how about you?
Mike,
you.
My bad. You're right. Thank you. Trying to be polite there for everyone. No background noise. Mike Lux, partner with Crow LLP. We're a full service accounting and consulting firm. I'm located here in Denver. We're national, about 35 offices. We've been serving the cannabis and hemp community pretty much since its inception here in Colorado. Whenever you might circle a date on the calendar, we were pretty much there, and with the growth in the industry, we've taken steps to expand that geographically with our team and getting people really coast to coast up to speed on the cannabis industry. And we provide, I specifically provide due diligence, quality of earnings, and those type engagements. And we're working, providing all sorts of services to the cannabis space, be it audit, tax, advisory, what have you.
Great, thanks guys. All right, well, let's jump into it. I think a steady theme here today and lately is that there's been a lot of deals over the past few months, to say the least, and a certain high profile one comes to mind, with being GW Pharma. The previous guys were just talking about that as well. So let's start there. I guess, Dave, let's start with you. What are your thoughts on the GW Pharma deal, and what do you think the impact on the cannabis industry will be?
If you're on
Thanks,
mute.
Mike. So, thinking about it, it's interesting, especially too in the last week, we've had the Series Parallel deal too. So, with regards to GW Pharma, I'll get to that in a second, but I think it was interesting if you look at the comparison between the Parallel and the GW Pharma deal. Certainly the proximity is interesting within 1 month, and then if you look at the dollar value of both deals are very large for this sector. And then if you want, I think, look at some of the commonalities. I think one of the things that we drew, and I just wrote an article on this, will be published pretty soon. I think three of the common things really are the biotech or the expertise that both these deals involve or entail, the innovation or the IP component that they're looking at, and also the capital that's both needed in the combined entities. And I think that really gets to the fact that, so if you look at GW Pharma, the deal, I think, mainly was around IP. We believe the number of people think is around product and product portfolios and potential of future revenue. We mainly think it was about IP because if you look at current GW's portfolio, they have 16 US issued patents and 76 patent applications. So I think if you look at that as far as what's the GW Pharma company represents, it's really about, we believe, IP and some revenue, although it's not as large as many companies have, maybe even in the sector. So we think that really the fact, the IP and the size of IP, it's limited as far as its relevance to ongoing M&A deals in the space. But I'm sure my panelists may disagree.
Yeah. Josh, how about you? What are your thoughts on the GW Pharma deal and some of the items Dave just mentioned?
Sure. Well, I agree wholeheartedly with the comment that it's about IP. If you really look at what Jazz is saying about the transaction, there's a lot of emphasis on purchasing the drug discovery platform within the cannabis space. And I have been unaware of the number of patents that they have, which is a very interesting statistic. But if you look at the deal and how it's valued, and you value it based on earnings, revenue, it's a really rich deal. But if you look at exactly what David was saying in terms of what's in the pipeline, it makes a lot of sense. Now, in terms of what it means for the rest of the industry, cannabis is a funny industry because, if you look at, GW Pharma, that's a pharma play. It's not a CPG play. It's, not a supplement play. It's pure, pharma. And from that perspective, I think it says something about the types of companies that, are going to be looked at in that light, which interestingly enough, I think there's more of them in the psychedelic space maturing than there are in the cannabis space. I think there's an entirely different set of M&A going on in the rec market, in the CPG market. And, Red, White, and Bloom this morning announced that it purchased, Florida operations from Acreage. And that's a fairly large deal. It's not the size of GW Pharma, but it's a fairly large deal. And I think we're going to see more of those types of things, particularly as we get closer and closer to, the end of federal prohibition. At least we think we're getting closer, because that's going to be something of a once in a lifetime type of event.
Got it. Yeah, good insights, guys. And I think you both just touched on it. So let's stay on this topic a little bit further. And Dave, I'm going to go back to you here. Do you think this is a signal that big pharma is coming, that we have a next wave coming there, or not so much, not so fast?
I think everybody that's listening to this and every one of my fellow panelists hope that it is. So more money comes in. Not so sure, but we do know of one of our hemp companies we know. And that's one thing I think is important too, at least from what we see it, there's a difference between what we're seeing in the marijuana and the hemp as far as transactions go. But I think we do know one well-known multinational pharma company that's been kicking the tires on hemp companies, and they're talking to one of our clients. Don't know if there will be a deal done there. We have been in touch through my biotech background and experience, talking to a number of the C-suite executives in large pharma companies. And it was interesting because a lot of their comment is that they're looking for two main things: intellectual property and composition of matter patents. Three things, I guess you want to put that. And then also good, robust clinical or preclinical data. And from their perspective, that's still lacking, which I think it gets back to the GW Pharma deal and the fact that the clinical data they have and some of the leading the charge there. But then also the fact that I think a lot of the companies that they're looking at to do deals with don't really have the capital. For example, if you look at the Parallel deal, they did a pipe concurrent with that deal for $225 million, in addition to around the $200 million they had in the SPAC. So I think that they did that for a reason, we believe, is the fact that R&D is expensive. And so that's the problem we think in the sector too, is that there's not a lot of people that have those companies that have those deep pockets to do that R&D. But I'll finish there.
Got it. And Josh, I know you were starting to touch on this already here too, but maybe if you could expand a little bit, and what's your thoughts? Do we have a big pharma wave coming? A couple of years away? What are you thinking?
Oh, I think it's probably a couple of years away. Really, I think we're at the very, very leading edge for one of the reasons that David said, which is there's just not the clinical data, and in a lot of cases, there's not the money to develop the clinical data. I think companies that are building discovery platforms, and that's the IP, in addition to whatever drugs and molecules they may be looking for through that platform, are going to be at an advantage. And I think that you'll see that going more and more. And same story as every other industry. Patents creating barrier to entry. It's always going to be valuable.
Got it. Mike, how about you? Any thoughts on big pharma and some of the stuff we're seeing here?
Yeah, I think my thoughts would probably be the result of an anecdotal information, but talking specifically to our clients and talking with our partners who serve this industry a lot, just not anywhere near M&A, right? Just in general. And I think the feedback we have received recently is very similar to what Josh and David just said. In that it's there. Pharma companies didn't just wake up in the last couple months and figure out, oh, this cannabis and hemp thing could be interesting. They've been looking at it for a long time. And the IP is a huge component, I think, of these recent deals. The flip side is the reason why we would say that what we're hearing, what Josh and David just said is echoed from our clients, is it almost gets pretty simple in that as long as cannabis is still Schedule 1 and federally illegal, and there's no way to access the banking, it's difficult to see like the wave, so to use that term, coming, right? But that doesn't mean that they're not they're not interested, they're not involved. I mean, they are without question. But this right now seems more like a dipping the toe in the water sort of thing, which I think, going after pipeline of research, IP, things like that, that probably fits that description, as opposed to saying that, pharma wants to be the next big consolidator of MSOs, for example. That's just, that's not happening, obviously. So.
And Mike, if I can add to that real quick. One of the things my experience in biotech was interesting is that, and there's a reason why Jazz did this deal and pharma didn't, because at least from our perspective, pharma's always had the attitude that if they have a phase 1 or phase 2 asset, that's pretty risky, and they'd rather have it go to phase 3 or the market. So they'd rather pay more money later and de-risk it than take on a risky project and get a better deal on it. And I think, you can draw that parallel in certainly the cannabis sector.
Yeah, for sure. Great insights, guys. I guess just moving away from pharma here for a moment anyway, certainly been a lot of deals here, and everyone's seeing 2021 be a year for big deals. Josh, I'll go to you. Do you think 2021 is going to be a huge year for M&A in the cannabis sector?
Yeah, I think we're going to have a lot of transactions. I don't think they're necessarily going to be pharma oriented, but I think in the CPG, in the MSO space, there's likely to be a lot. I think there's a lot internationally that's going to take place, and we're starting to see that, in our practice, where certain other countries and areas are opening up for licenses, and there are American MSOs that want to put their feet down in the EU, for instance. That's leading to a lot of transactions. Just generally, it's still a very nascent industry. And because of the federal prohibition, as Mike was saying about the banking, and certainly, international shipments and cross-border logistics, there's just a lot of stuff that people can pick up, different little pieces of companies that are going to be useful to them. And they're not going to be the giant pharma deals. It's not necessarily going to be, Jazz and GW. But, if you're looking at kind of the middle market space, I think we're looking at just a ton of activity.
Yeah, definitely agree. Dave, why don't we go back to you here? What are your thoughts on this? Do you think it's going to be a big year for M&A, just at all?
Well, I think it's interesting when you talk about, big year, you're talking about deal size or deal numbers. I think the deal size or the dollar values, certainly it's going to be hard pressed to beat the 2 deals we just mentioned or talked about. And the numbers, I think, certainly will be better than last year. Breaking again to between, I think the hemp deals are going to be more prevalent, frankly, than the marijuana deals, just because it's going to be, I think, predicated on the lack or less availability of capital in the hemp sector. There's going to be a lot more consolidation, we believe. But certainly, Josh has a good point on the MSOs. I think they're going to go shopping. They have new coffers. But I think what's interesting too, internationally, I think the MSOs are going to be more focused at home to build what they have a limited, finite amount of time to build, their infrastructure for what everybody sees as a loosening. And I think that's going to give an opportunity for the LPs out of Canada, frankly, to go shopping and get some great value internationally, because I frankly don't think the MSOs are going to be as focused internationally, but I'll leave it there.
Mike, how about you? You think we're in for a big year M&A wise, and maybe to kind of piggyback on the guys here, just maybe volume wise, not as much, dollars, because we're seeing the dollars there, but do you think we're going to see a lot of activity?
Well, yeah, I was going to say that's where I think it's going to be, is the activity. It is hard to duplicate a deal like the one we've all been talking about. Whereas I think when you look at the fact that there is quite a bit of capital available, I think Viridian put out a study that said that there's about $1 billion of announced deals that haven't closed. I think that recently came out at the end of January. There's a lot of stuff got announced right after the election. I don't know if that was pent up demand because of the election, probably a little bit there, but it feels like there is consolidation. It feels like there are a lot of still smallish, or, you know, to use a term that we're all familiar with, middle market type transactions to be had in the cannabis space. And what it starts to look and smell like is actually companies looking at transactions, like we said, getting into multi-state operators going elsewhere geographically, as opposed to maybe the land grab of what was going on maybe say 2-ish, 3-ish years ago, when everybody was just rushing for rushing for deals because they had a crazy amount of capital. They had inflated stock price, and I'll use inflated in air quotes, right? We don't want to offend anybody and say, well, your stock price was or was not inflated. But let's be honest, when you have shares that are trading pretty well, you can do a lot of deals, and it's not just cannabis. We see it all the time. So I think now you are going to see a lot of activity this year, and it's probably going to be more strategic. And then I think the last thing, since I'm sitting in an accounting firm, I have to say it, is that take away cannabis. If they change the capital gains laws this year, which a lot of, for next year, which a lot of people think that's on this administration's radar screen, that's going to fuel a ton of M&A, just like it did when that happened. I think it was about 8 years ago. It was either 12 or 13. I can't remember which, where everybody knew it was changing, and anybody that wanted to get a deal done to get the lower capital gains, was getting the idea around November 1st. Hey, if I close before the end of the year, let's get this done. So you could even have factors like that aren't cannabis specific, I think, that are really going to drive a lot of activity this year. At least that's what we're expecting, and that's kind of what the early first 2 months of the year information is kind of indicating.
The other thing I'll throw out real fast is we can't ignore the SPAC factor. There are a number of SPACs, more than there should be, quite honestly, that are going to be looking to figure out how to use their money before their time runs out. And that's going to lead to a lot of transactions. It's going to lead, frankly, to a lot of transactions that are overvalued for what they are. I think it's also likely to lead to a lot of roll-ups in the space for different companies that are looking to be purchased by a SPAC that don't have the size yet to make that a legitimate possibility.
Yeah, and one last thing to add to that too, and I know, Mike, that this is an M&A panel, but I think one thing that's really been lacking in this sector, like when I joined Cerna, we did, I think, the first option-based deal in the sector. And there's always been, I believe, too much of an emphasis on M&A. And so if you look like a normal sector like biotech, predominantly most of the deals done are like partnering, or what we call incremental deals, so that are co-development, cross-licensing, joint venture, et cetera, not M&A. And if you look at cannabis, it's been the flip of that. So I think in the next 2 years, I think we're going to see a lot more smarter deals being done, especially ones that are not M&A, or they're like incremental M&A where it's an option-based arrangement.
A lot of great insights, guys. Let's keep moving along here, and you guys, it's perfect. You touched on some of these already here, but let's think about subsectors. Is there certain subsectors or geographic locations that you think we're going to see more consolidation than in another area? And I guess, Dave, let's go back to you. Let's start with you there. Is there certain subsectors or geographic locations that are going to be hottest?
Yeah, well, hopefully everything's hot, right? Well, we were talking this a little before, and and I'd love to have the panelists, my panelists, weigh in and maybe a different perspective. Our thought is that the limited license states, maybe not as much. We see California and Colorado, the very fragmented markets, doing more consolidation. We certainly see that here, and the opportunities, because it's just not very top heavy with these markets. So we certainly see that happening. Again, we see international. We've talked to a number of the groups we know internationally, both Europe, South America, and South Africa, see consolidation continuing because, there's a lot of froth with, groups like Canopy Growth buying into international operations and divesting. So I think that's going to provide an opportunity. But I think most importantly, I think like the ancillary pick and shovels part of this industry is really going to pick up in the next year to 2 years, because that's going to allow a quicker and easier entree for some of these people now that have a renewed interest due to the, kind of changing the guard in Washington. And that's an easier lift, if you will, to, invest in an M&A transaction, one of these ancillary companies.
Got it. Mike, what do you think? Yeah, you seeing any subsectors or geographic locations that you think are going to be hottest?
We are. When we hear from our clients, we hear a lot of discussion and excitement about the geographic expansion for the MSOs, and not just because of what happened in the national election, but I think anybody who's on this is aware that there are a lot of states that had some pretty eventful election results in November. It wasn't like it was one or two. I think I think we had 4 or 5 that went recreational, which most of those I think we saw coming. Mississippi, I think, was the one that went legal medical, and so there's still plenty of room for. I should say, when we hear our clients say there's plenty of room for growth, not to say they're not excited about possibly an international opportunity or something like that, but whereas 2-3 years ago everybody wanted to hear how we could help them if they pursued a listing in Canada, right? Some clients did that, some didn't. Now, I don't want to say they're not interested in that, but they're not really focused on that. They're focused on what can we do to actually drive value. If you think just in a traditional M&A construct, and that is, either more vertical integration or expanding into different states. And then I think the last thing that I think continues to feed that thought, at least what we hear from our clients, is that in addition to all the election wins that the cannabis industry had, use that term, there's information out there publicly available that said that anywhere from 10 to 15 states had some pretty good momentum for cannabis and hemp initiatives that just got stalled in 2020 for a host of reasons, but mostly COVID specific, because COVID just took over every state legislature's focus, and for obvious reasons. So that stuff, that's not going away. It's not like it missed out because there was a lack of initiative or anything like that. So with what we just had in the election and these 10 to 15 more states that continue to just seem to make that progression, that's where we see it. We see MSOs expanding geographically, I think the one in New Jersey is the biggest one. There's no way those states are going to sit around and watch New Jersey collect all that tax revenue. Just like when New Jersey went legal sports betting, those states aren't going to sit around and let New Jersey just collect it all, right? So that's where we would say, at least that's where we're prepared to help our clients. We're expecting that'll be the majority of things that we get calls for is MSOs looking to expand.
I would agree with that. I mean, the geographical footprint expansion is, I think, the most obvious and kind of biggest fastball pitch. It's where a lot of the companies, again, middle market-ish, but are still looking to just pick off the different areas that let them expand more easily. The other spot I would say, which is maybe a little bit less obvious to pick and choose, but the CPG space with the brands trying to come up with a consistent selling product that they can first of all create a consistent product in disparate states, which is a challenge right now because you can't take cannabis across state lines. But the other piece also is kind of coalescing behind various celebrity endorsements and things of that nature. And we've seen a lot of value to a company that has a particular celebrity endorsing the product because it's instantaneous market recognition. So we think that those deals are going to continue to go as well.
Okay. It keeps hearing like we see a trend towards the mid-market and a lot of other transactions outside of these mega deals. So Mike, I have a question for you. Seeing all these big deals, but all these other smaller deals as well, or mid-sized deals, I guess I'll say, what would you recommend to companies that are thinking about getting into M&A or have that on their radar for the year of 2021.
Sure. You can say small deals. I've been doing this for 25 years, and all deals need an advisor, right? What should they be thinking about? I mean, look, this is coming from an advisor, so maybe you have to chuckle and take it with a grain of salt, but don't wait to get your advisors involved, really. And I see Josh nodding. I'm sure Josh and I could probably, and you, Mike, could probably tell plenty of stories of a client who called us and said, or a prospective client, we got an LOI, we don't know what to do. Somebody approached us, what should we do? We don't have an audit, and we're not sure about our tax and all that good stuff. Well, sorry guys, we can try and help, but the train's kind of left the station at that point, right? So, and I would echo what we said earlier about just the broader market being pretty busy. And I apologize if you can hear in the background, we got a snow day in Colorado, which is pretty hectic. So there might be a little background noise. Nevertheless, the M&A market is frothy, cannabis aside. And a lot of us that have been doing this for a long time do think that this year is going to be pretty crazy because we think there's going to be some stuff related to tax. So don't wait. Really don't wait. If you think you are going to be a target, get ahead of it now. If you were thinking about doing audits, pull the trigger. Don't wait. It's February 25th. I'm not an audit partner, but I'm a licensed CPA. I can tell you it's probably not impossible to try and go back and get some sort of rollback inventory observation for that December 31st date. But I tell you right now, if you wait until June, it's not happening, right? So tax, if you've been rolling along with your 280E and everything and your tax filings, and you think, you know what, we're okay, we've never been audited, okay, great, but I'm not sure that, I'm ready to hold up to due diligence. Well, don't wait until somebody calls you. Get out ahead of it. And then the flip side is, look, I mean, if you're acquisitive and you've got some professional or institutional money in your capital structure that might expect more traditional services, like calling people like David and Josh and me, whereas 2 years ago you did an acquisition where you bought 2 dispensaries and you bootstrapped it and you did it on your own, and everything was great. Your new capital providers are probably going to be asking you questions like, well, who'd you get for third-party due diligence? Who looked at this stuff? Who's advising you on the purchase agreement? How do we know that this target's tax filings aren't going to blow up on us 6 months after the acquisition when we bought all the shares, obviously, because most of these are going to be share transactions, probably all of them. Don't wait. Get your advisor team lined up, ready to go, establish those relationships, and be ready to go. Don't make it an 11th hour fire drill, because threats are never good, but you might be able to get the service provider. You might pay those doctor on call rates as a result of calling someone on Thursday and saying, I need you by Monday. But there's a lot of factors that come into play. And just like in anything, if you have good planning and you have a good game plan and you don't wait till the last minute, you'll probably be able to execute on that. And if you don't, weird things might happen. So I would just say, just get out ahead of it. There's no reason not to, and it'll end up working well for everybody, I think.
Yeah, Josh, how about you? What should they be doing now to prepare?
I'm never going to argue against getting your service providers in place early. That's for certain. But there is an emphasis on it. I mean, I can tell you, we've already this year seen a few deals where we think we're doing a debt transaction or sale leaseback secured by real property or what have you, and suddenly the borrower comes up and says, "Hey, we just received an offer to buy the company, so put everything on hold, pencils down." Which is kind of an anecdotal way to say that people really will show up on your doorstep. If you're sitting there with between 5 and 20 dispensary locations, people know about you. There's no question. Like you're like, if you think you're in a vacuum, you're totally kidding yourself. And at that point, what Mike said is absolutely right. Having your things in line to, one, just make sure you've eliminated any of the deal killers, which, tax is kind of one of the number one items there. And two, that you are optimized really for a transaction that can go smoothly, because some of the transactions do generate outsized professional fees because there's just so much stuff to fix, or a crazy cap table is pretty common. If you are a company that's got a crazy cap table and you know who you are, you've got a lot of safes, for instance, which have a lot of different funny valuation types of things of that nature. And these are smaller companies that have those, but it's worth restructuring to fix all that. If times are kind of a little bit quiet for you. So that definitely is significant advice. The other one I'd put out in there is, if you're looking to sell, definitely get an advisor to help you out with it. The valuations in the market have a lot of variance depending on who you're asking and how things are positioned. So even more so than some other industries, a good financial advisor, along with a good lawyer, of course, but a good financial advisor is really pretty critical.
Yeah, thanks, Josh. And
you had to really just I'll speak really quickly on operationally. Just a few things. And for example, you always know the Gretzky quote, skate to where the puck's going to be, right? So having advised a lot of, and this is to companies who want to get acquired, right, that are out there. I mean, certainly one thing that we always say is uniqueness breeds value, right? So, and that's one of the key things we do as a banker is, certainly differentiate our clients. And that's one of the key things. The other thing, having worked in Silicon Valley, is focus. And that's been endemic, or lack thereof, endemic in this industry, whether it's marijuana, hemp, now psychedelics, which we know some about. You need to just, like Jack Welch said, find a couple of things you're really good at and do them well. And that's just been a real problem. And the other last thing too is like consistent quality and competitive advantage. That's one of the things too that we've talked about. Like, let's get to talk about the brands, right? We talked about innovation, everything else. I mean, everybody knows on this conference that brands are built on consistent quality. And so if you can do that, and again, that's been lacking in this industry. So if you can really, as I said with Gretzky, shoot for that and get to those points, or have those as targets, that's a good thing. And the one last thing is humility. There's been way too much arrogance and too little humility in this industry. And so if you really do want to get acquired, take a lot of those things together, put them in a plan. And that's, I think, that one of the better ways to get where you want to be.
Thanks, guys. Getting a note here that we have about 2 minutes left. So just go around the room here. Where can people find more about your company, your firm? David, why don't you go, and then we'll just quickly pass it around.
Yeah, goldeneaglepartners.com. Also, if you're interested, you can Google a weed grows in Davos, or as I mentioned just now, humility in cannabis. And you can pull up some of the mentions we've had in the press. Thanks, everybody, for your time.
Josh?
Yes, we are available at zuberlawler.com. Our consulting arm, you can check out at globalgo.consulting. You can also find us as the law firm of the year in Marijuana Ventures magazine, and any number of other places if you just Google on the net.
And Mike, how about you?
Sure. Yeah, we are at crow.com, CROWE, pretty easy. I am told with very good authority that we are going to have cannabis and hemp on our website under the industries within about the next month to 6 weeks. And that's been several years coming. So we are very, very excited about that, though we've been working in this space for 7, 8, 9 years, however long it may be. You can find, I'm on the website there somewhere. My bio is there, and I'm on LinkedIn as well.
Great. Thanks, everybody. Once again, my name is Mike Aiello, and I'm with Century. You can find more out about us at centuryconsulting.com. And maybe back over to you, Elliot.
Yes, thank you all. The leaders of, I would say, the consolidation discussion, Josh, David, Mike, and Michael. Always a pleasure to have you all with us, and we look forward to continuing this discussion, maybe getting an update later in the year. So, gents, thanks so much, and we'll talk to you all very soon.
Thank you, Elliot.
Thanks.
Thank you, Michael.
Take care.
All right. That was fantastic. Tons of information there. Gentlemen, if you can hear this, there are some questions in the chat that you and your team can address, but I wanted to let you all continue that conversation. As we continue to move forward, some interesting conversations. Please know there are 2 tracks. If you are on the platform, you can network. Again, please drop your questions specifically for the investor presentations, but if I'm able to ask questions to the moderators, I will for sure. All right, let's keep it moving. We have an interesting discussion, I think, to follow up on consolidation around debt financing. Bringing on Ron Kolb. He is the founder of Sensei Magazine. Ron, once you get your video and camera on for me, we will get this started, my friend. How are you?
Doing well, Elliot. Good to see you. How are you?
I am well. I'm well. Thank you very much. We just come off the heels of a very interesting discussion, very poignant, very critical, I think, for 2021. And as we move into your discussion about debt financing, I will let you introduce Judy. But very interested to hear what you all have to say here.
It's a pleasure to introduce Judy Rinkus from Seed to Sale Funding. And we've had a couple opportunities to interact ahead of today. And I'm really looking forward to this conversation, Judy. And I'm thinking maybe if you could start us off with a little background on Seed to Sale Funding and maybe a little bit about your model and approach. That'd be an awesome place to start.
Absolutely. Sorry about joining from audio there a little late. I'm a little Zoom challenged at times. So the name of my firm is Seed to Sale Funding. We are headquartered in Michigan, though we do transactions throughout the United States. The background on me is up until several years ago, I was a commercial banker at recognizable names, regulated banks such as Bank of America and PNC. Left that industry and really came into this industry via former banking clients who were connecting with me and saying that they wanted to invest in what was then Michigan's brand new recreational industry and couldn't find debt capital. And so through a number of connections, I now have around 20 different sources of debt capital. And I've also built, I have 4 team members. All of them are commercial lenders by background as well. So we lend a lot of knowledge to this space. We bring a couple of things to the market that are relatively unique. First of all, we're the only firm that I know of, at least in the Midwest, that concentrates completely on debt capital only for cannabis. So that means we have a large and growing by leaps and bounds knowledge of the industry. We also, since we employ former commercial bankers, we speak lender is what I say. So we're able to and certainly great kudos to all the wonderful investment bankers out there that concentrate on the equity side of things, but debt capital can be somewhat different. Terminology is different. There's a much larger emphasis on collateral. So even with some of working jointly with some of those advisors, we are able to add a lot of value in terms of getting debt deals done. So we started this 2 years ago. We've closed around $45 million in transactions. We're very proud of that. We have a nice pipeline going into this year. And that's kind of the Cliff Notes version. So very busy, but very happy.
What an amazing business you've built, and what a blessing for the industry that's looking to go in that direction, to have a focused team with the background and experience that your collective group is bringing to the table. That's great. The next thing in thinking about the debt market, can you share a little bit, maybe take a few minutes and talk about what's evolved over the last year, right? How has the debt market been impacted?
Well, I in preparing for this, I got to thinking it's actually changed so much since we did our first deals in, I believe, May of 19. And since then, we've certainly added to our network of lenders. We have the types of transactions we're working on are very different, and the stance is very different. So if you think of towards the end of 2019, that was when some of the first wave of publicly held companies were starting to have issues. The capital markets in general were tightening up very much leading into COVID, and then certainly COVID was a complete pause until the election of late last year, and now everything's freed up again. So during that whole earlier period, many of our clients were using debt as let's call it a substitute for equity. It's probably not the best use of equity, or debt rather, but certainly that's what they were doing. I think we're starting to see what's happening now is some of these, I call them MSOs in the making, okay, middle market size firms, and somewhat more established firms as well are moving forward. And now that they actually have a bit of cash flow under their belts, they are, and they are able to capture equity financing a little bit more easily. They're starting to use debt financing the way it really should be used, which is as a supplement to the capital structure, filling out your capital stack with debt. Being prudent with it. It's your ROI on any deal is of course going to increase with the prudent use of leverage, and that's what we're starting to see people coming forward with. So we're getting very much more involved in not only we started out doing what might be termed hard money loans. We're still doing those, but we're starting to get much more involved in deals that are levering a combination of collateral and cash flow. So it's rapidly evolving. It's very interesting. And I would say that anybody who maybe poo-pooed debt in the past, primarily because of structural concerns or whatever, should probably rethink that, because I think there could be some good opportunities for you and your shareholders to really maximize your returns.
Yeah, so interesting. I could see as the markets dried up, folks looking to that as an only option, right? When equity financing was not happening last year.
Right.
It sounds to me like you're seeing some maturation of the space and industry, right? We're growing up a little bit.
Absolutely. Sure. Yeah. Yep. Very interesting to observe.
Yeah. You've had a front row seat, I bet. That's exciting.
Yeah.
We have you spoke of the election, and you talked a little bit about how post-election things freed up a little bit. I really think in November around the country, the wins that cannabis received were pretty significant. How do you see with this new administration and how things look promising, how do you see that affecting markets as things change? Banks start to kind of get involved in the equation because you and your team come really from that world. So I feel like the perspective you have around how that's going to affect things in the future would be really interesting to dig into a little.
Sure. So as you can imagine, I do have some relatively strong opinions about this. And I'd also like to say that, with the banking background that we have, I've certainly been a long time observer of bank compliance, bank politics, bank bureaucracy. So this is going to play into this quite a bit. So big picture, I do believe that we're going to get a substantial loosening, maybe decriminalization, certainly some changes to the banking laws by the end of the year. Mike Lux in one of the last presentations mentioned changes in the capital gains law. I think that federal tax regulations, I believe that that's going to change, and that could impact deal flow in general, and especially with debt deals, because they're generally at least partly secured by real estate assets, which are what would be in play if real estate starts to get bought and sold. So I do believe there's going to be some changes along those lines. But for those people who are thinking that as soon as that changes, the local branch of maybe a larger bank is going to all of a sudden welcome with open arms lending loan transactions. I think we're quite a far way off from that happening for lots of reasons. Just because the industry is allowed to do, the bank is allowed to do cannabis loans doesn't mean it will. There are going to be shareholders, stockholders within the bank who are not, or might be still morally opposed to some degree, may not be, their investment committees may not be happy with that. There's going to be some, there will be still some, I believe, some regulatory fences that are put around the industry, and along with some other industries that are considered higher risk industries because of money laundering concerns. Just the fact that the industry is so darn new, and generally speaking, commercial banks like to deal with more established cash flowing entities. So I think it's going to take a little while for that to happen. The first entrance there will probably, I believe, continue to be the community bank. In Michigan, they would be the state regulated banks. Also credit unions, I think, will start to step forward, but most of those are going to be really small transactions. More sizable transactions, I think what we might end up seeing is not so much banks leaping in. They may do them on occasion for a good existing client that they already know well. But I believe what will happen is that there are a variety of non-bank lenders out there, BDCs, alternative loan funds. Some of those are publicly traded, some not. Equipment leasing companies, for example, for equipment loans, things like that. They are all private, they're non-banks, but oftentimes they're either partly funded by banks or there are other reasons why they haven't delved into the industry. I think what will happen is that you're going to see those entities entering the fray. And so I think we are going to get, I think, a bit more, and this is good for borrowers, a bit more competition. We're going to have, if I could have delivered, 2 term sheets to someone, maybe I can deliver 3 or 4, and I think it will start to rationalize pricing. Pricing in cannabis has, for loans and lots of other things, it's the cannabis premium, but for loans in particular have been well above what you would be able to get for a similar industry in say, the banking industry. That may start to moderate a little bit. So I do think it will stay a strongly oriented private lender market, but I think we're going to see there will be some changes by the end of the year. To the extent that the capital gains changes goes through, I think that's going to drive additional business. I think, whenever there are assets in motion, okay, that can be an opportunity for lots of people, including the ability to write loans against those assets.
So what amazing insight. I appreciate the perspective, and it gives companies like my own and many, I'm sure, that are considering what the next year to 2 years is going to look like, some really valuable perspective. Let me ask you, I know we only have a few minutes left. If folks are in the audience right now and after getting a chance to learn a little bit more about what you do in your firm, they want to be able to get a chance to connect to you to talk about some of your programs, what are the best ways for them to plug in, Judy?
Well, our website is seed2salefunding.com. There's a contact tab on it. Just complete that form. Those come directly to me. So that's probably the easiest. I'm also on LinkedIn. You can certainly connect through that. I'm happy to talk to anybody about potential opportunities and really anything in the industry. I find it quite fascinating as a recent, always a kind of a closet entrepreneur, and I'm finally getting to do it. And it's a once in a lifetime opportunity, really, to be part of a new industry. And all of us in the industry can really put our personal footprint on the industry going forward. So I'm always happy to talk about that.
Well, I got to say, Judy, it's been amazing getting a chance to chat. Even though we've been together for 15 minutes, I feel like I've learned a lot. And I've walked through some of these experiences over the last couple of years. And I think I'm speaking for many of the entrepreneurs in the space when I say thank you for the work you're doing and for the team you put together. It is needed, and I appreciate the conversation today. Elliot, I'll go ahead and turn it over to you.
Awesome conversation. Much needed update on debt financing. And Judy, always good to hear from you. Longtime friend and supporter of what we've been doing since we were in person, which feels like 20 years ago.
Absolutely.
Thank you all so much again for being here. Ron, sorry, I was combining the B at the end of your last name with your first name. So dyslexia apparently hitting at a late stage in life. And Judy, thank you all. We'll talk to you all soon. Please reach out to Judy and Ron if you have any questions. They are bombs. They know what they're talking about, and both of them have mucho experience in the space. All right. So yeah, of course, Judy. Thank you. So you heard from Josh Lawler about 20 minutes ago in the panel on consolidation from Zuber Lawler. They are one of the elite law firms in cannabis. So we want to give a chance to give them a shout out here with a quick commercial. So please tune in. And then right after that, on to Fire and Flower. Incredible company. See you in a second.
Hello, I'm Tom Zuber. I'm the managing partner of Zuber Lawler. I'd like to thank our friends at Benzinga for the opportunity to speak today. Zuber Lawler is one of the most selective law firms in the United States. Our attorneys represent clients around the world, from offices in Chicago, Los Angeles, Silicon Valley, and New York. We focus on high-stakes deals, intellectual property matters, FDA, import-export, and other regulatory work, and litigation. We work in languages covering 90% of the world's population. Zuber Lawler is unique in the sense that the firm represents a long list of iconic Fortune companies and global funds, and has also been representing leading cannabis companies for over 12 years. This provides our attorneys with an ideal perspective from which to manage high-stakes, complex matters in the cannabis space. Indeed, Zuber Lawler practices at the cutting edge of cannabis law. As examples, Zuber Lawler is a pioneer of the two-stage M&A deal, allowing continuity of cannabis operations in the context of U.S. restrictions on the transfer of ownership of cannabis licenses. Zuber Lawler obtained the second ever issued U.S. plant patent for a cannabis strain, as well as utility patents on cannabis processes, machines, and formulations. Zuber Lawler obtained federal trademark allowances for cannabis brands in relation to relevant products. One of our attorneys obtained the first ever issued generally recognized as safe designation from the FDA for hemp seeds and foods. And Zuber Lawler advises hemp companies on international import-export issues relating to North America, South America, Europe, and the Middle East. Zuber Lawler is currently managing major patent, trademark, trade secret, and commercial litigation in the cannabis space. I'm excited to participate in Benzinga's virtual Cannabis Capital Conference. I hope to meet you virtually and in person sometime soon. Thank you.
Tom is the man. If you all don't know Zuber Lawler, they have a ton of education and thought leadership out there on cannabis. Please do check them out, especially if you're an entrepreneur. You should know them. I do want to go ahead and bring Natan over. Team, if we can do that, I'd like to plug him for a second. We have an exciting chat here coming up with Fire and Flower, OTC FFLWF, TSX FAF. Pretty incredible company with a lot of room to grow here. Natan, though, can you, I see in the Zoom, can you open up your mic and video for me, my friend? There you are. How are you?
Hi there. What's up, Elliot?
Oh, not much, man. So believe it or not, thanks to the horridness of COVID, this is the first time I'm actually ever talking to Natan, but he is a vital part of what we do at Benzinga. And I specifically want to give you a quick shout out because you are quickly turning into, I think, one of the lead reporters when it comes to the psychedelic industry.
Thanks, man.
Yeah, of course. So quickly, I do want to say on day 2, remember, 2 days of this awesome content, we're going to have a good bit of, I think our track 1 will be focused on psychedelics. And Natan, I think you're going to come back and lead a panel. But can investors here find some more information on Benzinga's website? Where can they find some psychedelic news just to check out the space and maybe get a nice little feel for it?
We have news coming out almost every day about the psychedelics-based industry, which is a sector that is growing a lot and has really exploded since last year. And Yeah, we have a weekly column that's called Site, where we put out all the most important news of every week in the sector. And yeah, everyone just tune in tomorrow. We'll have a wonderful panel about how can cannabis investors use the tools that they already have for investing in cannabis and apply them to investing in psychedelics. We'll be speaking with Reed Robinson from Novamind, Dr. Joseph Tucker from Magic Med. We have Dr. Rakesh Shetley from Medicine, and Matt Stang, who's the CEO of Delic Corp. So tune in tomorrow.
We have a ton of information out there, both on our website and coming tomorrow, and more to come. Check out Cannabis Hour every week. We also talk to psychedelics companies there. Let's go ahead. And Trevor, I see you there as well. I'm going to let Natan introduce you, but very excited for this discussion, gentlemen.
Hey, Trevor. How are you, man?
Good. Thanks for having me.
Oh, yeah. How's everything going for you?
Good. Well, listen, I mean, COVID, I wouldn't wish this on anyone, but COVID's actually been very good to the cannabis retailers. So, I mean, you can't complain, certainly.
Yeah. And you've handled it really well. I mean, your digital platform is perfect for handling the pandemic, with delivery options. And tell us, most people, I guess, will be acquainted with your company, but maybe you can tell us a little bit about how you present the company. Last time we spoke, I think it was in July last year, and you guys had already opened 45 brick and mortar stores all across Canada. And how many are those now?
I think we're now at 79. So we're continuing to aggressively grow our footprint in Canada. And we've always sort of viewed our company as a next-gen retailer. So we took a tech-forward angle on it, realized that cannabis is going to be very competitive. As soon as there's money on the table, there's going to be competition. And so we built it, as you said, with that tech platform in mind. And since July, I think, we just dramatically increased our scope. The other thing we realized is as we do acquisitions, we can plug in our Hi-Fire platform to both the mom and pops and kind of other brands that we're bringing under our portfolio. And as you can see with the news this week, we're obviously excited because now we can start to expand into the U.S. market using that platform.
Yeah, exactly. And you put out two really significant pieces of news last week. One is an expansion to the US, and the other one is sort of a paradox if you're related to that one, because you're planning on uplisting into NASDAQ. So tell us how you're planning on expanding to the US and not breaking SEC regulations to be able to be with NASDAQ.
That's a great question. So for us, we thought some paths are going to be through a CSE listing in Canada, which will allow you to do some plant testing. We thought that, look, the right strategy for us is to continue to uplist and hit major markets and major capital machines like NASDAQ for access to investors. And our plan is to be a global company. Our plan is to be one of the top 3 global cannabis retailers. So to do that, I think you have to keep moving up the value chain and sophistication of investors and open yourself up to institutional capital at some point. But to do that, of course, you can't be plant touching. So what we realized was we have, I think, the early efforts for the Canadian licensed producers to get down in the US with access like Canopy and those other sort of companies. It was about trying to deploy capital there because there wasn't a lot of value at that point. It was a very early stage in the industry. What we're seeing now, though, is that we're about deploying value across the border into the US. So what we have is what we know is a very valuable platform now. We know it makes stores more profitable. It's a tremendous competitive advantage. And so by effectively licensing, royalty-free licensing to American Acres in exchange for the right to acquire them at a deep discount when we are able to, we're able to kind of can complete our NASDAQ listing, which is non-plant touching covenants, and have a growth engine in the US that effectively, because I get asked the question, I'm sure it's on your list, which is, well, what is this discount? What is the discount to FMV? How do I put it into my model? And of course, for us, we consider that competitive, sensitive information that we're not putting out there at this point. But I'd say, looking at it from American Acres perspective, what would you be willing to do in terms of giving up part of your upside to kind of be able to blend into a NASDAQ listed company when legal, in order to have competitive tools that will allow you to dominate your competitive market? So if you put yourself in American Acres perspective, what kind of discount would you offer? And everyone's answer is different, but it's significant because they'll be allowed to continue to expand in competitive markets like California, other places where vertical integration is not required. There's a lot of licenses, and they can be the aggregator. And yeah, of course, when we acquire them, we're going to have to pay something for them. But at that point, whatever that is, a year, 2 years, whenever we get down the road, which I think we can all acknowledge as an industry, this is a when, not an if thing. We're obviously very pleased with the U.S. Democratic sweep. So for us, it allows us early market entry, get our brand there, get our tech platform out there, basically partner with a competitive partner who can compete and aggregate for us while we do stick to our knitting up here and continue to develop our platform.
Cool. Okay, so let's just pause for a second because I realized that maybe someone in the audience has been living in Mars and they don't really know your company. So maybe you can give us an overview of what you're doing in Canada. And I once heard you describe Fire & Flower not as a cannabis retailer, but as a tech platform first. So how do you leverage this tech platform for your business model?
Yeah, okay, well, and it's probably worth mentioning too, so we are a tech-forward company. We started from the ground up just for that purpose. We realized that retail, legit normal retail, was competing with Amazon and these other sort of really apex predators, and it was troubling. Like retail in general is a very a tough sector to operate in, right? Yeah. And so we said, well, look, who's really competing with Amazon, and how are they doing this? And why don't we build a company to do that rather than Cannabis 1.0, which is like, I've got a license, I'm going to sell cannabis. People like cannabis, they'll come to my store. If I can do that a couple of times, maybe I can build a brand. Like to us, that's not a business plan. That's that's kind of a lifestyle opportunity, which can also be lucrative, but you can't scale that. So we took the time. Day one, our first acquisition was Hi-Fire, which is a tech company. So we've got 25 engineers that's all they do all day long is develop our integrated platform. And it does a number of different things. It does, we have Hi-Fire IQ, which is our data and analytics platform that captures all the data in our stores, but it allows us to work with our vendor partners. And I think that's important because tech-forward retail 2.0 companies view themselves as having retail customers, but also their product partners, their customers as well. So that's where it differentiates from Amazon. No vendor likes Amazon. If they could press a button and blow it up, they would do it. But we partner with them. We take the deep engagement we get from our digital platform with our customers, and we help them make better products for our customers. Because really, we're at the infancy of product development in cannabis. Like there's a lot of raw materials. There's a few brands emerging, but by and large, we can help be part of their R&D and innovation pipeline. And that's another revenue stream for us, which boys, again, that's how you compete when it gets really tough. And it will get really tough. So so we built Hi-Fire IQ. We built Hi-Fire Reach, which is another way. If you read, I'm going to say traditional retail publications, everyone talks about store as media. That's what hardcore retailers have to do. That's how they view themselves, and that's a capability we have built. So if you look at Kroger's, they just announced it. If you look at Target, all these companies have internal ad agent, their model is the store is a form of media for them. So
yeah, it improves the overall consumer experience in relation to online also. Yeah.
That's right, and we can use all these tools to manage things like store KPIs in terms of staffing grids. We have our licensed producers on kind of replenishment plans, a lot like Walmart. So it's just really making it a very efficient system. Then of course we have Spark Perks, which is our customer-facing customer engagement program. And that's extremely important because again, with cannabis, we found if you look at like loyalty programs, which are sort of points driven or, they're kind of couponing, that's to confuse what loyalty really is. That's transactional loyalty. Everyone wants a 5% discount on something. If I'm going to give you a free t-shirt, you'll give me your email, but it'll be your Hotmail email from like 20 years ago that as you're spamming. Right? So you have to deliver value to your customers with this engagement program. So things like click and collect, things like delivery systems, things like we had early in Canada, we had all those hiccups with production and product shortages. So we built our tech to respond to a customer need, which is, I don't want to come to your store if my brand's out. Like that's a waste of my time. So we built a notification system saying, hey, by the way, Jim, what you bought last week is in again. Would you like us to hold it for you? And we'll have fast lane. It's that Starbucks type operating model that people ultimately, I think, will gravitate towards. Once you've competed on price and product selection, then it's got to be about convenience. So that's our tech forward piece, but it's also a good segue into why Circle K and their parent company, Alimentation Couche-Tard, again, this is a $48 billion company, why they, and they talk to everyone, obviously. They can choose whatever partner they want. But ultimately, that's why they chose Fire Flower. It wasn't our pretty stores, and we believe we have pretty stores and great service, but it's this tech platform that a giant like that sees the innovation and the value of that approach. And certainly, if you look at kind of how we're working with them, we press release all this stuff in the town, but it's like people, there's too many press releases out there, right?
Yeah. Can you describe your partnership with Alimentation Couche-Tard? Yeah,
absolutely. Yeah. So I mean, they have a strategic investment in us, and they have a path to acquisition. So they have a path to get to 50.1% of our shares. Okay. They do this through increasing tranches, increasing valuations of warrants. And it's interesting because to your investing audience out there, I think because they hold it through a number co, I think people think, oh my goodness, there's predatory warrants out there. Like, oh my, what's going to happen? These are all Couche-Tard warrants. Those are the only warrants out there are our investment partner to get to, from 10%, 13% now, to get to 19.9, to get to 33, and then to get to 50.1. And at each of these junctures, they're putting growth capital into the company that is not, overly dilutive, that it's being priced in already. And as we kind of engage with the investment part of it, and what I like about it as a shareholder is, of course, they get to 50.1. So it's up to everyone to make their own decision on what happens. Does a giant company like that just stay at 50.1, or is that the time to hit the bid and get the whole thing? Understanding that, of course, it gives you a couple of years of optionality, and we can see how things go in the US and other markets and stuff. Or does it exist that at some point, when you've dumped in $300 million of capital, if you map out those warrants, does it become a different creature? Does it become, you can't deploy that much capital in retail over that time because we are already operating EBITDA positive at 79 stores. So you can see the math looks a lot more like a dividend stock, which I know is crazy for we don't talk about that in cannabis a lot, but if they just stayed at 50.1, that's a universe that we start to live in. Either way, as a shareholder, I'm very happy with both of those results, right? So they do that, but we also have been increasing our operational integration with them. So we broke out our latest deck that we put up there. We had to break it out because there's too much noise in the space, and it was hard to track progress with all the press releases. What we have done on that is said, look, you can see at a point in time, we did our deal with them. They've executed their warrants, cashed up the company. We've launched 2 co-located Fire and Flower stores, co-located with Circle K's. So that's, we have that. And now it's in Alberta, which I don't, I'd imagine US folks are not that concerned with Alberta, but those are co-located. And those are 600 square foot stores that utilize Circle K's existing real estate, right? So you can start to see how this works with a US, like how this is going to work. The other thing we've done is,
no, sorry. I know we don't have so much time, and I do want us to focus on your US expansion strategy. So basically, I imagine that your tech platform, you were already offering these services to US-based clients. So how is your expansion now different? Will these stores be branded as Fire and Flower? Can you describe which states? I understand that American Acres is already in California, Arizona, and Nevada. But you also mentioned something about Colorado, which is a very high competitive state. So want to go into that?
So absolutely, these stores will be Fire Flower branded. That's the whole point. We want a brand entry to the US with a clear 100% path to acquisition should we want to pull the trigger on that. So that's great. Fire Flower will start, we said, first half of 2021, so we're confident with that. We like any market that is competitive. So we're not, the US MSOs are fighting, the big guys are fighting over the limited license oligopoly states, which makes sense. Those are big prizes. But our operating model is about fighting where it's really competitive. Like Alberta has 1 store per 8,000 people, which is more competitive than Colorado. So what people don't know, your viewers might know, look, we've been competing in the, I like to call it the knife fight in the phone booth. We've been competing tooth and nail up in Canada, and now let's take that really good operating model and move it to the U.S. through American Acres. So we would absolutely look at Colorado. I think people should expect us to look at these tough markets, and if we can take we all know the facts on average mom and pops in California, and 4 million USD turnover, decent EBITDA numbers. These are cash flowing businesses that we can now start to indirectly aggregate and create a footprint with both our brand and our tech. That's a win for us.
Wow, that's amazing. Okay, and how are you planning on getting to Colorado if it's not through American Acres? Do you already have anything planned out?
Well, we're obviously in lots of different conversations, and American Acres is one part of our strategy, but I think people should think about the reason Couche-Tard or Circle K invested in us is they have a clear vision, which we agree with, that we will be in every global country where cannabis is legal. This is a $48 billion company with 16,000 stores in 25 countries, right? That's a big company.
Yeah.
So our shared vision is, look, the U.S. is a key market for us. Key markets in the U.S. include, California, Arizona, Nevada, Colorado, every market where it's legal will compete. It might be a question of time. So, for us, this was always a question of a U.S. forward strategy for us. We knew we would hone our craft in Canada, build our tech using low-cost Canadian dollars, make low-cost Canadian mistakes, and really get it down and button down. So when we go, it's intentional and very, very focused. So American Acres is one part of our strategy. You should expect that we've been in dialogue with Circle K since the beginning. So for over 2 years now on what our strategy is. This is certainly one part of it, but it's by no means the only part of this. This model is exportable to any market, frankly.
Are you looking at any other market? Can you disclose anything that seems tempting right now?
Well, I would say, your viewers should expect us to be in conversations in any market which is efficient. For us, that means markets where you can have direct relationships with producers of products, where you can have private retail, where you could have unfettered e-commerce and delivery access to consumer. Those 4 pillars. In Canada, we have it's a small market, Saskatchewan, but we've honed our market there. Markets that are less efficient offer less upside to us. So we're going to focus on markets that are efficient for us and stay away from the oligopoly markets, because the Godzilla and Mothra are going to be fighting over those ones, and we want to not get crushed underfoot. We want to build our strategy from our strengths. And we know that no US MSO, no matter how big they are, has a tech platform like we have. We know that.
Yeah. Well, you're really confident about your ability to face the competition.
Yeah.
So I understand that the terms of your partnership now with Americans are built in today's landscape. So what happens after legalization? That, as you say, is not a matter of if, so when. After federal legalization, of course.
Yeah. So this is designed as a grow with your partner and provide them the tools to aggressively grow kind of on our behalf in a market. As soon as it's federally, legal and we are able to directly deploy capital into that environment, I think it's a very different game. And I think you should expect that, again, looking at our partner, Circle K, we have a pretty good bead on all U.S. states, because there's 7,500 U.S. Circle K stores, right? So we'll enter the markets that that we can compete most effectively in, and we'll backfill into markets where we don't have a natural advantage, but we'll focus capital and our efforts on ones that, as I say, offer. We are not vertically integrated. We believe firmly that you should be best in the world at one thing, and for us, it's tech forward retail. If you look at Circle K doesn't do products. They don't build their own stuff. They're just a dedicated retail channel. And if you look at us, we're a dedicated retailer as well. So I would say, when we look at the U.S. opportunities, I think it's safe to say that, we're not going to be prioritizing vertically integrated states where you have to do direct plant touching and know how to grow. Right. That's not it. We want to partner with best in breed and be best in the world at what we can do. And then we'll partner with people who are best in what they do.
Amazing. So before Elliot kicks us out, just one last question. Can you estimate a time frame for your Nasdaq uplisting? Is there anything that you can?
It's really up to the Nasdaq how long they want to kick the tires. So it's really in the regulators' view. So we feel pretty confident though, because we are Toronto Stock Exchange main board, not venture exchange. We're the big board.
Yeah.
But we've got a lot of the infrastructure already done, and our accounting, is pretty top notch already. Because again, our partner Circle K demands that of us. So we're pretty confident it'll be sooner rather than later. But it wouldn't be prudent for me to talk about any regulator looking at us and what they might want to ask us and how long that might take.
What? No crystal ball? Come on, Trevor. You just predict the future for us so we can all make millions.
Yeah.
Oh, man. Well, Trevor, if you're not Godzilla or Mothra, I feel like you're King Kong coming out of nowhere, man. I wouldn't undersell Fire and Flower.
Baby Godzilla for now.
Yeah, you're just gonna. I feel like Fire and Flower's got a lot of news probably coming the next couple of years, if not soon.
Yeah.
Natan, Trevor, wonderful discussion. Great to update our audience, and I do hope we can do this again very soon. But Trevor, thank you so much for being here with us, my friend.
Thank you so much for having me.
Cool. Thanks.
Awesome. Fire and Flower, that is TSX FAF OTC FFLWF. They're an incredible company. Yeah, you really check them out. That NASDAQ uplisting makes me very excited. Obviously, no timeline on that currently, but do pay attention to Fire and Flower. They are well on their way to being a big player, if not considered one already. All right, let's keep it moving. I'm very excited for these next two presentations. You're going to get an in-peak look at Docklight Brands, and after that, Indus Holdings. I think two of the under-discussed, at least on a large-scale media level, but two very important players in their own markets. Docklight Brands CEO Damian Morano is here with us. Damian, there you are, my friend. How are you?
Good. Thanks for having me, Elliot.
Yeah, of course. I'm super pumped to hear all about Docklight and for you to tell our audience about it. You're an incredible company, so I'm going to let you take it away. Feel free to share your screen.
Yep. Let me do that. Hang on one second. All right.
Yes, sir. Take it away.
So good morning, everybody. Damian Morano, CEO of Docklight Brands, here to talk to you about our business and our main brand, which is Marley, and talk about Bob Marley and a cannabis legacy. So really excited to talk to you. Just wanted to kind of give you a disclaimer because we'll have some forward-looking statements. So who is Docklight Brands? So we are a cannabinoid brand holding company that's really looking to grow in the rapidly emerging cannabis and cannabinoid business. And we're really focused on building brands consumers crave, love, and trust to take advantage of the growth we see both in the CBD side and the minor cannabinoid side and in the THC side. And so we have a portfolio of brands, including Marley Natural, Good Chip, Arissa, Dutchie, and Headlight, that we're bringing to bear across the US and across the world with an asset-light business so we can kind of grow and scale as quickly as the opportunity presents itself. So we have a core mission, and our core mission is we seek to create or acquire valuable brands and products. We then market those brands, products, and IP to retailers. So imagine clients like 7-Eleven or Safeway, and as well as consumers. And then in order to scale and grow, especially on the psychoactive side, we really focus on licensing those brands, products, and IP into legal jurisdictions so we can gain share very quickly in the very competitive dispensary channel. So the way we see the world is a little bit interesting because we really focus on the active ingredient, which drives the strategy. And we see two distinct markets developing and continuing to develop quickly across the plant. And we see the THC market and we see the CBD market. The reason we look at kind of a stair step or uniform velocity of growth around THC is it's really predicated upon legalization, ballot initiatives, et cetera. And while the trend of growth seems to be accelerating, we see that you're still going to have markets come online at certain times based on their either state level or federal level regulatory programs. On the other side, when you look at the CBD market in the US, we see a big power curve where you can get in and activate increasingly large numbers of products from a topical perspective with CBD as an active, and you can activate consumable products at a state level across large swaths of stores. And so these two different opportunities present different growth rates for revenue for our company, which is fantastic. We've really focused on a few core product verticals. So on the cannabis side, we have cannabis accessories. We have a global partnership with Green Lane, and we are selling today Marley Natural accessories for cannabis consumption in over, I believe it's 35 countries today, with some broad expansion later on in 2021 into quite a few more countries. We also focus on selling and licensing our Marley brand across several countries today in several states from an inhalables perspective, as well as from an edibles perspective. On the CBD side, what you see us focus on is our three core product verticals around beverages, edibles, and topicals. And I'll talk to you a little bit more in detail about how we've scaled that fairly effectively here in the US and built a pretty large retail footprint over the past 18 months. So on the THC side, I thought it'd be great to just take a minute and show everybody in the audience what our product looks like on the shelf. Again, we are an asset-light, non-plant touching company, and we go and find partners in recreational legal jurisdictions and work with those partners to commercialize a full line of Marley Natural cannabis-related products. So you can see on the top some examples of our Marley Natural line, our Marley Natural Studio line, our Marley Natural Heritage line across flower and across pre-roll. You can see the activation and product we have with vape and hash, and then you can see some of our activation and product development around edibles, and then even moving now into beverages. What's interesting about our business is that we have a long-term global license with the Marley family for anything relating to Bob Marley in legal cannabis or legal cannabinoids. So while we are very happy with the way we've been proceeding with our inhalable and vape products in Canada, with our partners in Canada, we're really excited about what the opportunities of Cannabis 2.0 offers us and them to continue to grow the brand very strategically across new product introductions and certain new formats. On the CBD side, again, Docklight is a house of brands. Our lead brand that we've commercialized is Marley with CBD. And we have commercialized all the products you see on the top of your screen across over about 13,000 retail doors in the US. We've done that over the past 18 months. And we have been successful in selling beverages, wellness shots, confections, and skincare into a variety of large national chains, some of which I'll share with you today. The other brands that we have incubated and developed include Arissa, which is a female-focused wellness brand focused on the female CBD consumer, where we see a gap in the market to address that core demo, as well as a few other brands specific to some formats like beverages with Hearsay or Rami's Bloody Mary Jane, or Good Chip, which is a fantastic edibles brand that we've started to commercialize here in the US. So one interesting thing that we've really taken time to focus on as we've grown and scaled our CBD business here in the States is staying true to our asset-light network. We've spent quite a bit of time growing and scaling our distribution infrastructure. So in the United States today, there's over 450,000 traditional retail locations. And what we've been able to secure is distribution availability. So the ability to get our products on trucks that service over 300,000 of those retail locations. This helps us create this natural one-to-many network and allows us to move very, very quickly to get our products on shelves when our retail partners ask for it and where consumers seek to buy it. Correspondingly, we've also grown out a dedicated beverage distribution system through a network of direct store distribution providers. And today we have beverages on shelf in several thousand retail locations across 34 states in the United States. And we see great movement at the shelf of these Marley branded beverages. So we will continue to grow and scale our distribution network here in the US to continue to build our brand footprint, acquire new customers, and sell in net new products to those customers as we're able to. So I've shown you some of the products that we've developed. So I'll talk to you about some of the places where we're selling them. So today we have product on shelf in Circle K, 7-Eleven, Dollar General, and Safeway, to name a few of the major chains. Of these stores, we have an available store count of close to the entire system for each one of these clients. And what's interesting is we have distribution to 100% of the stores. Now, we're not in 100% of these stores today, but we plan to continue to grow and scale our availability within each one of these clients' stores that are open to us and available to be delivered to today. So I just wanted to take a minute to kind of give you an idea of the depth and breadth of Marley as a cannabis and cannabis related cannabinoid brand around the world. So just before I open up the line here for any questions, I wanted to take a minute to get everybody oriented in kind of the size and scope of Marley. So today, again, we have CBD products in 43 states across the United States, where we have 7 more states that we're getting into. We have Marley branded cannabis accessories in all 50 states. And we have Marley branded THC products in 1 state with a pipeline of 5 more. Today, we have Marley CBD products in 5 countries with a pipeline of expansion to 40 more countries. We have accessories, in 29 countries today with an expansion of 50 more countries in 2021. We have Marley branded THC products in 3 different legal sovereign jurisdictions, 3 different countries. And we are building out the first of our Marley branded retail stores with partners in 2 different jurisdictions in 2021. And just to give an idea again of where we're at and where we're going, you can see we have a very broad-based footprint in the US across several states and several countries on THC, a large ability to grow the Marley brand ahead of regulatory change, especially on the accessory side, because accessories are legal virtually everywhere. And then a pipeline to expand the brand into other legal country jurisdictions on cannabis, as well as on CBD. And then as regulations change, either here in the US or globally, you'll see us look to other markets pending regulatory change. For example, Mexico's one we're eagerly watching and waiting to see if they go full recreational legal in 2021. So I said quite a bit. I wanted to pause for a minute and see if there were any questions from the audience.
Hey, man, those numbers are ridiculous, Damien. Is there anybody that you know of off the top of your head that can tell me that they have the same breadth as you? I mean, maybe like Charlotte's Web, maybe?
Yeah, I think, look, I think there's a lot of great brands and there's a lot of great competitors. And that's why we really feel a lot of power of a brand as iconic as Bob Marley. I joined Docklight from the Coca-Cola company. So, when you look at a company that has a big global brand, and a lot of the folks on my team have a lot of beverage experience at, growth brands and large brands. So I think when you have a like an iconic brand like Marley, it's easy to scale it because you have instant awareness, but it's also really important that you do it thoughtfully. And so for us, yeah, I'm sure there's a lot of great brands. Charlotte's Web is a great brand, but I think it's just interesting when you look at kind of the context of Marley and what he represented. It becomes really, really powerful and really, really scalable fairly quickly.
I love that. Kind of going into your product portfolio a little bit from my end. What are the trends you're seeing? Obviously internationally, obviously you're in different markets with different products here. So we'll stick to California if that's helpful.
Sure.
Do you see product trends specifically perhaps with your beverage side? Is that really going to be a market that explodes this year?
Oh, that's a good question. So I would say this. I would say what's interesting is looking at, say, the two largest recreational legal markets where we operate for cannabis. They're kind of heavily flower. You see a lot of focus still, even in Canada and California, on price and potency. With our partner in Canada, we saw exceptional growth in the first year that we put Marley in the market. And this was from a typical inhalable perspective. I think that there is quite a bit of room to run for THC beverage and CBD beverage in Canada. I think California is going to be interesting just from a beverage perspective because it's a little bit harder to scale. Like I was enjoying the fire and flower conversation. Someone coming in and you being able to access kind of a larger chain sale may scale it quicker. I would say on the CBD side, across the multi-state platform where we have our beverages and across multiple classes of trade, that's probably one of our best velocity moving items out of that whole CBD product portfolio.
Interesting. I get you for a few more minutes. So I do have another question here. THC inhalables, right? So the vape industry, it's taken a few hits, I think we can say at the very least. It's still here. So maybe your thoughts on where the vape industry moves in 2021. Is it significant? Do you see heat not burn becoming a major player? Just any thoughts you have there.
Yeah, I think it kind of goes back to the quality of the input. So what was interesting is we were planning the Canadian market launch right on the heels of the vape issue here in the United States. And we were dealing quite a bit with our partner with Health Canada as they were looking, do you launch vape or not launch vape? And Marley Vape was a large part of our Canadian launch. And I think what was interesting is just the way the market was structured in Canada. We launched vape, this was at the end of 19 with very, very little issue, right? We had the full approval of Health Canada via our partner who's an LP up there. And you saw it really move. I would say in California, I think it's going to be interesting to see where it goes. But I still think the people who were making quality product pre-crisis never stopped making quality product. And you maybe saw, kind of a realization amongst consumers that, okay, I need to have a heightened awareness of reading labels, as well as understanding that it may be worth a slight price premium for a quality produced product versus a product of, say, a little bit more questionable origins.
Right. That's fair. That's very fair. We do actually have a question from BW in the YouTube chat. So looking at the option of legalization here, big conversation that we don't need to get into, but how do your products on maybe the THC side transition to those shelves of Dollar General, of 7-Eleven? Obviously, there's a lot.
That's a question for Fire and Flower, I guess. Yeah, so I think that assuming and not like, let's not just address the whole end of federal prohibition and what it looks like. I think that a Marley natural product, the pre-roll, would become a ideal product that if someone who is an interesting retailer, like what Fire and Flower and Circle K could be, I could see that in an age-gated setting with a retailer who has experience selling those kinds of related products. So I don't have a crystal ball, but I would not be surprised to see retailers with a lot of experience selling age-gated tobacco products move into selling age-gated cannabis products may be of a certain potency or certain requirements, not everything. But I eagerly await the day to see a Marley Natural inhalable product in your local 7-Eleven or Circle K store.
Same. I real quick, this can be a no comment. I plead the fifth, whatever you want to say here. For our retail investors specifically, are they going to be able to get involved in what you're doing in the near future?
We were raising a convertible, so I think for accredited investors, there is an opportunity, but beyond that, I will take the fifth.
Take the fifth.
Self-incrimination.
You're like, come on, Elliot, don't put me on that spot, man. But I got to. We got an interested crowd here, my friend. But awesome company. Docklight is the real deal. And Damien, we're thrilled to have you here, and you'll be back with us on a panel shortly.
Yes, sir. I'll see you guys in a little bit. Thanks for having me.
Thanks, Damien. Talk to you soon.
Bye-bye.
All right, Docklight Brands, everybody, they're huge. I mean, how do you have the name Marley Naturals and not be? And they are doing it justice. So take a look at those, especially if you're accredited or institutional. They're incredible. All right, let's keep it moving. We have another wonderful operator out of Nevada, Indus Holdings, otherwise probably known to most consumers as Qualcan. Mr. Cristalli is the Chief Legal Officer. Michael, I do see you there. If you want to turn on your camera, I think you're unmuted now. There he is, the bearded man himself. I get 2 interviews with you in a week and still a fabulous beard. How are you, sir?
Good, Elliot. How you doing today?
I'm good, my friend. I'm good. I'm excited to have you. It's been a day full of awesome discussions about cannabis. We're touching on public companies. We're touching on private. I'm pumped to hear your value prop, my friend. Why don't you dive in?
Thanks, Elliot. First off, I've been in Nevada now, originally from New York, since 1995. So one thing I'm going to correct you on, it's Nevada. So we need to
Nevada.
Nevada. Yes, it's a tricky thing. It took me several years to figure that out.
All right, keep pounding me on that.
So I am going to try and put my deck up as well, and I don't know whether or not I was successful doing that or not.
Yep, all good. We do see it.
Okay, good. So we are Indus Holdings Incorporated. Indus Holdings Incorporated, through its subsidiary Qualcan, was created in 2014, really on the cusp of legalization in the state of Nevada. Medical legalization in the state of Nevada, and really kind of the operators, the licensees got on board in 2014 with the anticipation of legalization, which ultimately came to fruition in 2016 during the ballot initiative. Overwhelmingly, the voters voted for the initiative. So as of 2018, we had full recreational in the state of Nevada. Indus Holdings, which is currently a Regulation A Tier 2 offering, wherein anybody could invest in Indus Holdings at investqualcan.com. Anytime, you can go to that site and see about our company and review our presentation and our deck and our Regulation A filings. So Indus started off as a production cultivation facility. It's about a 30,000 square foot facility in Nevada. We have grown since 2014. We are now fully vertical. So we have production, cultivation, distribution, and we have 4 retail licenses, which are dispensaries. In our dispensaries, we have one in Clark County, which is off of Desert Inn. And if anybody understands the Strip in Las Vegas, we are close to the Strip, just east of the Strip. We have the first drive-through in the county, which is the greater Las Vegas area. We also have a retail facility up in Reno off of Virginia Street. We just were awarded 2 additional retail licenses, one in the city of Las Vegas and one up in Carson City. So we have a full coverage of the state of Nevada. We are fully integrated, as I indicated, and it is important in terms of being fully integrated in the state of Nevada because it's very different than other markets. It's a closed market. There are only so many licenses given out in the state. And so to have the ability to be fully integrated, to be able to move your own wholesale products through your retail dispensaries, and also be able to negotiate with other retailers, shelf space. Shelf space is important so that you have a lot of opportunity, a lot of diversity in terms of bringing other products to your stores, and also being able to put your product in other dispensaries throughout the state.
Hey, Michael, real quick, if you wouldn't mind just hitting the full screen button on your presentation, we might be able to get it a little bit bigger for the audience.
Yeah, and that's and I'm sorry about that. I'm
no worries at all, man. Tech is the downfall of us all, including myself. Sorry to cut you off there, my friend.
No, I'm trying to figure it out. So I appreciate that. Could, let's see here. How do I do that?
Is there a view option at the top of your screen there?
Yes. I knew I was going to run, and I'm not seeing it on my end, so I cannot scroll through it, unfortunately, which is giving me a little bit of problems. Okay.
All good.
So let's see. I'm up on the top here. You are sharing. Any other suggestions on how to get that up for everybody?
Nicole, maybe if you could pop in as well, but outside of that, if
yeah.
If you want to send it to me, just send it to me in email, and then I'll quickly, if you want to send it to me, I'll quickly share it with my screen.
Thank you.
And while we are waiting here, it is investqualcan.com, if I'm not mistaken.
Yes,
they have
emailing that too. I'm sorry.
Nicole, is it just Nicole at benzinga.com, or is it Nicole Lapointe?
It's Nicole Lapointe at benzinga.com.
Lapointe.
With an E, Lapointe.
Gotcha.
Invest@qualcan.com. Tons of information on your offering. It's really interesting stuff.
I apologize. Okay, I'm back, and I did send that to Nicole. So if Nicole could help me, that would be great. And now I'm going to stop sharing.
Yes, perfect.
And I'm back. So now I'm more comfortable. Thank you.
All you, man. Please continue to chat if you want, and we'll get it up for you shortly.
So great. So let's talk a little bit about the meat and potatoes of the company. So as I indicated, we're fully integrated. We're very enthusiastic about our product lines, our edibles, our vapes, and our pre-rolls. We're very well known, recognized for our pre-rolls and also our edibles. And you can go to qualcan.com to take a look at all our SKUs and all the product lines we have. As far as how the company has performed, back in 2019, when this company was a production cultivation company and a distribution company prior to its retail facilities, it did about $5 million. In 2020, Indus Holdings reached close to $20 million. We are a profitable company, and we have grown really methodically, conscientiously since 2014. We are posturing for a public offering. We hope to make another acquisition in the state of Nevada. Part of that acquisition would add probably another $20 to $25 million to the bottom line. Once we have our other retail facilities up and operational in 2021, at least in the city of Las Vegas, we hope to be around 30 to $35 million in revenue, with the other acquisition close to $55 million in revenue, and looking at 5 times multiple in terms of going public. Oh, there we go. Thank you so much. So, and I don't know if Nicole can control that for me, but if we could scroll down, I would appreciate that. And I can kind of go through it a little bit in terms of the company and its direction. And I will tell you when to stop. And we could stop there, just go one, right there is fine, Nicole. And one thing that you're looking at as far as a Las Vegas market, we can go one up, please. If you look at the Las Vegas market, I mean, you're looking at revenues that are going to be close to $1 billion in revenue, probably within 12 months. And the goal is to achieve about 10% of that market share. We believe we could do that. We believe, getting to a point around, 55 million in terms of our go public at, between a 5 to 7 times multiple is the goal. The goal in terms of the public offering is, within 6 months. And if we can scroll down, Nicole, I'd appreciate that. You can keep going. You can keep going now. And these are just, some of the brands, as I indicated, you could take a look at on our website. And, we're pretty diverse in what we offer. We're very proud of the SKUs that we have in the edibles. And qualcan.com can take you through all of the different product opportunities that we have and where we offer them in the state. Again, we have a 30,000 square foot production, cultivation, distribution center. We have 4 current operating retail facilities. You can go down, please. So, we're very proud also of our board of directors and our management team. Sig Rogage is one of our board members. Sig has worked for 2 presidential administrations, Ronald Reagan and Bush Sr. He has traveled the world. He has, been instrumental in both of those administrations, and also has been instrumental in Nevada and in Washington, D.C. So he has been an important factor for our board and working hard for us as cannabis evolves and federal legalization, hopefully gets closer and closer to realization here within the short period of time. Thank you. You can continue. And you can continue through that. You can go again, Nicole. Thank you. And so, as far as, the company's expansion goals are concerned, as I indicated, Elliot, we are anticipating finalizing the construction of our Las Vegas facility, our Carson facility, and also the acquisition of another 2 cultivations in the state of Nevada, and also another very well-performing dispensary. But also, we are looking to emerging markets, and we're looking to Arizona and hopefully Utah. We really are excited about the possibility that Utah may come up again in the near future as far as legalization, and we really feel that we want to have a presence there. We also have opportunities in California. So the company, while it is building, conscientiously in the state of Nevada to, maintain that 10% market share interest in hopefully $1 billion industry within the next 12 to 24 months, it also sees the importance of being a regional player, being in Arizona and being in, other markets, potentially California and Utah once that comes up onto the screen. So you're looking at a company right now that is, is postured to do really significant things in the market. And why are we different than any other companies? Because there's not many that are positioned to go public right now that are currently registered with the SEC that are involved in a Regulation A Tier 2 offering, which allows investors to get in early before the IPO is launched. Those opportunities are rare. And so, we feel that we're well positioned, that we're profitable, and we're building a good company. And excited about the future. So if I haven't, I probably missed some things, but I like to, offer some questions up to the audience or yourself, and be more than happy to answer them.
Absolutely. I love it. You are laying out, sorry, let me turn my video on. You are laying out I think the groundwork for a big plans here. If you could touch on where you're at now as a single state operator, is there anything strategically beneficial to that versus your desire to be an MSO, or is it just a stepping stone?
I think it is beneficial because Nevada, and I think this is the important thing to point out with the state, being a closed market and being highly regulated. By now, what we have is the CCB. So we have the Cannabis Compliance Board. It was previously the Department of Taxation. The reason why that's important is because it is so highly regulated, and we are so familiar with the operations in terms of the regulators and compliance. We will be able to easily now transition into other markets, other jurisdictions, and be able to hitch our wagon with other companies or other licensees who aren't familiar with being able to kind of navigate through the regulatory waters. We know how to do that. We are a company that is highly engaged with compliance and regulatory restrictions. And so, Nevada is a good starting point as far as operating within certain guidelines and compliance boundaries. So we feel very confident, and that's why Nevada is, I think, really kind of the star as far as regulatory compliance issues in the nation today.
Fantastic. So we talked a little bit about this on Cannabis Hour last week, but I'd love for you to touch on again the reasoning, for Regulation A. Obviously, you have a desire to potentially enter the public markets, and that's obviously beneficial there. But what else? What else drew you to that type of offering?
So Regulation A opportunities is relatively new, and it gives or affords companies an opportunity to generate capital, raise some capital before an IPO, which allows us to go and acquire assets and to build a bigger footprint before we go public. So building a footprint, listen, institutional investors want to see they want to see growth. They want to see multiple operations, but we want to build a company. We want to build strong foundations, and that's what we're doing. All of our operations have been built very conscientiously in terms of profitability. And so it's important for us to be able to have an opportunity to acquire different assets in a manner that makes sense, but also makes sense for the investors. I mean, what other opportunity do investors get to buy in privately before an IPO? And so they'll see hopefully an upswing. You buy at $1, and depending on what we do in terms of our revenue, if we can get the company to 55 million, and institutions see us as 5 to 7 times multiple going into a public offering, I mean, that's a good thing. It's a good thing for the company. It's a good thing for the investors who get in at the Reg A offering price.
Mm-hmm. Absolutely. And I love Reg A's. I think they're super interesting. So one last question here, and I'll wrap it up, but I want to touch on the importance you put into market analysis. Again, I brought this up last week, but I do think data is such a leading conversation driver, specifically for investors now. So would love to get your thought on how you're utilizing the data you're gathering.
Well, I mean, you look at some of what's going on out in the market space. I mean, you see what, some of the companies are doing, Planet 13, just kind of from a local standpoint. I mean, Planet 13, does, 60 million, between 60 and 100 million in revenue. They're trading at how many times multiple? right now at the CSE. So really kind of that is our beacon. That's something that we're looking at as far as be, a competitor, and certainly those multiples are, much more significant than we're looking for just conservatively, but still very positive as far as, getting out into the marketplace at, 5 times to 7 times revenue. So the important thing for us at the end of the day is to build a company that's going to last and continue to be profitable and to outpace or outlast any bubble that may exist in the industry. So, we're very conscientious about our operations.
Fantastic. I love that. I love hearing that. And I know investors do as well. Michael, it has been a pleasure having these conversations with you. I really look forward to the growth of Qualcan. Let's keep an eye on potential listings here. In the coming year, we'll see. But again, Qualcan, investqualcan.com. Any email you'd like to throw out there, I'll let you do that. But thanks again, Michael.
Thanks, Elliot. I appreciate the time, and I apologize for my inept, technology. I will try to do better next time.
Oh, please, my friend. You were great. I think you got a great value proposition here, and I think we all saw that. So thanks again, Michael, and we will see you very soon, my friend.
Okay. Thank you,
Great.
Elliot.
Awesome. So everybody on the platform, please reach out to Michael, set up a meeting. It's worth your time. Everybody on the YouTube chat, investqualcan.com, QUALCAN. All right. So we've had a couple really interesting conversations with Docklight Brands, the brand holder of Marley, and then Indus Holdings of Qualcan in the Nevada market, potentially other markets soon. We are going to hit on a market that I am very excited about with two of the leading operators globally. Please welcome Jelani Gibson. NJ Cannabis Insider is the company publication there. Apologies, Jelani. There you are. How are you? I apologize for butchering your company name there. I wrote it out poorly, but I'm going to let you go. I'm going to let you take it. Nick Vita, Jen Drake. So excited to hear the three of you discuss this market.
Hey everyone, my name is Jelani Gibson. I'm from the NJ Cannabis Insider. We are a part of NJ.com and Star Ledger, and the largest media operation in the state of New Jersey, which, as everyone probably already knows, just passed a bill to get people into the legalization market, to get adult use a reality, and to also expand medical use. And so right here, we have the wonderful people of Columbia Care. I actually spoke to someone from Columbia Care this week, your VP of Corporate Affairs. Spoke to them about that. Very interesting conversation, Nicholas. And it's nice to meet you again as well, Jennifer, of Ayr Wellness. And so I'm going to have a couple of questions for everyone, and let's go ahead and see if we can get this party started. Everyone ready?
Sounds great.
Thanks.
All right. And so just more of a free-form question, first and foremost, how's everybody feeling about Jersey?
I love Jersey. I told you, Dylan, I have a secret spot in my heart for Jersey. I think it's going to be an amazing, amazing state for all of us, and just super excited that things are moving forward with kind of legislation, and now we can get on to regulation, which there's a lot of wood to chop, but it's going to be excellent.
I agree completely. And I think New Jersey is not only a really important precedent for the East Coast, but there are things happening at the legislative level that are follow-on that are just kind of, I think, real sort of milestone breaking. Everything from the possibility of legislators pushing through some kind of access point that involves Medicaid reimbursement, to the way in which they plan on creating the commission to ensure you have, sort of access not only from an operating perspective, but also from a consumer perspective.
Great. And so, I'll pick on Jen first, and then Nick, and then we can just kind of bounce back and forth between who's first. And so, when it comes to the Jersey market, what are the immediate things that are on your mind in terms of getting ready, especially as it relates to balancing a topic that is of great importance to the people of Jersey, medical supply and the adult use market, making sure that there's enough supply for medical patients in addition to an adult use market that is basically stuck in between New York City and Philly?
Yeah. No, it's a great question, Jelani. And I know that a lot of people in New Jersey are really committed to making this process work as well as possible for the patients, current patients in the state, but also for the prospective patients and consumers on the adult use side who haven't yet come into the patient mix in New Jersey. So there are a couple of key issues. I think you hit on, like supply being probably the biggest one, because supply goes to access, right? What we want is for patients to have access to the plant for their well-being needs. I mean, that's the whole point of medical cannabis, and part of adult use authorization is really kind of helping bring that wellness to more people. So I think access is super important, but access starts with supply. And cultivation. So I think the folks in terms of legislation, the legislators rather, and regulators are really taking quite seriously the need to increase the supply in the market. I mean, if you take a step back, right now there are 12 ATCs, alternative treatment center licenses in the state and there's less than 300,000 square feet of cultivation and production space in the state. We have 10% of that at 30,000. We're building out more. But if you think about the amount of cultivation and production space in other states, it's just multiples of that. And in order to really serve the population, we need to expand. Which means that the regulation needs to pay a lot of attention to what the wholesale market is going to look like, so that not just the people who have the cultivation can have access to it, but other dispensaries can have access to it as well. And the one other thing, I'm sure we'll get to it in a sec, but I want to turn it over to Nick for a second. But another thing I think is super important, aside from sort of that access, which means more supply, more cultivation, but also more dispensaries, is testing. There's only one state-run testing center right now, so it's really important that testing gets expanded so that people can have access to safely tested cannabis.
Yeah, I mean, I would echo everything that Jennifer just said, and the points that I think are really relevant for the way we think about preparing for the rollout of adult use is that New Jersey went through a very disciplined legislative process that involved the governor, the Senate Assembly, all of the stakeholders had a voice. And so that's really important, because one of the priorities of the commission that has yet to be seated is making sure that there's adequate access, not only for the adult use program, but for medical. And so unlike some other markets where you've seen this really intense tug of war between the adult use allocations and the medical allocations, we have an independent arbitrator that will look at the market, look at the supply chain, and make sure that there will never be a situation where access is limited to the patients first. That doesn't mean that they won't be pushing and sort of enabling all the operators to provide access to adult use, but the quality and the products, and I think the testing issue that Jen just highlighted is very, very important. All of that will be resolved, I think, much more efficiently with the construct that New Jersey has created. What's fascinating to us is that New Jersey is a supply constrained environment. We actually have a second location that we're building out, and our expectation is that we'll have 150,000 square foot of canopy, producing supply by the end of this year. And that's a very big deal. And I can say that there are others that are sort of making the same plans. And so there may be a limited number of operators, but those operators will be under intense scrutiny to not only provide adequate supply, but make sure that that supply is incredibly high quality. And what we're very excited about is that New York has really taken the lead here, ahead of New Jersey, ahead of New York, and ahead of Pennsylvania. And so others will be looking to New Jersey to serve as a model to follow, which I think is good, not only for the industry, but for patients and for the for the advocacy side of stakeholders as well.
Well, all of you must apparently be mind readers, because we were going to go into testing. And so let's go ahead and get that question out of the way with Nick first. What I want to know, and I'm pretty sure what the audience wants to know, is what exactly are you looking for when it comes to testing besides accuracy? Explain to the audience the importance of testing, and also explain the importance of what it means to actually pull more scientific data from this amazing plant that everybody's trying to get in on.
So I'm happy to start on this one and hand it off to Jen if that works. Testing has been a bottleneck in terms of supply, because when you have a limited number of qualified groups that can really assess and determine the quality of the products being sold, it by nature will slow down the rollout of new products, new form factors, and additional supply. Why this matters is not only from sort of an efficiency perspective, but really also from an affordability perspective. And so when we think about what adult use means, it means that every consumer in New Jersey will have the right to go and purchase cannabis for whatever reason they want, and they will know that this is the highest quality available. They will know that this is trustworthy. They will know that it will not have impurities. They will know that it actually is good for them relative to, saying things that could seep into a highly unregulated market. And that's very, very important. The data that you're referring to is equally important, because as we've become more sophisticated, and Columbia Care was founded back in 2012, and so we've been collecting a lot of this information across the country. But as our competitors do, we look at what people's experiences using different products and form factors. And the thing that I think about is, if my mom has arthritis and she's in her 70s and she's been given a prescription from a doctor, well, what is she going to use? Is she going to turn to an opioid first, or will she actually think about cannabis? We now have enough information to really have a very healthy and honest dialogue about how valuable cannabis could be in that conversation. By the same token, if somebody is looking for cannabis as an alternative to alcohol, or just an access point to improve their quality of life, or to create a good work-life balance, knowing that it's safe, knowing what's in there, knowing which cannabinoids actually affect them in a particular way, and is that effect normal, or is that effect broadly felt? And so all of those questions, I think, will not only have a huge impact on the way people enter into the cannabis market from the unregulated market, but also as we think about new areas of the marketplace. So, think about baby boomers, right? These people may not have tried cannabis in 40, 50 years. And now all of a sudden it's open for business. What does that mean? Being able to answer those questions in a very honest and high integrity way, being able to provide data, all of that really does matter. And by the way, it also informs us in terms of which products we manufacture, why we're manufacturing, how we're marketing them, how we're presenting them to people. And so it's not about making claims so much as it's about making sure people know what's in it. And all of that comes down to testing. All of that comes down to the rigor of the analytical exercise that actually goes into the production, manufacturing, and distribution of the products that we will offer the market.
Yeah, no, I totally agree with what Nick is saying in terms of the data. When I think about what's different about the cannabis industry compared to any other industry, one of the key differences is that you have more information regarding kind of the quality of the product than in any other industry. Every batch is tested. The percentage of the batches of your harvest that gets tested is much higher than the sampling rate that you would get in any other industry, including pharmaceuticals. And the breadth of kind of different cannabinoids and terpenes and sort of how should I say that things that are need to be excluded. The breadth of testing for with cannabis products is just so substantial relative to any other industry that you can put your hand on your heart as an operator and a seller and say, we have an extremely high degree of confidence in the product that we are selling to medical patients and adult use consumers. So there's a lot of great research that can also be done kind of after the fact as we get more research liberalization, as Nick suggested, that puts together kind of effects with test results and sort of, because we know to such a great extent what's in there because of the robust testing, we can really start to make connections and help people help themselves, make better choices and more targeted choices in terms of the types of products, but also strains that work best for them.
Great. And so let's take a pivot to economic justice and social equity, as I'm pretty sure everybody already knew was going to be a big topic.
As it should be.
Always. And so with the current state of the market in New Jersey, I've had a lot of sources and advocacy organizations tell me that they do indeed plan to challenge future cultivation caps. Their belief being that cultivation caps do not help an equal market and do not encourage free market competition. Some of the most outspoken people being the NJ Cannabis Association and people such as Edmund DeVoe. And so where does everybody exactly fall on that criticism? Who wants to go first?
I'll go first, or Nick, you can. We can tag team.
Yeah, sure. I mean, look, I think that Jen and I will be in heated agreement on this one. You know, I would actually define access more broadly. It's not just about the licenses. It's also making sure people have equality of access. So, you know, when Senator Singleton and Assemblymember Reynolds Jackson came out with their proposal to actually create some form of subsidization, that was a really powerful indication that sets a national tone to make sure that if you are a consumer, you will not be hamstrung by an economic limitation to make sure that you have access to the best quality of life and the best healthcare alternatives possible, which is really meaningful. From the standpoint of new licenses, you know, we've really spent a lot of time working with the Black Cannabis Equity Initiative, the Cannabis Trade Association, and we view this legislation as it exists today as a start. We think that the new members of the commission that have yet to be seated are going to be incredibly important in thinking through these issues. And, you know, our view is that having healthy competition is critical, not only because you want to make sure that you have a diverse group of operators, but also because it's the right thing to do. Making sure that the industry reflects the communities that it serves is incredibly, incredibly important. And frankly, it goes part and parcel with, I think, that the way most of us think about our own companies. So, you know, in terms of caps, in terms of sort of the way the structure is today, we think of it as a starting point, not an ending point. And we think that as we've seen through all of the initiatives, not only in the legislature, but among the operators, those efforts are uniformly supported. And I think they're going to come out with, on the other side, with a really sophisticated and smart and durable sort of social equity and DEI sort of a framework that effectively sets the tone for all of the Northeast and frankly for all the East Coast.
Yeah, I think that when we talk about social equity, there are so many things that come into that. I think obviously access is important. But also the ability to participate in a new industry and the ability to do it really profitably for the participants. I think all of those things are incredibly important, and all of those things are important balancing acts for the legislators and the regulators to pull together. Luckily, I think there are a lot of different examples out there, in the various states that have legalized that can give really a lot of help to say, this works well, this is challenging, this is something that we really want to solve. And you bring up the example of cultivation caps, but there are lots of other examples as well. And I think that's just one of the things that the regulators and legislators are really going to focus on in terms of both providing access to individuals, but also providing, access to the or industry participation, and profitable industry participation.
So can everyone tell me about the social equity initiatives that they have underway at their respective companies?
Sure. I mean, we have a phenomenal business support group in Massachusetts that really serves as our, very much our model for the rest of our company and what we would really like to bring to New Jersey. It's called the Accelerator Program. And essentially the guiding principles of the Accelerator Program are you can't be what you can't see. So you need to have examples of leadership in the business. And we need to give people the tools to succeed. So what does that mean? That means that we have within our business a very substantial commitment to having diversity and a diverse and inclusive workplace. So that's a key metric for us. And making sure that when we bring in our accelerator members, and the accelerator program is basically almost like a mentorship program. So they see lots of people within their mentorship group that are exactly what they want to pattern. What does that mean? We basically we provide a lot of connectivity to our own executives, to our own training programs. We basically train people as if they were going to be running a retail store. If they're in the retail portion of our accelerator program, we provide them access to the Harvard Business School Cannabis Club and a lot of the different training regimens that the Cannabis Club has put together, including help with business plans, help with capital raising, and we provide them access to our network of wholesale customers as well as our own kind of stores. So we provide them a ton of access to the industry, a ton of access to our facilities in order to train, to our people in order to train, and a lot of connectivity with the Harvard Business School Cannabis Club. And that's something that we've really only done in the last couple of years because that's a pretty new program, the Harvard Business School Cannabis Club. But it's been great. And it's something that we're super proud of, and we think we can take very much down the East Coast as we expand to new areas like New Jersey.
And so just adding on to that, I think that we have a national sort of mandate going from the board level, C-suite, down to every single level within the organization in terms of how we hire, how we recruit, how we promote, how we attract, and it has a very, very strong focus on DEI. But the issue that we see locally is something that we always focus on most. So, rather than talking about sort of, the board level things, when we talk to the workforce development programs in Cumberland, in Salem, in Cape May, when we talk about unemployed people in our communities, when we talk about the way we have promoted and hired people of color, people who are, women in the workforce, veterans, all of those things are actually reflected in the leadership teams within our organization today in New Jersey. And I would say the same thing throughout the country. But what matters is that the things that Jen talked about are really important as sort of a broad overlay that we engage with as well. But we actually, I think that, the way I interpret your question is, what are we going to do for the people that we serve in Jersey? What are we going to do for the people using the Jersey program as a means to actually affect an outcome from an inclusion and diversity perspective? And that's why I always default back to the basics, which is let's start off by making sure people get paid properly. Our starting minimum wage is $16 an hour, minimum. So everybody at the company earns at least that much. Second, everyone gets benefits. So you actually have a starting point where this is not just sort of a summer job. This is actually a platform that could become a career because you can actually earn a living. Once we take that, then we have the Shining Star program where we actually mentor and train people. And by the way, this is all just internal. And then we have the equity inclusion program, meaning we actually give people awards of equity to make sure they understand that this is their company. So when someone comes into our store, they don't feel like they're just working somewhere. They actually take the pride in knowing that everything they do affects them financially and economically directly. And all of that has a requisite DEI structure around it. So when we think about how we're promoting people, when we think about how we're allocating bonuses, when we're thinking about job training, both in and outside of Columbia Care, it starts at the individual facility level with the individual people, and then we move up from there. I mean, I used to teach a course in Illinois at a state university. Bob Mayerson teaches a course at a community college up in Boston. You go around the team, all of us sort of get engaged at the hyper-local level, and there are people and people of color who we've recruited and attracted, and we've been able to sort of hire and then promote and then promote and then promote. And the idea is to make sure that this is not an organization and this is not an industry where people think of it as, I hate to say it, but working at McDonald's, because should not be that way. This should be an opportunity for people to really develop real skills, professional skills, and leadership skills, and they should be able to take that and they can translate that into any industry. So for us, it's about taking people who have incredible drive and incredible high quality aspirations and giving them an opportunity to really take advantage of the industry that's growing so quickly, but also to make sure that they're really sort of developing into professionals that can move into any industry, not just cannabis.
And so speaking of customers, because I heard a lot about, customers and overall people alike, let's talk about customer education. Cannabis will definitely be a new experience for some. And as the market matures, you're going to get people who become a lot more educated about cannabis. And so, what role do companies play in customer education? And as the customers become more educated, how does that affect the way that you market and also the type of products that you plan to sell for current use and future use?
Well, I think that the main way that people are learning about cannabis today, if you go and you ask if you go and you ask customers, whether it's in the U.S., in Canada, wherever it's kind of new, the main way that people are learning about cannabis is really from their bud tenders. It's really from the people in the store who are helping patients and customers make decisions about what works best for them. And so the main way we try to educate our consumer is through our bud tender and through the training programs and continuing education programs that we have for our bud tenders, because that's really the main point of contact for so many people. I mean, of course, there are a lot of resources online, and we try to contribute to those as well. But it's really that personal connection with your bud tender that seems to be the place where people feel most comfortable getting their information. So that means for us, we have to be extremely, it's an extremely important part of our business, both from a training standpoint, but also in terms of, compliance and making sure that people are educating in the right way. It's super important for us to spend a lot of time with our bud tenders to make sure that they can really help to educate the people who are coming in the doors.
Yeah, and I would just add to that. An educated consumer will end up being the most important thing for the durability of the industry long term. I have been incredibly amazed when we think about sort of the average demographics and how the market has changed in each market. In Arizona back in 2014, it was a late 30s white male who had chronic pain. Today in New York, it's a 54-year-old female. Right, the world is changing, and it's changing at a pace I don't think anyone had expected. And what that means is that the industry has an obligation to really establish trust, and that trust comes with data. And you asked the question; you were absolutely right about it. Being able to convey what is in a product, how it will actually impact someone, how other people's experiences could sort of help an individual make a decision. All of that comes from the experience. Some of our markets require the involvement of pharmacists. All of our markets have access to our pharmacists. And so whether you're talking about something more on a medical spectrum or more on adult use spectrum, I think the sophistication of the marketplace and the way we engage with consumers will not only help them through their journey, but also create word of mouth. And we can spend as much money we want on marketing, but what matters is what people experience. And it's not just the products, it's actually the engagement with the people on the staff. If you have people who care, who are genuinely interested, who are trained properly and treated well, that will be reflected in the way they react with others and they engage with others. And I think that will ultimately inform us and allow us to gather the type of data we need to develop the types of products that will be best serving the markets that we serve. So it has an impact on innovation, it has an impact on access, it has an impact on sort of the perception, and it has an impact on the reality.
And I think it's worth mentioning also that there are very few products that have such a wide demographic appeal as cannabis. I mean, Nick mentioned a couple of the kind of demographics, and just to give an example of sort of some of the demographics that might be kind of relevant in different places at different times. But it really from 20s through to my mom actually is what you just said, Nick. I don't know if you were serious or not, but my mom is like an 80-year-old woman who uses cannabis now instead of any opioid for arthritis pain. Totally. And that is about the mainstreaming of cannabis, but it's a product that really has appeal from a 25-year-old to an 85-year-old, for whether it's a wellness use or a wonder use. It's a product that has so many applications and can bring so much, benefit and well-being to people's lives as it becomes more mainstream, and as Jelani, as you say, as people become more educated about it and feel more comfortable with it. It's going to bring well-being to so many people. So it's just really exciting.
All right, looks like we'll have just a couple of minutes left. And so I want to sneak one more question in there. What specific products can the people of New Jersey look forward to in the latter part of the year and next year? And what are the things that you are specifically excited for on the horizon?
Jen, why don't you go ahead?
Look, I think if the current set of product mix is any indication, New Jersey will love flower like so many markets do. I think that's been the market leader across the board, and that to us, like, we love that as a company because we believe it all starts with the plant. And we believe that, the quality of the plant is the most important input to everything else that we do as a business. So we're excited for that. But beyond that, I think, look, we'll see where regulations kind of come out. I think we are committed to providing as many different form factors as kind of regulators are comfortable with, because different patients and different consumers really do have kind of different preferences, right? And so you want to give people the opportunity to access cannabis in the way that works best for them and the way that they're most comfortable with. But we do think it all starts with the plant. So we love flower heavy markets because we think it's really true to the essence of the business.
Yeah, I mean, I know we're running out of time here, but I would echo everything that Jen said. But one of the things we're very excited about is obviously we have a very big presence on the West Coast and in Colorado. And so a lot of the expertise, a lot of the products, a lot of the brands, a lot of the form factors that have only been historically available in California, which is, the epicenter of the history of cannabis, at least from a regulated perspective. That is what we are excited to bring to New Jersey. And so we intend to bring to New Jersey the best of the best of the best that they otherwise wouldn't have access to. And I think that is going to be incredibly valuable, not only from a New Jersey perspective, but from a regional perspective, because people will see what New Jersey has done economically, from an access perspective, from a community perspective, and they'll see what it means to actually have a legitimate adult use program. And I think that's something that people are not accustomed to, but again, it'll speak to the sophistication and the ability for consumers to really move up that curve very quickly and drive sort of real choice based on preferences.
Yeah, New Jersey has a real chance to lead here. And it seems like with all of the legislation and regulation that we've seen so far, they're taking advantage of it. And it just seems like New Jersey is going to be the axe to follow on the East Coast. I totally agree with you, Nick.
All right. Well, thank you, everyone, for definitely a jam-packed session of information here. I'll go ahead and turn it back over to Elliot.
Jelani, well moderated, my friend. That was a wonderful conversation. Jen, Nicholas, incredible discussion. We touched on data, staffing, education, social equity, importantly, a passion-filled discussion there, and very sad it was only 30 minutes. We'll have to replay this and retouch on it again and for other markets as well. So thank you all for being here.
Awesome. Thank you guys.
Good seeing you. Take care.
Okay.
As well. Bye. Fantastic discussion with two of the leading operators in the world, Columbia Care and Ayr Wellness, formerly Ayr Strategies, now Ayr Wellness. Jelani, thank you again. For the rest of the day, we have just public companies. It is a jam-packed day of just amazing education and updates on companies that we should all be aware of. First up, we have Alvaro Torres, the head man over at Khiron Life Sciences. If you don't know Khiron, they are an incredible international play. He's going to dive into it here, and I can't wait to hear the updates he has for us. Alvaro, how are you?
Hey, Pat. Hey, Elliot. How are you?
Well, you get the brothers confused. I know. There's too many of us. Yeah, it's good, man. It's good. I'm having a great day just listening to just all the thought leaders of this industry, including yourself. Just drop some bombs on us, man. So I'm going to let you take it away. Feel free to share your screen, and I look forward to hearing from you.
Great. Give me 1 second. See if I can figure that out. You see my screen?
I do. Let's just make sure we get it full screen there. But outside of that, you are sharing.
Full screen. Okay. All right. Well, thank you again, Elliot, for having me. Benzinga is always a pleasure to be able to share a story. My name is Alvaro Torres. I am the CEO and co-founder of Khiron. We are a B2C company focused on the global medical cannabis opportunity. We are trading the Toronto Stock Exchange for the last 2 years, the ticker KHRN. I am based here in Colombia, where our base of operations is at, and I'm very excited to be able to tell everybody what we have been doing in the last 9 months and what we're doing even today and the last couple of months. We are focused on the medical markets of Latin America and Europe, markets that are expected to grow by 29 billion in the next 4 years. I think we are in the very early stages of that growth. And I think considering what we're seeing in Canada and the United States, this just gives us a lot of more optimism for what's going to happen in these markets. As I said before, we're a B2C company, so our mission is to improve the quality of life of people through the applied use of cannabis. We're not a B2B company. We're not interested in selling the cheapest cannabis possible to whoever wants to buy it. I'm here to develop relations with patients, creating brands, and be able to reach 1 million patients by the end of 2024. We founded the company about 4 years ago, and since then we've been a company of doing a lot of good things, very fast here in Latin America. Last year in March, we became the first company in Colombia to actually sell medical cannabis in Colombia, both CBD and THC. We became the first company to set up a medical cannabis clinic in Colombia. We became the first company to sell THC and CBD in Peru. We became the first company to start selling medical cannabis in Scotland. And so we've been always very aggressively moving on that regulatory forefront. We know a lot about how to manage regulation across this region. I think that first mover advantage is important. Of course, it's not the most important part because being first doesn't necessarily mean being the best, but it certainly helps to be able to know where the market is headed. We started, as I said, in March 19 of last year. That was one day before the pandemic started and the country of Colombia shut down, but we've seen tremendous growth. We've written more than 10,000 paid medical cannabis prescriptions in Colombia to date. At about retail price of about $60 Canadian, with a 50% month-on-month growth, which is what's really more exciting about what we're doing. And even today, as we speak in February, the growth that we're seeing from last month, it's just tremendous. We are lucky that because we are so focused on that B2C, we're enjoying really good margins, above 75%, 80% gross margins. And the reason we're able to do this is because we have embraced vertical integration. We produce here in Colombia. We have our own clinics. You can see in the back, it's Serenia is the name of our medical cannabis clinics. So we produce this product. We sell it for $50 to $60. We produce it from $4 to $5. Very high quality, no cost, because we are in Colombia, and we use our clinics to be able to capture patients. We have 4 health centers in Colombia. We're soon to be opening a lot more satellite small health centers in Colombia and in the rest of Latin America. Last year in December, we were able to talk with the government of Colombia, and the government of Colombia decided to cover medical cannabis for any patient in Colombia, meaning that today any patient that wants it, needs it, and gets a prescription can get it paid by the government of the country, which is huge news because this is one of the few countries that has that, and that has been driving prescriptions even as we speak. As I said, we're operating mainly out of Colombia. We start already sales in Peru. We're targeting Mexico. We're targeting Brazil very soon, the UK and Germany in the next couple of months. And so it's a very exciting time for the company with everything that we have been able to do in a very short period of time. And we're talking about a market that's by itself a lot larger than what we see in Canada and even the US. We're talking about a population that's more than 600 million people of the population that we're targeted between Brazil, Mexico, Colombia, Peru, UK, and Germany. And I think that first mover advantage, that vertical integration, is going to create out of Khiron a very leading company and a very particular strategy that's B2C, that's trying to capture as much value as possible, so we can reinvest it back in giving as much value as possible to the patient. So it's exciting times. I always think that Latin America, even since we started, I look at it as being in Florida in 2017. So today I think is the right opportunity. Almost every country in Latam is regulating or has regulated medical cannabis. So it's a very exciting opportunity, as well as Europe, which has tremendous potential. I think a market that we're going to be seeing growing a lot and very fast. Sorry, I got confused here. So how do we do this? And I said, we are vertically integrated. Colombia is our proof of concept. For us, anything that we want to do is how do we get as close to the patient as possible? The closer we can get to that patient, the more value we can add to that patient, and the more value we can add to the patient, the more value we can add to shareholders. So, we're looking at how do we source our patients? How do we build clinics? How do we bring patients from insurance companies, from private health providers? We own 4 wholly owned centers here in Colombia with more than 100,000 patient transactions per year. We go there and educate our own doctors. We show them the evidence. We educate constantly to drive that prescription and that willingness to prescribe. That results in prescriptions that we've been able to write every month. As I've said, with more than 50% month-on-month grade. And then working with insurance companies, working with the patients to understand how do we actually get as many of those prescriptions paid as possible, which eventually reflects in our revenues. And then, lastly, on those economics, how that B2C strategy allows us to have good margins, affordable prices, but something that is sustainable over the next 4 years, because certainly for us, it's very important to be able to generate and keep generating that value for that patient. So it's that funnel that we've been building in Colombia. How do we take it to the rest of the world? I think I'll talk to you a little bit about what that success has been. But what we see today, and even as we speak, it's that strategy of wholly owned centers, doctor education, prescriptions written, prescriptions paid, and good gross margins, how sustainable we can make it and for how long, which is very exciting for us. We started selling medical cannabis in March 19. Even in the middle of the pandemic in Colombia, I think we've seen tremendous growth compared with what other markets have done. What I'm trying to showcase here is that even in Germany, Canada, Denmark, and Australia, very well-known international markets, in the first 9 months after each of these countries legalized medical cannabis, what is the ratio of patients, as a percentage of the entire population, and how fast these countries grew, compared to what Khiron has been able to do with one clinic in one city called Bogota with 8 million people. It's clear for us that we're in the first inning of the first game of the World Series when it comes to medical cannabis. And it's also interesting to us to see that vertical integration strategy is working out so well, that we can see this type of growth, that we by ourselves, we're growing and having more medical cannabis patients for every 100,000 people than the entire country of Denmark. And so how do we take this ahead, and how do we execute this in other markets, in other cities, in other countries? Latin America is a very big place, of course, and I think the model that we've been showing, we're going to be able to multiply that in as many countries as possible. So we start with our vertical integration with our clinics. 2 years ago, we acquired a company called Islands. It's 2 big health centers, more than 25,000 square feet of medium complexity, which we service about 100,000 patient services a year. And this is the source of the funnel of patients that we're taking into medical cannabis. We have more than 60 internal doctors, and the patients that we're seeing, and the reason we acquired this clinic is because the patients that this health center was seeing were patients with chronic pain, epilepsy, anxiety, depression, sleep disorders, which are conditions for which medical cannabis has proven to work. I think that the more that we've been able to grow that, we built a new clinic in the 40,000 square feet in May, and this has been the biggest source for us to be able to capture that demand, because that demand needs to be built. We have to educate a lot of people. We have to be able to get that message across as many people as possible. We implemented telehealth solutions, which now account for 15% of our patients, and that was particularly important, you can imagine, in the middle of the pandemic. And this is the way that we're also be able to create loyalty. We have customer service, home delivery, telehealth, patient follow-ups, and that relationship that we're building, and the more that we expand it, the more of that patient loyalty we'll have. Back last year, we decided to start expanding Serenia into satellite type of formats, 300 square feet with low capital investment, no more than $30,000, with 6 to 9 months of payback period, so that we can actually go in the rest of the cities in Colombia, and then start to take that model and be able to multiply it across Latin America. We opened our first clinic in Medellin, has been a tremendous success in terms of patient rates and how many patients are living with a cannabis prescription. We announced recently that we're going to be opening 2 in the next couple of weeks, and I'm happy to say that it's going to be certainly more than 2. There's more than 13 cities in Colombia that have more than 500,000 people. There's a big opportunity for us to be able to grow this. We have the right model. People know about Serenia. It is the largest medical cannabis clinic in Colombia, and we need to capitalize on that. And this know-how that we have, we need to be able to take it abroad out of Colombia as well. And then we talk about doctor education, and we talk about that a lot. We've been talking about it for the last 4 years, but we are seeing why that is important. I think this is all really about education and evidence. Even today at our clinics, 92% of the patients that have been surveyed have shown a significant improvement in the primary conditions after 3 months. That type of evidence that we're building in our clinics with our data that we can give back to the doctors so that we can increase that willingness to prescribe is tremendous. And if you look at why are we growing 50%? Because when we started in Q2, we had 8 doctors who were writing 1 prescription a day. Today, we have 24 doctors in December, 24 doctors that are writing 2.3 prescriptions a day per physician. Why is that happening? Because of that evidence, because of that education. And in the end, it's the doctor who decides if they want to prescribe or not. We cannot get in the middle of that. What we can do is keep training, keep gathering that data, keep showing it. And this is just going to be compounded. The more cities we open, the more patients we have, and the more countries we can look for. That yields into what's the medical cannabis prescriptions written. As I told you before, we've been growing 50% month on month since we started. We had 82% growth in paid prescriptions in Q4 of last year versus Q3. The entire market of Florida, which is what we look at in terms of a success story that we can follow, has had a 25% quarter-on-quarter grade since they started 2017. And we are just 9 months in. So we're talking about bigger population, particularly in Colombia and Latin America. We have a population in Colombia that is able to access medication that is medically insured. And that insurance coverage in Colombia is going to be the blueprint, for what's going to happen in the rest of Latin America. The fact that Colombia allows medical insurance for medical cannabis as a first line of therapy is tremendous. We've seen that growth, particularly since we started in December. In our clinics, when we started, we had almost 65% of the patients that were getting a cannabis prescription were able to pay for it, particularly in the longer term. But we've been always working on medical insurance because we know what's coming. If you can see there in the Q4, the impact that medical insurance had on our business, going from 65% of the patients who could afford those medications even as we grew, to more than 85% in the entire quarter. And today in January and February, we're seeing even higher numbers than that, because now it's no longer a problem for the patient to be able to access it and afford it, which is tremendous news. On top of that, you need to make sure that you're actually providing a good service, right? So when we have 9.3 out of 10 patient satisfaction, we gotta keep striving and working towards ensuring that every patient that goes to the clinic has a good experience. Of course, we can get it wrong sometimes. We make mistakes, but I think the objective of the company to be absolutely focused on that is going to continue to help us build that brand. And now that we have medical insurance, now that we have all this data, all of that is just going to come to continue showing that growth in the next 4 years. And that's how we're going to capture 1 million patients. And then we talk about economics. And we've always been focused on that B2C aspect of our business, not on the B2B. And when you look at the products that we're selling to our patients, we need medical insurance, with an average retail asking price of $5 a gram of flower equivalent. And then you start looking at what the B2B companies out of Latin America and Colombia are able to sell their products of 11 cents and such. You start to think, well, of course, being a B2C focused company with a lot much higher margins, that's for us a lot more sustainable. I think the B2B business is great. It's going to be a tremendous opportunity for Colombia. But in our case, we're interested in capturing 1 million patients, not necessarily selling 1 ton of cannabis. And the more we can continue in that value added, the more we can have those gross margins, the more that we can have those good asking prices, the more we can work with insurance companies and the governments to make sure that it's covered. I think we're going to be in a very sustainable and very leading position. And of course, when we're looking at what that means for us in terms of valuation and the opportunity that we see today in terms of our company, we're talking about a company that's been able to sell and grow 50% month on month at $5 a gram equivalent with more than 75%, 80% gross margins. And we're still, relatively undervalued to the peer group that we have in Latam. I think that's also because, when we talk about the story of Khiron, it's also a story of show. And so we know that we have to continue to educate investors, to continue to educate people, and show them the evidence that we're building on the growth that we're seeing. Our path is towards getting 1 million patients. It starts with the first 10,000, and it starts with how fast we can make it, and it starts with how many countries we're doing it. So, it's very exciting to us that we're looking now at Peru, that Mexico is coming very soon, that we are very inches away from starting Brazil, that we're looking at other markets such as in the UK and Germany, and what do we want to do for the rest of this year? Now, for us, certainly increasing insurance coverage in Colombia is a must and something we're working on every day, because the more insurance companies include cannabis protocols in their protocols, the faster and the easier it is for the patient to get it. How do we expand satellite clinics? How do we start sales in Mexico, sales in Brazil, sales in Germany, continue a Germany education plan, and expand the patient access in the UK? All of this through that model of B2C brands and really, really caring about how do we improve the quality of life of that patient. So, that's, I think, in a nutshell, what we've been able to do. And it's exciting for me to be able to talk about what we've done and, hopefully to be able to convey that we are just really starting in a global industry that, is not going to be full of too many players. And I think the players that understand how to capture that demand, how to create those connections with the consumers and the patients are going to win, just as we're seeing in the United States. Those are the stories that are winning. That's the focus of the company right now. We have a very motivated team. We closed with last year with a good cash in hand. Our strategy is to keep adding more patients and be able to expand our clinics until very soon we will be the dominant cannabis clinics in Latin America. And behind that, there's going to be a Khiron product that's going to be with unparalleled quality. So all these things, Elliot, that's exactly what we've been doing. We've been talking to you about it for a long time. Every month that passes and every month that you invite me to Benzinga, we'll be able to show you a lot more growth. So, it's a very different story from what we talked back in March, because everything was a story then. Today it's actual growth and actual show. So, it's exciting to be able to share this story. And I do believe that, Cannabis 3.0 is not about products, it's about international growth. And that is where we are actually, I think, leading today.
Fantastic. Alvaro, it's always a pleasure to hear from you. We do have several questions from James in the chat, but let's touch on one really quickly. Is there any guidance on 2021 that you can provide specifically in US dollars for revenue, EBITDA, anything of that nature that obviously, within reason here you can chat on?
Well, Elliot, that we don't provide much guidance. We're in the very early stages and we're still in a risky business. I can say that, compared to what we did in 2020, we are looking at a year that's going to probably double what we did in 2020. Our financial results are going to come back in April. But these gross margins that we started to see in Q3 are going to continue growing that way. And this is all just a matter of being able to enter into Mexico, enter into Brazil as fast as possible. We have good cash on hand. We are looking at reducing our cash burn and being able to be cash flow neutral as soon as possible. But it cannot go in determinant of growth, because the more clinics we're open, the more opportunities we're capturing.
Well, Alvaro, James has a ton of questions for you, so I recommend hopping into the platform and chatting with him. But my friend, it is always a pleasure to hear about Khiron. I agree. I can't wait to hear the updates at the coming events later on this year, my friend. Thank you again for being here with us. I very much look forward to chatting with you again soon.
Thank you, Elliot. Thank you, everybody. And yes, I'll get back to Jason whenever, as soon as possible. Thank you, Elliot. Thank you, everybody. Have a good day. Bye.
Yeah, thank you so much. OTC, KHRNF. Khiron Life Sciences, they are doing it the right way. And something stuck out to me: patient value leads to shareholder value. I love hearing that, especially from publicly traded companies. Fabulous. Let's keep it moving. I want to move right into a very different discussion with Endexx CBD Unlimited's head honcho, Todd Davis. Todd spoke at the very first cannabis event, I believe, Weedstock. Todd, if you want to get your camera and mic on for us, my friend, we'll get you over here. There he is. Todd, was I right about that? You were like one of the OGs for Benzinga events back in what, 2016?
Weedstock 2014.
14. You predated me at Benzinga by 5 years.
We had to break in some of your rookies somewhere along the line.
Jason Rasnick and Luke Jacoby, Hot Stocks Luke are the rookies here. Fabulous. Todd, Andrew Ward is going to be leading this for you. Andrew, are you with us, my friend? Let's get your mute there.
There we are. How are you doing, guys?
Fabulous, Andrew. I'm going to let you take it away. Please introduce yourself and Todd.
Thanks so much, Elliot. Hello, everyone. My name is Andrew Ward. I am a cannabis writer for Benzinga here, and I'm excited to be talking to Todd Davis. Yeah, thanks so much. Definitely great to be speaking with one of the originators of the conferences, like Elliot was saying. So thanks so much for taking time.
My pleasure. I'm looking forward to talking to you guys.
Yeah, absolutely. So, we've got some really great developments happening along with Endexx lately, and, love to dive in and get your insights on them here. One of the first ones that really stood out to me was the master distributor rollout, really setting up a great structure and opportunity for distribution for you, if that's correct. You mind elaborating on it?
Sure. We entered into a master distributor agreement at the end of March, and then COVID, it just hit full force. So we delayed it. We repositioned some products, some price points, some different types of technology that we wanted to introduce to the market. We rebooted it right at the beginning of December, and then it went into full launch right at the beginning of January. So just in the first, short amount of time, we're approaching 100 new stores. There's a full sales force out there presenting out to 9,000 buyers across the country. We're launching into, I think, 5 states right now. And we expect a nationwide rollout over the course of the next 12 to 18 months, put us in at least 40 to 45 new states on top of what we've already built prior to this new distribution agreement.
Amazing. And obviously that great opportunity for you there, but can you kind of dive in on what the expectations are by penetrating into so many different markets and things like that?
Well, we have some base assumptions right now. Our master distributor is one of the larger distributors in the United States. We can't really go into detail who they are until we make a national announcement on that. But we have access to nearly 1 million stores, of which we're targeting roughly 150,000 stores over the next 3 years. And if we can grow ourselves into 50,000, 100,000, 150,000 stores over the course of the next 3 years, it will make the CBD Unlimited product line one of the most distributed products worldwide, not including the global potential. So when we look at that, we look at that math model. If you're in for per 10,000 stores and you're selling a single SKU per month, the numbers start compounding very, very quickly. Mm-hmm. So we're forecasting out a model that grows us out over the course of the next 12 to 18 months into that $25 to $40 million a year range in revenue, and escalating up to as high as $500 million annual revenues in the next 5 years. And in order to get to that point, you have to have the distribution. You have to have the brick and mortar stores. You also have to have your e-commerce platforms humming along. And you have to be advertising your brand and really supporting shelf. Those are all the things that we put into place from an infrastructure, from a capitalization and an investment structure in 2020. We utilize the downtime to really get everything together and approach this thing as a major consumer product brand category.
Amazing. So would you say it's a lot of positioning going on to lead to a lot of acceleration now over the next 12 to 18 months?
Yeah, the positioning's taken 5 years. We launched early 2014, right at the onset of the hemp pilot program. By the end of 2015, we had our first few SKUs in the market. We're up to almost 6,000 stores nationwide right now. And this is without putting a foot on the gas. This is just letting the market grow, let it come to us, build what we can, get the numbers and understand the industry, understand the consumer. And now we're really pushing the accelerator here and going to move the company forward.
Amazing. Yeah, we're really excited to see that happening. And one of the big core components to the company is your pet line. What was it about pets that stood out so much to you that made you want to enter the space initially?
We just look at it this way. Say there's a placebo effect in humans and everybody believes that these products are fantastic. Great. Pets don't lie. Dogs don't lie. So when we did early clinical testing on the dogs and the cats, and we saw what it was doing, either a change in behavior, improvement of mobility, all the different very visual aspects we could measure and understand the market. And it also helped us define dosing across different delivery platforms. So in that early testing, it just stood out. This, for dogs especially, this is a fantastic product. It helps with so many things, and it improves the quality of life for dogs, whether they're puppies, nervous Nellies, or end of life care, where you don't want to drug your dog up, but you want them to have a healthy end of the line. And the second thing we did do is we've been talking about it quite a bit for the last year and a half, but we've just finished up 2 years of testing for our horse delivery system. We've tried different delivery systems. We've identified our dosing platform. The results are fantastic, and it's getting adopted along the Eastern Seaboard right now by trainers, by horse handlers, and by veterinarians that are seeing the extraordinary results with real medical science, real medical evidence, including MRIs, X-rays, and blood work that we've been doing for the last year and a half. So with that, our animal science division is really getting some traction, and it's starting to stand alone as its own entity.
Yeah, I think I'm glad you touched on that. A previous quote I'd seen from you was, you said that R&D is one of the DNAs of the company. I think it's really a testament to what you're doing here because, a lot of discussion around the mammals and CBDs is centered around just dogs and cats, but your work in the horses really shows that there's potential beyond the household pet.
Yeah, for any mammal, the endocannabinoid system exists in their system. So identifying dosing is really important, and also how an animal consumes a product, how they intake, where do you deliver it into their system to get a beneficial and therapeutic result. And then just from a mass consumption standpoint, all mammals / animals / people can benefit from this one way or another. So we're introducing products that have a great general holistic or overall wellness benefit to them, and then that can be identified and used on a daily basis or as needed basis.
And what was the R&D journey like for that? What was the timeline from development into launching in July 2020? Was it?
On the horses, we started off. We just picked a couple trainers here in Arizona. A trainer that had a really feisty horse, a young horse that would pierce its ears and raise its head and fight the rider. We introduced CBD into its training routine, and the horse, just, as the rider described it, was riding like a Cadillac. So it really takes the nervousness out and puts the focus back into the task at hand. Secondly, we did a test with a leading fertility doctor, a doctor that implanted, inseminated, harvested embryos to see if we could calm horses down during that process, if we could help the surrogates recover faster after delivering a baby. And we had really good results in that. We were still tinkering around with the delivery system, but we had the dosing correct and were able to get the results we wanted. From there, we moved on to horses that were that were either aged 20, 30-year-old horses that were at the end of their productive cycle, or that had foundering and laminitis issues with their feet. All different types of issues we've now introduced the product into, and we've seen resolution as early as 1 day, but within a week there's measurable scientific data that we're able to gather to kind of identify how a vet could use this, how a trainer could use a product. So the journey has just been fascinating. There's not enough science out there as it stands, but when you're seeing it in the field used by professionals and they're saying, what's going on here? That's where science begins, and you have to start figuring out the what, the why, and the how.
Absolutely. So the claims about the benefits of cannabis on humans kind of go in the same way the course of animals, where it's a lot of anecdote before we get the lab studies.
Absolutely. It's biotech. This is a molecule. These are individual molecules that can do specific things, and it needs to be understood. So science is the way to get there.
Absolutely. And, kind of pivoting a little bit to another exciting development, I believe it was closing out last year, announced an opportunity with DJ Khaled, or a partnership, with DJ Khaled for the Another One line. Can you talk a little bit more about that?
Yeah, that's a really exciting development for us. We've tried influencers, we've tried affiliates, we've tried different, aspects of marketing the product and creating a better educational platform, a better messaging platform. DJ Khaled actually has a real passion for this journey into wellness, and he's more, he's becoming he's evolving into a family man and more of a broad spectrum influencer in the market. When we were introduced to him, and his ambition was to create a completely new category, a new line for wellness to complement his wellness journey, we said, okay. So we ended up developing a whole new, I think we have 9 products developed for his line of products. These are all unique. We've never introduced these to the market. They will be introduced here shortly. So one of the really exciting things about DJ Khaled coming on board and working with us, we've always called ourselves the Collaboration Corporation. This is a way for him to take some ownership, to really own it, sell it, live it, and endorse the product from a real standpoint. So he's in the joint venture that we created separately from the operations of Endexx Corporation. He's a 25% owner. We have a 5% partner in there, and then we own 70% and act as the operator for this endeavor. So this product will be launched here in the next 60 days, 30 to 60 days, we'll say. And it will start rolling out as an initial product category, and then we'll start introducing it into holiday cycles. It'll start going into mass retail towards the end of this year, but we're anticipating that the product has tested well. We're anticipating huge success with this line, and it really is going to create its own industry, create its own market, and set us apart from almost all other companies in the CBD world.
We're real excited to see what happens then in the next month or two with that. One of the things I'm really glad you mentioned too is the collaboration model. So many companies you hear, they, just throw a celebrity on and it'll get attention or whatever. And it always seems to fall apart, or it doesn't seem to produce the results that everyone's always looking for. But that collaboration model seems to show there's more of an investment in it with the partnership that you have. Is that correct?
Yeah, I mean, if none of us perform, if DJ Khaled doesn't perform, if we don't perform, we don't make money. So when you're vested in this and you believe in a product, it's much more passionate. There's much greater gain, and there's a lot to lose if we're not successful. So, when we talk through our strategies and we talk through how our product concepts here, people are engaged. This is not something that anybody's taking lightly, and I love the way DJ Khaled is, presenting this from a business model, from a passion model, and from, this overall wellness aspect. Him being a family man now, it brings together a lot of demographics, a lot of segments of the market into one space where we can drive that message. Everything that we've created for the last 6 years can come out and get displayed and utilized as a marketing tool and an educational tool towards the consumer base.
Absolutely. And Todd, we got about 2 minutes here for the rest of our conversation here. I really want to say thank you for taking time and giving us your insights here. Is there anything else, there's astounding year-over-year growth. There's other great developments that are happening on. Is there anything else that the viewers need to know about before we wrap up our session here?
Yeah, we've gone through this really long process. A lot of OTC companies, pink sheet companies, never have that opportunity to grow to be a NASDAQ company, to grow to be an accelerated growth company and really prove themselves. We've invested the last 2 years in bringing our company up to compliance. We are in the last stages, and I've said this many times before, so it might fall on deaf ears. But the fact of the matter is, we're filing our Form 10, we're prepping our uplist. We are a fully audited company, and we're ready to put on our big boy presentation and go dominate a market that we feel like we're one of the leading experts in. So it's exciting, guys. We have distribution, talent, collaboration, and a fully reporting company that's ready to explode. So,
well, we're ready to see where it happens next, Todd. And thanks so much for sharing your insights as always. And we'll get you back on one of these real soon.
Yeah, my pleasure. Great to see you guys.
Todd, wait. You can't tell me that your partnership with DJ Khaled isn't a direct result from Benzinga's Weedstock event in 2014.
Without question. That thing is always at the top of all search engines.
Thank you. Benzinga Weedstock, here for you for 7 years. My friend, it's good to see you. I look forward to it, seeing you in person again soon, God willing. But we will talk to you soon. Again, this is Todd Davis, CBD Unlimited, Endexx, OTC, EDXC. Thank you again, Andrew and Todd.
Thanks so much,
pleasure.
Guys.
Have a great day.
Fantastic conversation. Todd That was awesome, man. I'm so excited to take a deeper look into CBD Unlimited as we move forward. But as we move forward in this event, we have another exciting conversation about the ever-growing and amazing market of Massachusetts, led by probably one of the leading operators domestically, at least, if not further, with Forefront Ventures. Andrew Thutt is one of our good friends here at Benzinga. He is the Chief Investment Officer at Forefront. I'm sorry, Jeremy, I know I stole your thunder with introducing him, but we love the Forefront guys over here.
Good to be here.
Glad to have you, my friend. Jeremy, this is Jeremy Burke with Business Insider. I'm going to let you take it away.
Awesome. Yeah, thanks a lot, Elliot. So if you don't know me, I'm Jeremy Burke. I'm a senior reporter at Business Insider, where I cover the cannabis industry. And so I'm really excited to talk with Andrew today a little bit about Forefront and about the emerging cannabis market in Massachusetts. So Andrew, let's just start off. I mean, who are you professionally, and why did you decide to join Forefront? I know you've been there for a couple of years now.
Yeah, so I started my career in, equity research and money management, and was looking for something else to do in 2013, 2014. And I had made an investment in Forefront, which at the time was just a consulting company in the cannabis industry. And, that investment came, into a full-time role where I, spent a lot of time, not only raising capital for the company, but I live here in Massachusetts. And so I sort of spent a lot of time, working with local authorities, trying to get zoned properly, for our aspirations here in the state. So I've been in the cannabis game in Massachusetts for 6 years at this point. So it's been a long journey, but it's turning into an incredibly robust market here.
Yeah, and I know you've had some experience at some pretty major firms like BlackRock. Can you tell me a little bit about how you've shifted from the sort of Wall Street space into cannabis, and what that's been like for your career?
Well, it's been it's been totally different. Look, I mean, and I was, as many of the management teams that I spoke to when I was, a small cap growth analyst and portfolio manager, you have the luxury of sitting across the table and saying, why aren't you executing better? Why aren't you doing better? And, sort of switching to this side of the table, we brought in a lot of investors into, what we think will continue to be an incredible growth opportunity, a generational growth opportunity. And, sort of had to put your operator hat on. I think that in the early days of cannabis, going back, or cannabis as we know it in 2014, 2013, there are a lot of folks with, a lot of grand ideas, and, geez, we want to be in 15 states. We want to be in 20 states. And, I think the biggest lesson that we've learned is that, you have to really focus, and you have to have, very deep operational benches to really pull this off. So, it's 20% story, 80% execution in this industry. And I think that, we've learned that lesson over and over and over across the years here.
Yeah. Andrew, let's talk a little bit about Massachusetts. It's been over 2 years now since the state legalized cannabis. There's, a number of dispensaries open, but there are still some kinks that the state is working out. I've seen some estimates that, the cannabis has brought around 15 million in tax revenue to the state. Can you talk a little bit about the effect of legalization in Massachusetts with that 2-year benefit of hindsight? And maybe a little bit about what other states could learn from Massachusetts' example?
Well, I think Massachusetts is a unique state in that there is so much control at the town level here. And so, going back to 2013 and the original medical the original medical licenses that were granted, there were a lot of folks that sort of said, yeah, we want to put a dispensary in XYZ township, and we've talked to them and they say it's fine. And, it turns out that the town sort of said, no, we have no idea who these guys are. And so one of the things that's been really difficult to navigate in Massachusetts is you need the towns to sign off on you being there. And the towns are very, protective. Whereas if you went into Florida or you went into Maryland, things are sort of managed at the county level. And so forming those relationships with local officials and forming that trust that you're going to be a good citizen and a solid operator, it takes time. And so I think that, as I look at how Massachusetts has developed, I think it's been a little bit slower than other states. And I don't think that that's, because of bad intentions. I think it's because, largely because, they put so much power in the hands of the towns as they rolled out. And so for us to do business in every town, you have to have an agreement basically that says, they call it a community host agreement, which basically says, to do business in our town, we get some percentage of your revenues. And so working out the zoning and working out those host agreements has gummed up the works a little bit. And, having gone through that ringer already, we're really happy that, with the results and certainly it's paying off, but, the original process has been pretty slow.
And just to back up, I know you mentioned that Massachusetts has this sort of unique example of town or city councils having a lot of power and decision-making power over the companies that operate, within their jurisdiction. How do you establish those relationships? I know there's probably some opposition, whether it's, stigma or just different political views to cannabis and to having cannabis sold legally, within those towns. Like, how do you broach that gap, and how do you get some of these lawmakers on side?
Yeah, I think they're coming. And I think that, look, when I first started, meeting with these folks, sort of said, hi, I'm Andrew. I've got 3 kids. My wife and I live in the next town. We are, this is my background. And they sort of said, oh, wow, well, you're a weed guy. And so, they sort of head scratched that I would have come from, a more traditional Wall Street background to go and do this. And so was the first thing, but then you have to do business correctly. And you have to make sure that you're compliant and make sure that, you're very responsive to if they have questions. And so largely it was an education process. But I would say that, we've kind of evolved to the point where, having a weed, having a cannabis dispensary in a town or having a grow facility in a town, people think it's scary. Is this going to get into the hands of our kids? And geez, could high school kids break into that grow and run off with the plants? And those are the kind of questions we were answering for 5 years. Now we kind of had the benefit of some history behind us, where in Massachusetts, there have been precious few examples of, dispensaries being broken into, or, certainly, I mean, these things are like Fort Knox. We had in our original applications in Worcester and other places, we had, military grade security professionals with us as we pitched these towns. And I think that, what we're finding is that, people are getting more and more comfortable with the idea of cannabis. Okay, it didn't bring down the town into, despair and didn't bring unsavory folks in. Cannabis consumers look like you and me, and my grandmother and my friends that I grew up with. It's not, people had this scary image in their head of how this was going to go. And it's just been really smooth. And, people walk by a cannabis dispensary or a cannabis grow, and it's no different than any other business in that town.
Yeah. So one of the major arguments that a lot of states throughout the Northeast have had this year in legalization is giving, tax revenues this much needed boost from the pandemic related deficits. There are some estimates that Massachusetts dispensaries have brought in $1 billion in sales, since they opened in 2018. That's obviously a huge number. But when states talk about budget deficits, those numbers are far larger. Do you give credence to the argument that, New York should legalize for that revenue question, or are there other reasons that New York should legalize as well?
Well, I think there are just myriad reasons that cannabis should be legalized. There are social justice issues. There are, patients in need. There, we could go on the rationales for why it should be legalized, but to sort of drill down on, the revenue issue in particular, we are seeding this industry in states where it's illegal. We are seeding this industry to, the illicit market. It's like, here you have in this country $100 billion-ish industry. And, you know, you have you have more than half of it, or, you know, 75% of it at this point, which is still untaxed and unregulated. Like, that's nuts. It goes on, you know, this is a product that's enjoyed for, you know, recreationally and for medicinal purposes, has been for thousands of years. You know, let's create jobs, get the tax revenue in the coffers, and regulate it and make sure that people have clean and safe product. So, you know, I think I follow John Fetterman, who is the, you know, Lieutenant Governor of Pennsylvania, who is a huge advocate of legalization in that state. And it's just, you know, he has a very matter-of-fact way of promoting cannabis legalization, and it's really tough to poke holes in. It's like, hey, there's this industry that already exists of a plant that's safe. Let's regulate it, tax it, and bring it out of the shadows. And there's job creation and tax revenue that come along with it as added benefits.
And for Massachusetts in particular, I know there are some issues and kinks that lawmakers are still trying to work out with legalization. And as I understand it, there's been some new developments around cannabis delivery. Can you discuss those developments and some of the, you know, some of the debate around why that was such a contentious issue?
Well, I think the context for why, you know, again, you know, when we first spoke with the, you know, we're open on the east side of Worcester, which is the second largest city in New England. And when we first spoke to the officials in that city, you know, we walked in there with a military security consultant. You know, these guys had secured military bases in Iraq, and we were bringing them into our pitch to the town to talk about how secure these facilities are. And then you fast forward 5 years, and people say, you know, we're making the jump from, you know, needing that type of security to be able to drive around, you know, cannabis like a pizza. And so that's where, you know, the jump goes. You know, is there going to be crime? Is there going to be diversion? Is it going to get into the hands of minors? And that's sort of been you know, it's just been one more step that people have had to get comfortable with. You know, I think that I've gotten a lot of calls from investors, you know, just on our thoughts on delivery in the state in general. And, you know, we look at, you know, our two facilities. We have a dispensary and a grow in Georgetown, which is up near the New Hampshire border, and another one in Worcester, and then a third opening in Brookline next quarter. And, you know, out of our two open facilities, you know, we're seeing about 800 to 1,000 customers a day that are coming into our stores, wanting to have that buying, wanting to have that experience of being in a store and speaking with someone who, in a consultative way, seeing what's on the menu today, having that buying experience. And, you know, we've had investors that have asked, you know, are you worried about delivery and how does it fit into your business model? And we sort of said, well, we can do delivery and we're not scared of delivery at all. Like, we think that, you know, we offer a really quality product at, you know, what I think is the best price in the state. And we have experience with delivery in Michigan, and, you know, we've done it places. But by and large, the way, you know, from a business model standpoint, you know, we think our customers like to come in our stores and have that experience. And we get 1,000 people-ish through our two stores a day on average. You know, juxtapose that to, you know, loading up a delivery guy with, you know, 5 orders and having them go drive around the countryside all day. You know, having in-store is a much better business model, and with higher margins, and we think a better customer experience. But, you know, if our customers are increasingly demand delivery, like, that's something that we can certainly pivot to a little bit. But it's nothing. I don't think it's anything overly disruptive as you look at the rollout of this industry right now.
Andrew, we just have about a minute left here, so let me turn to Forefront.
Yep.
You know, can you give me some top line initiatives for maybe the next 6 months to a year, and any broader expansion plans that you may have?
Look, Forefront is, you know, our story is really simple. We are probably the lowest cost producer, one of the lowest cost producers of products in the country. Our products dominate Washington State. We're the #2 flower producer Our brands are, top 10 across every single category. We have 25 brands, thousands of SKUs of product. And our thesis is taking those established brands that have done really well in one of the most competitive markets in the country, and we're porting them into 4 other states right now: Massachusetts, Illinois, California, and Michigan. And we have a license pending in New Jersey. And what we have seen, we started this process in earnest about 15 months ago, and the progress we've seen from porting those operating procedures and those brands into Massachusetts in particular have been astounding. As we've started the year, we're seeing yields, average yields, approaching 500 grams a square foot, which is amazing. We think that's over double the MSO average. And really what you need to understand is that there's a ton of elasticity in the cannabis market, meaning if you can offer a customer a really good product at a great price, you're going to take outsized market share. And because we are low-cost producers and we figured all this out in the Washington market on how to produce it all at low cost, we're able to give it to people at a really low price. And that is playing out in Massachusetts right now in spades. And we've introduced all of our products into this market. We're finding that we're taking a ton of market share in this market because we give people a great experience. We have availability of product, consistency of experience, and then price. And so we plan on stamping that out across every state that we're in very methodically. And the early results of that thesis are terrific.
Awesome. Well, Andrew, thanks so much for the time, and I appreciate connecting with you. I'll turn it back to Elliot.
Appreciate it. Great to be here as always.
Jeremy, Andrew, much appreciate you both joining us for a super interesting discussion on Massachusetts and Forefront. Looking forward to seeing Forefront's growth over the next year, my friend. You all enjoy the rest of your day. Please do reach out to Andrew and team for some meetings. I hope you'll take them. All right, guys.
Thanks.
Wonderful. All right, so before our next presentation, the one, the only George Allen from Indus Holdings, that is OTCQX INDXF CSC INDS. We do have a bit of a disclaimer, if you will, that I need to read due to this morning's announcement from Indus Holdings that they have acquired the Lowell Herb Company and Indus upcoming Q4 and 2020 fiscal year financial results on March 1st. George Allen will not be taking Q&A at the conclusion of the Indus presentation. Sad times for Elliot. Viewers interested in asking questions about Indus are advised to call in and listen to the company's earnings call on March 2nd. George, we are happy to have you. I will resist the urge of inquisitiveness, and I will let you take it away, my friend.
Great. I'm super excited to be here today. Thank you so much to Benzinga for putting on what is another fantastic show for the inquisitive cannabis investors out there. We are very excited today. I couldn't be more thrilled than I am. We've got some fantastic news today. The company formerly known as Indus Holdings is merging with Lowell, and we are renaming the company Lowell Farms. And I'm super excited about it. It's a transformative transaction for us. And before I go through the presentation, it's worth going through some sort of a little bit of background here. I've followed this brand and this story since my earliest days in cannabis, and I've always thought that this brand is different. This brand is one that represents an authenticity as well as an accessibility for cannabis that I think is truly remarkable. I'm really proud to be associated with it. And from my perspective, I have watched this company grow and thrive and gain, gain mainstream adoption among consumers. And I've always really been drawn to it. I always thought it was something different than what was going on in the rest of the cannabis. Now, historically speaking, our business was really based around the primary objective of winning based on value. And value, for the most part, is how products are sold in a dispensary. Consumers walk in and they're looking for the latest deal. they're looking for, you know, sort of new products and innovation, and what they're really looking for is THC. I mean, THC is a very, very compelling product. I like to say it's one of the few products in all of history that actually lives up to its promise. Now, with saying that, we haven't historically focused on brands, and the reason for it is that there are very, very few brands to focus on. But Lowell is one that I believe is fundamentally different. Lowell is a brand that not only is a personal choice for consuming cannabis, but also one that consumers bring and they share with others. And so from my perspective, I've always thought that Lowell has a virality to it that other cannabis products don't have. If you think about the vape pen or an edible product, there's no virality to those products because they're usually consumed in a highly concealed manner. And that is 100% different than a box of Lowell Smokes. If you've ever seen Lowell Smokes at a party, you know that people can't keep their hands off them. If you put a box of Lowell Smokes on a table, everybody wants to feel it and understand the package and look inside. And you know from looking at the package of Lowell Smokes that if they put so much effort into the packaging and into the presentation of the product, what's inside must absolutely be phenomenal. And that is exactly how I got hooked on this brand a long time ago when I first saw it. And it is really, truly a dream come true to bring together what we've done today, which is take Indus Holdings, which has real leadership in cultivation, real leadership in distribution and manufacturing, and unify it with what I believe hands down is the best brand in all of cannabis. So if you'll humor me for a second, I'm going to try to put up my screen here. Here we go. So this presentation is available on our website. So please feel free to go and take a look at it. You can download the presentation on the investor section of our website. So today we're announcing the rebranded company, Lowell Farms. It will trade in a couple of days under the ticker LOWL.CN in Canada and LOWLF here in the US. I've always said that we are preparing at Indus and now Lowell for a nationwide marketplace in cannabis. I believe that's where we're headed as a country, 100%. And what you can see is the brand power of unifying a brand that is universally acceptable and universally adopted with a massive cultivation footprint here has huge, huge merits. So let's walk you through the presentation. So let's just talk a little bit about the mechanics of the transaction. We're merging the two businesses. This is not a transaction announcement to be completed at some future date. This transaction is announced today, and it is completed today. As of this morning, we've acquired the assets of Lowell Herb Co. and integrated the business into ours. The new company is going to be called Lowell Farms, Inc., and it's going to trade, as I said, under the two tickers. The total consideration here is just over $38 million, with $4.1 million in the form of cash, and the balance being in the form of stock, which it causes about 9.3 points of dilution for our current investors. So let's talk a little bit about Lowell. If you know cannabis, there is a very, very good chance that you have seen or heard about Lowell. Lowell is a premium California brand. It has an extremely broad level of reach and audience, and that has manifested itself both in sales as well as the virality of social following, which we'll talk about in just a second. It has a very strong reputation of authenticity and heritage and organics that is really fundamental to the brand and fits actually entirely well with how we grow our product and our internal culture. The business to date has been manufacturing in Los Angeles. Now, Lowell manufactures a handful of SKUs and they self-distribute them across the state. And that's something that's really important and gives us a lot of synergies. The company is very well regarded in the category, but it has had its challenges. And I've talked about this on investor calls in the past. Basically, the answer behind cannabis is if you are trying to build a brand but don't have the underlying infrastructure or upstream cultivation capacity, your margins get really stressed in this industry. And so one thing that this business has done, they've done a phenomenal job of creating a connection with the consumer, but margin pressure is definitely strong. And they've actually had some missteps as well from a management perspective. Those are things that we go into eyes wide open with this brand because we know the dialogue that they have with consumers, and we think that it's something that we can build upon using our infrastructure and our team and culture. Historically, this business did just under $15 million in revenues last year. So I think one of the things that's really phenomenal about this business is and manifests of how strong this brand is, the connection it has created with consumers. And really, there's no better way to see that than the social media audience that they command. There's only one company in cannabis that has a better social media presence than Lowell. And Lowell really dwarfs brands that are sold in much wider audiences and markets. And the reason for that is that Lowell is really the first business in cannabis to create a product where the primary thing about that product is showing off the use of that product. Lowell is the first product that I have ever seen in all of cannabis that invites cannabis into the party. It's the centerpiece of the party. It's not five guys stepping out of the back of the party to go get high and then come back to the party. Lowell is the party. And that's really one of the fundamental things that very few people in all of cannabis have yet to grapple with. You have to bring cannabis into the party if you're going to create real brands. Otherwise, the only thing you can do in brand creation in all of cannabis is convince people that your product is better. That is a very, very, very challenging thing to do. But what you can do is convince people that they have made a very good choice and that they've made a choice that is a reflection on their own personal style and taste. And that's really, it's what the heart of Lowell. You don't need a PhD in OG growing. You don't need a PhD in bud size or nose or the proper color of a cannabis bud. What you need to know is that Lowell has made a phenomenal decision to put great product that reflects the same quality on the outside of the package as is inside the package, and that you're making a good, educated decision. And when you show up at that party with Lowell Smokes, you show up having made a phenomenal decision. And that is branding that we think we can extrapolate all across this country. And that's our plan. Let's just talk a little bit about their products. To date, Lowell really is anchored around their core business, which is this packaged pre-rolls, right? You can see it on the left-hand side of this screen. It's all about the package of pre-rolls, and there's a majesty to this product that I think is highly unique. If you go and look at some of the best reputation flower brands in California, none of them have even come close to what this brand represents and means. When you open a box of Lowell's, you're in a ceremony. You're enjoying a process that says, wait a minute, you're about to enjoy something really, really magical. And then you open the box, you slide out the carton, you take out a match, and you light the pre-roll. There's something about it that's extremely special. They followed that product up with their jarred flowers products, which has a unique origami box to it, which is extremely popular with consumers. They also sell individual pre-rolls, and then they have a line of concentrates that ban anywhere from really innovative cold press, which is a live rosin product, vape pens, all the way to dabbable concentrates. So it's worth going a little bit into why we're doing this transaction. If you and I have spent any time together in the past, you know that one of the things I've said in the past is that there are very few brands in cannabis, and that brands, most brands don't really matter in cannabis. And that's because very few consumers walk into a dispensary looking for a specific product. They walk into a dispensary looking for THC and they look for a deal. But they also walk into a dispensary with a product that they know they want to share. And that's really what Lowell is all about. So when we thought about looking for a marquee brand, there's a couple rationales to do so. We don't have a brand, we don't have a marquee sort of tip of the spear brand, and it's really important for us to get one. So I think first and foremost, we all know that cannabis has the potential to be a commodity industry. We've talked about in the past, and as a matter of fact, there are a number of presenters in this conference who talk about leading with price. Do we all want a race to the bottom? Maybe that's what the consumer wants, but the reality is if you are not starting to build a brand that means something for the consumer, you're going to end up with very slim margins and only making the margin that equals the difference in your cost of production over the next guy. Now, I think from our standpoint, having a marquee brand allows us a key product that we can use to open and maintain a dialogue with all of our dispensary customers. Now, those types of brands, they don't come around that often, and they are very, very hard to find. And there's no formula for creating them. If we were to try to build a brand like this, budget would not matter, because a brand is really a lightning strike. It's looking for that point where a connection is made with the consumer, and it's very hard to replicate that regardless of your budget. So we believe that a premium brand can really help pull the balance of our products. We sell a suite of products into dispensaries. We also will participate in the value-based offering. But a premium brand allows us leverage to gain shelf space with the balance of our offerings, which are competitive with alternative products that would otherwise be on the shelf at that dispensary. But the problem is, as I said, there are very few real brands. Lowell's different. Lowell is a premium brand that has an accessibility and a reverential image that has become truly iconic among cannabis consumers. It has a huge following among both mainstream consumers as well as diehard cannabis consumers. If you know diehard cannabis consumers, they may not always smoke Lowell's, but they smoke Lowell's when guests come over. And that's really important. That's the brand that they choose to share. It's very difficult to replicate a brand like this, and we found exogenous circumstances here that made this transaction palatable from us from a dilution standpoint. Now, this brand, I fundamentally believe it. If there's a brand in this country that is ripe for nationwide mainstream adoption, this is that brand, and we are going to do everything in our power to make that happen. Now, look, the tailwinds here are strong. I think we all talked years ago about how flower and smoking cannabis was all going to migrate towards edibles and vape pens. That's not happened. Pre-rolls are up 65%, depending on whose data you use. We use Headsets data. I think BDS came up with 50%. Regardless, pre-rolls are moving much faster. Now, there are a bunch of fundamental issues with pre-rolls, which we are going to address with our product offering, and I cannot wait to show it to the marketplace. We are going to do very exciting things with our core products here in pre-rolls, and that's capabilities that only we can bring to this story. So I'm very excited about that. So as I said, eyes wide open, we believe that Lowell is the first billion-dollar brand in cannabis, but we didn't pay $1 billion for it. And the reasons for that is, as I said before, they didn't have their own supply chain. And for a multitude of reasons, without your own supply chain in California, it is a very difficult battle to build a brand. You're talking about extremely thin margins to cover all of the overhead on manufacturing product, distributing the product, and maintaining compliance. In addition, this company had major challenges with leadership turmoil and turnover, as well as some history some compliance history. Now, all that is over. That's their history. Our compliance history is better than anybody else in the industry. We are truly leaders at this. And we took this brand on knowing that the challenges that they had in the past are challenges that we specifically can fix. Also, Lowell suffered from a subscale distribution model. They only sold products into about 150 to 200 stores on a regular basis. That's very different than us. We service 85 to 90% of the dispensaries within this state. And so very quickly, you are going to see Lowell on every single shelf in California. So I think it's important to talk about, a little bit here about what we're going to do and how I see Lowell's potential being unlocked using the infrastructure that we have. The first is very obvious. They didn't have supply chain. We do, and it's growing bigger. We're going to bring consistent and reliable supply of the best cannabis we grow. The second is we're going to broaden the distribution and the footprint of the product and make sure that it's available to consumers wherever they want to buy it. The next is that we're going to bring infrastructure and automate the production of their products. And that's something that we have a long history in doing. We're also going to bring capital in for what I believe is the necessary and ripe opportunity for broad-based marketing for this product. Again, I believe this product is ready for mainstream consumption and ready to be the first nationwide brand for cannabis. To do that, we're going to have to tell our story. And lastly, I think the other thing we have is we bring to the table a diversified capability around manufacturing different products. You'll see new SKUs show up underneath the Lowell brand and banner in packaging and brand image that is entirely consistent with their brand legacy. So that's how we're going to do it.
That's awesome.
So
we do need to wrap up here, George, if you can give us one final thought.
Okay, great. So I'll take you to the last page. Listen, the new Lowell Farms, cultivation at large scale. We have a 225,000 square foot grow house, and we're moving that. We're in plans to move that to well over 1.5 million square feet. We've got diversified manufacturing capabilities. And today we've just announced that we've acquired the best brand in cannabis, and we have the distribution capabilities to bring that to every single dispensary in the state. If you have further questions about what we're doing and what our plans are, please feel free to reach out to us on our IR portal on our website. Thank you very much for your time today. I'm super grateful.
George, we are thrilled to have you. Lowell Farms, that is ticker LOWL.CN, if I'm not mistaken, George. Again, that website is, one more time?
LowellFarms.com.
LowellFarms.com. Fantastic. I have a ton of questions, but I'll wait till after your earnings call when you're on Cannabis Hour with me, my man. We'll get to those soon for sure. But
thank you.
Yeah, happy to have you, George. Fantastic. Awesome presentation. Incredible insights into an exciting announcement and company. More questions to come for George and their exciting expansion. But we have 3 more pretty fabulous pieces of content that I'm super excited to hear as well. I'm going to bring Jeremy Burke from Business Insider back over. He is the man with the plan, and I'm actually going to let you introduce the next guest, my friend.
Yeah, no worries. Thank you, Elliot. I'm here with Louis Reformina, the Chief Business Development Officer of Turning Points Brands. So I'm really excited to talk to Louis, and I'll get right to my questions as I only have 15 minutes. So Louis, could you just walk us through your quick bio professionally and how you decided to join Turning Points Brands in the first place?
Sure. Yeah. Thanks, Jeremy. I spent 20 years before joining Turning Point Brands in Wall Street, started out in investment banking, worked in private equity and also in different hedge funds. What really attracted me about Turning Point was just the strength of its brands. It's kind of timely to follow what George mentioned. I'm a believer that brands are important, and I think brands are going to matter in the cannabis space over time. And what we have is basically one of, if not the most iconic brands in the cannabis space, with a history that dates back 120 years. You know, we've done surveys on the recognition of the brand, and Zigzag has aided awareness of 71% in the cannabis space. The next brand was 48%. So it just gives you the strength and the potential of the brand. Now, the company for a period of time was under distress. There was too much leverage on the company, and because of that, we weren't able to invest properly in the brand. That has now changed. The company went IPO in 2016. The company went to IPO. I think someone's phone is ringing.
Hello?
Oh, sorry about that, y'all. Sarah, thank you.
Yeah, sorry. Yeah.
It's all good.
So, the company went IPO in 2016. We now have over $150 million of cash on the balance sheet to invest. So what we've done is now reinvested into the brand. And you saw the early results of that in 2020, where we grew the business over 22% and 47% in Q4. So I think that the opportunity to turn around the Zigzag brand and reinvest in it was something that was appealing to me. It was something that I've experienced before in other consumer brands in the private equity space. And now you have a brand that is incredibly strong with secular tailwinds ahead of it, especially with the increased consumption of cannabis going forward.
So right now, I cover the cannabis industry every day, and right now companies are trying to get in early and develop brand recognition now, so 10 years down the road, they can be these giant consumer companies, and there's a huge sort of green space to do that. Can you tell me a little bit about the opportunity that Zigzag in particular presents, since it is one of the very few actual legacy brands in the space, and how that might differ, the Turning Point's portfolio from other companies who are kind of trying to create that right now?
Yeah, so I guess, as you mentioned, a lot of companies are trying to create what we already have, which is a nationally recognized brand, and you can't match the 120-year history that we have with Zigzag. So we think, from a potential standpoint, right now we're playing in the cannabis accessory space, right, with our rolling papers products and our wraps that are primarily used for cannabis. There are extensions that we can make into other product categories in the cannabis accessory space that will multiply our end market reach. And at the same time, I think there's huge optionality to the brand going forward. We are restricted today because we are a New York Stock Exchange listed company in terms of what we can do with the brand. But imagine with federal legalization, what the value is and what the potential is with Zigzag in terms of where we can be. And the products that we currently offer, the market size is probably around less than 500 million. Cannabis is a $20 billion market going to 40 billion. So we're excited about the potential of the brand going forward. In the short term, there are a lot of, for example, cigarillos is a market that we are not currently heavily in today, which is a $2 billion market. And that's a market that's also used, that's a product that's used for cannabis as well. So there's the short-term potential in terms of extending it into markets that are, kind of more cannabis accessories, and the longer-term potential on what we could do with a brand when there's federal legalization.
Hi, my name's Jeremy Burke. It's not, but I think we did lose Jeremy.
God, sorry about that.
He is back, man.
My computer just froze in the middle of that. So thank you, Apple, for being so kind there. Yeah, Louis, I'm sorry. I missed the kind of end of your answer there. But I would kind of like to turn to the future prospects for the brand. I mean, like we kind of mentioned, you have a huge white space here. You're better capitalized. Where do you hope to grow the brand? Let's say, give the top line initiatives for maybe the next 6 months and then maybe the next 2 or 3 years, if you could.
Sure. Yeah. So just to give a little history in terms of kind of what we did going into 2020. So as I mentioned, the brand was underinvested, for a period of time because of the leverage that the company had. We are in a different position today. So in terms of the short-term potential, what we did in 2019 was address some of the glaring holes that we had in the market. So that was both from a product and channel perspective. So from a product perspective, one of the growing pieces of the market is paper cones, which is essentially our paper booklet that is already pre-rolled with a tipping. So that was already a large and growing piece of the market. We weren't in that until 2019. That became 10% of our sales in our papers business in the second half of 2020. And we're really just starting the ramp of that product category. And this year, we've got a number more product launches that we will get into with the Zigzag brand that will further extend our market potential there. The other thing that we did in end of 2019 was build an e-commerce business. We had a strong brand with Zigzag, with good consumer reach, but we weren't reaching a piece of the market that a lot of consumers now prefer purchasing from, which is Amazon, B2C, our own website. So that business did not exist for us again in 2019. That was in our papers business, over 10% of our sales in the second half of 2020. And it was just starting to really ramp. So we're excited about the prospects of our e-commerce business going forward. And then the other thing that was happening from a channel perspective is our strength as a company had resided in convenience stores. We touch over 210,000 different outlets in North America. So I think that positions us very well from a competitive standpoint, especially once the cannabis market opens up. But the growth, at least in our product, the paper booklets, was happening more in head shops and dispensaries, especially as you saw legalization. You would see consumers shift from purchasing from the convenience store or the gas station to going ahead and purchasing it at a dispensary or the head shop next door to that dispensary. We didn't really call on those customers until last year when we developed a strategy. So that benefited our growth in 2020. We still expect that to continue to ramp for us this year. So you kind of, there were several other initiatives that we put in place last year, and you put it all together, this business segment that didn't see much growth from us since our IPO in 2016, grew 22% for us in Q4, including 22% in 2020, including 47% growth in Q4. And we think we're just starting to really realize some of the benefits that we had. So in terms of kind of where the growth is coming from, I view 2020 really as kind of a phase one of what we're doing in turnaround the Zigzag business, and that, we fixed it and we are learning, and we're still learning from some of the things that we're doing. 2021 is a year of investment. So now we know where we have levers and where we have seen strength in the business. So we're investing further in e-commerce. We're expanding our sales force that goes into head shops and dispensaries, and we're going to introduce even more new products. And then so that is the phase that we are currently in today. And then the next phase for us is really innovating the product, being first to market of form factors that don't currently exist or are currently small in scale. Right? So, the past decade, we've really been, because, the underinvestment, we've been followers in the market. The next phase to make Zigzag an even stronger brand than it is today is to come out with some of these new form factors. And we'll start doing that later this year, and we'll be announcing those as we kind of come out with those products. So that's the really exciting phase that we have beyond what we're currently doing.
Can you, sorry, my internet is just struggling here, so I'm going to try and get through this last question here. I wanted to talk about the advantages that Turning Point Brands has on being a U.S. listed company versus some of your Canadian counterparts. I mean, that gives you access to deeper pocketed investors, but how does that factor into your growth plans? And why is being listed on the New York Stock Exchange a better basis for growth than some of your Canadian counterparts?
Sure. Yeah. So one, we're not plant touching at the moment. And so we're able to raise capital on the side. So we just raised a high yield offering. So now we have $150 million of cash on the balance sheet. The unique thing about us relative to other companies in the cannabis space is we actually generate a lot of free cash flow. We have a asset light business model where brands are our strength. So this year we're guiding to over $100 million of EBITDA. Our CapEx is going to be somewhere around $6 million. So not only do we have this capital on our balance sheet, we've got free cash flow that we're generating with our businesses, which we can make investments, further make expanded investments into extending the Zigzag brand, and also acquiring different pieces of the supply chain in acquiring, increasing our exposure in the cannabis space. So we just did an investment last year in Doses, which is one of the leading brands in the cannabis industry in California. And it's one of these structures that convert into preferred shares once there's legalization. But I think the main advantage of being New York Stock Exchange listed is this access to capital and our ability to reinvest into Zigzag and into the cannabis space.
Let me sneak in one more question here because my internet is actually working, and I'm happy about that. But Louis, from where you sit, what are some of the broader M&A trends that you expect to see in the cannabis industry this year? Both on the ancillary side and the plant touching side, and any deals you're expecting to see or any kind of significant trends that are on your radar.
Yeah. So for us, as I mentioned before, the products that we are currently in at the moment with Zigzag, it's mostly rolling papers and wraps. The market size for those products is less than $500 million from a manufacturer standpoint in the US. There are other product categories that can significantly expand our exposure to bigger markets. For example, I mentioned cigarillos. That's a product that we have, but we're not competitive in it because of our supply chain. So we'll have to acquire pieces of the supply chain there. And we have an incredible brand in Zigzag that we can kind of leverage off that. That's a $2 billion plus market. So, kind of getting into that space will multiply our addressable market by over 5 times. I think, as George mentioned earlier, brands are going to become increasingly important in the cannabis space. And I think you'll see more transactions that will position people with strong brands as we kind of head into kind of the next phase in terms of cannabis growth, which is bringing in new consumers, and new consumers tend to gravitate towards a product they can trust and a product that has consistency. And brands, I think, is a great avenue to give to the consumer for that.
Great. Louis, I appreciate the time as always. And Louis and Elliot, thank you for bearing with me. I'll get my router fixed next time, but I appreciate that. And thanks for the excellent discussion, Louis.
Thanks, guys.
Good moderating. Good save there, Jeremy. Louis, happy to have you, man. I didn't know about the investment into Doses. That's really cool info. Maybe I'm just uneducated. Maybe probably the audience is a little bit more educated than me. But
that was a good Jeremy impersonation.
I like that. Yeah.
I don't know how you would give that. How would you rank that impersonation?
Let's say I'll give it a 7.5 out of 10. Good,
right,
but room for improvement there. Yeah, exactly.
Maybe I shouldn't have left the acting career. I should have stayed in it.
That's right.
Gentlemen, appreciate you both
Thank
being
you guys.
here.
Yeah,
Jeremy Burke with Business Insider, Louis with Turning Point Brands. We should all know them and love them. NYSE TPB. Great. Thanks again, gentlemen. Talk to you soon.
Thanks, guys.
Thank you.
All right. So we have had just a long list of just leading companies in the industry talk to us about their expansion plans, both in THC, CBD, marijuana, hemp. I am so excited for the next topic. It is led by a good friend and colleague, Anthony Noto, who hosts Cannabis Hour with me every now and then. But this has been a topic I have been waiting for multiple events, and I finally won out, and I'm so glad Tony's leading the discussion. I will turn it over to you, my friend, to introduce our panelists.
Thank you, Elliot. And everybody knows you can Daniel Day it better than everybody.
Hey,
so
I paid you to say that.
Thank you for that warm introduction, Elliot. And I'm certainly happy to be hosting this exciting panel with Damian Morano, CEO of Docklight, Deanie Elsner, CEO of Charlotte's Web, Jason Mitchell, CEO of Hemp Fusion, and Nick Tennant, the founder of Precision Extraction Solutions. So welcome, everybody. How are you?
Great.
Everybody's got their mute button off. Everybody's good? Okay, great. Well, I want to start because this is a very broad topic, and we have just under 30 minutes to talk about it. So I guess the best place to start is just to remind everybody that the cannabis market is worth $46.8 billion, or projected to be worth that much by 2025. That's according to Dan Ahern's from earlier in this event. I hope you were tuning in. flower dominates the segment, but CBD has the second largest. And so considering it's one of the most therapeutic and healing parts of the plant, a lot of companies are into it because if there's one thing that brings us all together, might not be looking for that THC, but we all have aches and pains, chronic pain, inflammation, anxiety, we need sleep support. As Hemp Fusion knows recently, they have new products on the shelves for that, and other chronic disorders. So when you look at the CBD landscape, every day there's new news and exciting announcements coming forth with regulation and the loosening of laws and such. And so right now, I would love to get everybody's first impressions of where the market is today. When you look at the CBD industry right now in 2021 and today, what are your impressions? Are you excited? Are you optimistic? Are you cautious? And I would love to start with Deanie, and then we'll work our way around to Damian, Jason, and then Nick.
Absolutely. CBD market today, incredibly optimistic. It comes in large part based on consumer trends. So one of the biggest mega trends is the global wellness awakening. It's being led by millennials. Millennials are the biggest demo globally. They're beginning to reject pharma and synthetics and move towards natural botanicals as alternative remedies for some of the challenges they have. And so you've got this wellness awakening, you've got millennials coming into the marketplace, and then unfortunately we've got the hangover of a global pandemic. The legacy of this pandemic is going to be on mental health. And so regardless of what you look at externally, every indicator is saying CBD and the move to botanical wellness is not only a category for today, but a category going into the future. We are well positioned, well capitalized, and incredibly optimistic about the growth opportunity.
Just a quick follow-up for Deanie before we jump to Jason. When you look at millennials, is there a way to zero in specifically? Like, I'm thinking athletes. That's the first category that I think of. Like, you have a lot of CBD brands that bring in noteworthy athletes as brand ambassadors. The Rapinoe sisters, in particular, Marc Messier grabbed headlines this week to support CBD brands. Are you seeing more buying power in that sect?
Athletes are important because they kind of get to the first leg of what CBD is connected with, and that is pain management and inflammation. So they are a great endorser, and Rob Gronkowski is one of the athletes we've got on our portfolio. But more broadly than that, when you look at the category, about 40% of consumers come into CBD because they've got actual health conditions that they're trying to address. 60% of consumers are coming in because they just want to feel better every day. So when you think about how you segment that consumer, in large part being led by millennials, there's a lot of influencers. When you look at the healthcare practitioner channel, 50% of people come into this category because their healthcare practitioners tell them to come into the channel. And that is in large part a driver for our acquisition of Abacus Health last year. 75% of the portfolio was through the healthcare practitioner channel. And so I think to succeed in this category going forward, you've got to find the influencers, you've got to find the distribution paths and the credible folks who are going to help consumers make the move into the category.
Jason, where are we in 2021? When you compare it to 2020, the scenario is quite different. How do you feel?
You know, we remain incredibly optimistic, and it has a lot to do with the fact that we're starting to see scientific organizations, medical organizations that are starting to embrace a great deal more now the research to unlock these mysteries that have eluded medical professionals for decades. And this is probably the biggest driver for me because I'm a board certified naturopath. I look at the science of the body. I look at understanding how can we use this? You know, Deanie mentioned about pain mitigation and things of that nature. I look forward to the research that will eventually land, hopefully, putting CBD and other cannabinoids in a driving position of an alternative to things that are currently being used in that area. Okay. Because I believe that we have a very serious epidemic of people addicted to medications that probably shouldn't even be on the market, in my humble opinion, because of the harm they can do to family structure, the body, and so on. And so if there is a more natural, a more hopeful opportunity or exchange for that, I think that's very promising. But what I'm most encouraged by is that I think the market in general, I think consumers are becoming more increasingly aware. If you were to go back to the Gallup poll in 2019, they estimated about 14% of Americans had tried a CBD product. You've advanced 1 year, it's 33%. Yeah. So it's growing at a very rapid rate. People are interested. I still think they're a bit confused at exactly what it does. And I think even the scientists in large extent are kind of confused because every time they look at it, there's a new opportunity within CBD and other cannabinoids. I'm also optimistic about the fact that I look at it and say, okay, people are stopping this myopic approach of just looking at the singular molecule CBD. You know, one of my favorite phrases in medicine is "let food be thy medicine," Hippocrates, right? What I don't like, or what I don't like, is so many people's focus on those isolated nutrients. You know, what he didn't say was let a singular isolated, identified in a lab, you know, studied for some double-blind placebo-controlled. No, he said let food be thy medicine. And when you look at this, there is more than CBD in this beautiful plant. There's CBG, CBC, and so many other countless cannabinoids, flavonoids, and so many other compounds. I think the expansion in looking at this is going to open up the market into so many different directions and opportunities to where I think it'll be innumerable. We won't really know the full opportunity. And so I think where we're at today, I think is only scratching the surface. The opportunity for tomorrow, as regulations move in the right direction, which I think is where they're heading, I think we're going to be in an amazing place to develop not a CBD category, but in a very broad hemp category that I think is going to be incredibly valuable. So I'm unbelievably optimistic and look forward to the next steps. In fact, we're already kind of planning that ourselves as to what is next.
Excellent. Damien, do you echo that sentiment, or do you feel differently?
Oh, no, I mean, 100%. I mean, just what was previously said was right on. And I think the focus on wellness in the context of studying all the minor cannabinoids that have yet to be kind of fully studied or isolated or brought out in a product at scale is what gets me really excited. And it's it's barely the top of the iceberg, less than 20% that you're being seen.
Mm-hmm.
I also think kind of what was said previously is, you look at, gaining distribution to get it in front of consumers. It seems to me that almost every retailer in America is bullish on CBD as a category broadly. There may be a little bit of noise around form factor and some kind of recalibration about what they put on the shelf, especially kind of given current regulations. And I would say, the most interesting thing for me is personally, I joined my company from Coca-Cola. I started getting into CBD, kind of like what James was saying, is I needed an alternative for pain relief. I have some arthritic conditions, and I had a choice of surgery or deal with it. And so I, took it upon myself to learn about CBD and its benefits before I was in the industry, and was kind of cautiously optimistic, took it, and it has done wonders for my condition. And I always like to share that with people when they ask me, why did you leave Coke and why do you do this? And I say, well, this works for me. You might have a different effect, but I'm consistently amazed at how well the product performs to allow me to do what I would like to do physically. So I think I agree. I think that we're kind of at the start of the parade, not near the end or the middle. And I think it's going to be very, very interesting to see how consumer awareness scales with consumer information and how that grows and builds the category very broadly over the next short period.
Yeah. Nick, you have sort of a different perspective as you're involved in the extraction space. What were your impressions coming into 2021 when it's after a really, really incredible election day in November?
Sure,
2021 definitely feels different than the scenario in 2020.
Yeah, I mean, so I share my colleague's sentiment with the return of the bullish market surrounding CBD, right? I mean, everybody was a little bit beat up, not only because of the boom bust cycle of 2019 to 2020, but also the pandemic and so forth. So that's obviously hurt a lot of businesses. But as we see in our business, because we're an upstream supply chain vendor, we see the infrastructure being built more. We see everything in the CBD industry and the hemp industry becoming more bullish. So we think that there's going to be more infrastructure that's needed. There's going to be more consumers ultimately consuming, and therefore it's good for everybody as a whole, especially the people speaking on this panel. To follow up with the other points that were made, we think about the hemp market kind of holistically as alternative cannabinoids, right? Because there's over 100 cannabinoids that have now been identified in the plant. And the key is, how do we isolate these cannabinoids and how do we study them clinically to prove their ability to treat, cure any sort of condition in the human body? So what we do, at Precision is we make manufacturing equipment, but we're very much a technology and research development company focused. And what that means to us is we need to figure out the most efficient, effective ways to extract and isolate these rare molecules at scale in order for companies like Charlotte's Web or Jason's company or Damien's company to be able to then reconstitute these cannabinoids into specific products. And these specific products then work really well for certain conditions. And just to give you an anecdotal example, something like CBN really working well for sleep. And when we think about CBN and CBG and CBC and all these other different isomers and different constituents of the native hemp plant, if we can isolate those, study those, we're going to find that because the human body has the CB1 and CB2 endocannabinoid receptors in it, these cannabinoids are almost limitless at what they can do for human physical and mental health. So that's a very big focus. And we see that really kind of reiterated and validated by the 150 plus clinical studies that are going on right now for CBD or hemp-based products. And we think that trend is going to continue, and that's something that we look forward to.
One thing I want to bring up, which I brought up with a few of you before, was CBD labeling issues. And the purpose of this panel is to focus on the situation with CBD in this country and also abroad. But in this country, it's a problem. And I don't mean to stir the pot, but I kind of do, because there's an accuracy issue. And what my colleague, Andrew Ward, studied some data from Leaf Report a few months ago that showed 54% of products contained less CBD than the labels, contained less than 54% than this labels had. And I think that that's an issue that kind of makes the average person look at the industry as a bunch of snake oil salesmen, and it shouldn't be that way, but it is. And I want to go to Deanie, because Deanie was a special guest on the Benzinga Cannabis Hour last week, I believe. And you talked about transparency in the space. So what needs to happen to fix this?
Oh my gosh, this might be one of my favorite topics, Anthony. So this US study just identified less than 54% of products actually had in them what they said they were. A UK study identified 88% of products on shelf didn't have what they said it was on the label. And what this comes down to is when the Farm Bill Act was signed into law December 2018, it enabled a category to become accessible. So that was a great move. But it left stranded three very big stakeholders. First, it stranded farmers because everybody went out and began to grow CBD and hemp, and then there was no way to distribute, transport, or manufacture and extract that product. So stranded farmers. It put consumers at risk because without a regulatory environment to manage what's in the product, consumers are at risk to their own labels, and the FDA's got to take a stand here. Unfortunately, the category went from 250 competitors to over 3,500 competitors. It's today between $2 and $4 billion, and there's nobody managing the regulatory. It is unacceptable. It's just it's never happened, and that's got to happen. FDA's got to come in, or the Capitol Hill has to come in and set a regulatory environment that forces compliance at a very high level, and hopefully that reflects a dietary supplement. The third thing it did is it stranded manufacturers, because without federal preemption, every state has a say, and so as a manufacturer, it's a hard thing to do to manage between states your product line. So we've got to get to transparency. It's a big part of the Charlotte's Web promise. We develop, we believe, the most consistent and highest quality and most safe hemp extract in the world. We test our product lots over 20 different times. We manage our genetics, we manage our cultivation, our biomass, our extraction, our production, and our sales. And so we've got deep and broad data to share in terms of what needs to be set in terms of regulatory environment. And we've been in constant dialogue with the FDA, trying to push that agenda further. We've just participated in an objective, quantitative, broad scale category study led by ValidCare, a company called ValidCare. And they did a whole liver toxicity study on CBD. They did it by developing a protocol with the FDA. At the end of this quarter, end of March, they're going to share those results out globally, and they're in the process of sharing those results as we speak with the FDA. But that's what we need. We need companies to have transparency about what's in the product, and consumers have access to see what's in the product. And you can do that on our products with QR codes from our package. So we're big advocates in the space and believe the FDA's got to act.
Jason, what does the industry have to do to make sure it maybe escapes this tar pit in 2021?
Well, And I agree with Deanie. It's kind of one of my favorite subjects. I've been in dietary supplements for 23 years. And so it isn't just a CBD or cannabis thing. This is dietary supplements in general. And a lot of individuals, consumers and industry alike, think that there are no regulations that govern the dietary supplement industry. And that is absolutely not true. 21 CFR Part 111, part of the Code of Federal Regulations Code, specifically lays out what is required for manufacturing under CGMP, which stands for Current Good Manufacturing Practices. This is actually a really important thing that was enacted officially for all corporations of any size in 2009. So this isn't even new. And so when you look at what are going to be the pending regulations that the FDA is going to impose, it's not going to be something new. People are under this understanding that it's going to be some sort of a magical new emergence of brand new regulations for all this, for this emerging category, so that consumers can just have a free-for-all and enjoy these products from just about anybody on the market. And that isn't true. Actually, they're going to I would guess that it's going to look very much like the Code of Federal Regulation looks today. There's going to be regulations and requirements around safety. There's going to be requirements around testing. Now, the FDA, unfortunately, they're undercapitalized and understaffed to really go after the brands the way that they should. And so that these large-scale studies showing 54% of brands don't have what's in them is really, unfortunately, an occurrence of an unbelievably overexpansion of an industry that probably outgrew the consumer's interest as on how many brands can actually be available, and no ability to govern it. And I think it's us as companies that it's our responsibility to hold ourselves accountable, do the appropriate testing, and be completely transparent. Inside of Hemp Fusion, we have a term that we use continuously. It's called radical transparency. And that means that if a consumer or anybody wants any information about our products, we actually provide it freely, no matter what. Now, as far as testing goes, you have to make sure that it's not only testing that you do, but that you qualify your labs, that they're using the proper AOAC methods that actually allow for accurate testing. And that's a really important part, because until just recently, in the last 12 to 24 months, labs were quite variable on how they would even test for cannabinoid profile, or how they would test for not only CBD, but all of these other terpenes and other things. And so I believe that we're getting more sophisticated, but I think it's companies like Charlotte's Web and like Hemp Fusion and ourselves that we're working, our panelists here, that we're trying very diligently to be responsible at holding ourselves accountable, and on our websites, revealing it so that the consumer can go there, enter a lot code, and find out what exactly is in this product. Has it been tested for herbicides, pesticides? I mean, forget about for a second that it's just CBD and the quantity of CBD. Hemp is a bioaccumulator. So that means that anything in its environment, good or bad, is going to be brought into the plant. And so that means you could be putting someone at risk if they're not testing for CBD properly and they're lacking CBD, or they're not meeting label claim. What else are they probably deficient in? Are they properly testing for pesticides, herbicides, chemicals of other kinds, mercury, lead? I mean, we took a position with our entire supply chain to have complete control from soil to oil. I mean, the cultivars, everything. And it was really important. We chose only to grow organically so that we could eliminate the use of pesticides and so on. And so there's so many different aspects, but I believe in absolute transparency. It is a promise we make to every single consumer. And to be quite frank, even if our competitors wanted the information, we share it freely. In fact, we love to engage and collaborate with our competitors so that we as an industry can become stronger and more aware, because somebody might have some sort of testing methodology that will work better than what is currently being used, so that we can be more efficient. But I hope that the FDA cracks down on things like claims, giving false promise to people with products that aren't even studied. And so for me, I look at more the responsibility, not only for testing and safety, but to look at what we're messaging to the consumers. But Deanie mentioned about the Valid Care study. We too were a co-sponsor and co-funder of that study, because I think it's our responsibility to invest in the future to show that not only are our products effective and wonderful, but they're also safe. That's key.
Yeah, well, I'm glad you brought up the topic of competition, because I'm going to tweak the question, the next question for Nick and Damien. And we're going to start with Nick, who has recently held the King of Extraction by MG Magazine. He had a nice spread with a high-res JPEG. And, competition is tough, and the field is very crowded in the United States. And this is a panel about companies abroad as well. What's your take on competition, and how do you stay one step ahead? And do you look at companies abroad, and whether it's in Canada or Europe? Dan Ahern said that growth is a lot quicker in Canada versus Europe, but Is this something that you take into consideration, and what do you do?
Yeah, I mean, we're always looking at competition, right? Our position is a little bit different than, for example, the rest of the panelists' position. Being in the retail CBD space is obviously something that you really have to be diligent, focus on the fundamentals, build your brand, focus on the quality of your product, all the things that, they just described. Fortunately, our business, we have a little bit bigger of a moat because we are protected by so much intellectual property process, a long-standing business that's almost a decade old now. So we have a little bit different approach, but it really doesn't vary too much, Anthony, from focusing on the fundamentals of business, right? You've got to have good branding, you got to have good marketing, you got to know how to articulate your message, you have to have close relationships with your client base, which we can do because we have only 100 to 500 clients that we're working with at any given time, where we're not a retail brand that's focused on thousands and thousands of people. So I think that for CBD companies, from our standpoint, it's much as Anthony said, and really staying innovative, because these other cannabinoids will come online. The processes that are involved in manufacturing and isolating CBD have gotten more efficient and more efficient and more efficient, which has driven the price down substantially. We obviously see that. So the efficiency in production and in the business model, the efficiency in the farming methodologies, the harvesting methodologies, the extraction methodologies, and then continuing to stay innovative from a standpoint of where are these other molecules, where are these trends shifting? Is it moving towards CBD? Should we be looking at CBG? What is our process for isolating CBG? How efficient is it relative to the competition? And how are we going to continue to push that envelope of innovation? So these are all things that I think would give anybody in the space a leg up. Absolutely.
Yeah. And Damien, how does Docklight differentiate itself? Because it's got to be a little bit of a different process, no?
Yeah, it's definitely a different process. And I think, like Deanie said, we approach it from a wellness perspective, right? So that makes it kind of a global market. And what Jason and Deanie said really resonated with me, because it's what you do when no one's looking that really matters more. And I hate to say it, like I'm sure everybody in this panel has been in lots of compliance-based meetings that went extra long, just to get get the QR code on the right spot on the package, right. Make sure there's transparency and labeling, vetting that you have the right labs, right? So even though you're testing, measure what matters and make sure they're measuring it right and being consistent. And then, correspondingly, when you look at going outside of the United States, you just invite the ability to do that over again with a different regulatory authority with the same rigor. So whether it be, Health Canada and Canada, whether it be, and we just navigated this with Docklight entry into the UK and, trying to deal with the EU Novel Foods Act while England was tearing itself away from the EU with Brexit and all the saber rattling that went on between those two different entities as to what the standard would be and what would be kind of the governance going forward really makes it difficult. And you can see the regulatory sands shift almost overnight under your feet as you were planning one strategy and then very quickly have to tack and react to a whole new set of regulatory, authorities, kind of exogenous factors. So, and then do that all in a pandemic, which makes things just
that old thing. Yeah.
Yeah, that old thing. That was easy. But you look at all these things together and it really amplifies up the need to have a consistent, replicable process that you can use with the stakeholders in those kind of net new jurisdictions that you have to navigate. And just, I think, being understanding and sympathetic to kind of local taste, protocols, et cetera, and coming in with the willingness to learn and understand the nuances of those different markets is going to get you further faster.
Yeah. Well, we might have time for 2 more questions, I hope. One is, what countries are you looking to? Deanie, you guys inked a deal or a partnership at least for Israel back in December. Hope that's going well. Sounds like it is. But why don't you talk to us a little bit about where you're looking abroad and what markets excite you the most? Is it Israel? Is it the UK? Is it Germany?
For sure, it's countries that have great influence and it's countries that have great financial opportunity and that are moving the regulatory in the right way. So companies that have great influence for sure have to be Israel and Canada. Canada, because it's the heart of where cannabis came up, and Israel because it's the place that has been studying cannabis the longest, and so they have the most knowledge, the most research, the furthest advances in terms of cannabis and CBD of anybody else in the world. And so those two markets for us become incredibly important because they tap us in and anchor us to a knowledge base. Like Damien, we are also looking very aggressively at the UK and Europe. You can't ignore the economic potential of those markets, and those countries are approaching the regulatory environment very, very differently than the U.S. And so I do agree with Jason and Damien that you have to be agile in this space. You have to be well anchored in a regulatory understanding, and you've got to have a team of people who understand how to operate a company within that environment. And so those are the countries today that are the most interesting. We'd be foolish to ignore Asia, but they're just a little bit further behind than those countries I've mentioned, and we'll find the most effective and efficient economic way to approach those markets. We love our connection with CanDoc. They're a division of Intercure. Intercure has distribution in 100% of the pharmacies in Israel. And so it feels like the right strategic partnership for us to be leveraging more broadly. And you'll see us doing a lot more of that going forward.
Well, economic efficiency, let's just end with this. I'll tweet the question for Jason and we'll sign off. Mergers and acquisitions are certainly a way to expand overseas, whether it's Canada or across the pond. Do you see an uptick in M&A in 2021? We had 3 big deals announced today, with Indus being one of them. What are your thoughts on that?
So we started talking about this last year, in the beginning of last year, is that we thought, given the in my humble estimation, the overabundant number of companies that entered the space trying to vie for what was at the time a relatively finite and growing space, that it was going to outgrow its ability to expand properly, and companies would struggle, but they would have good, interesting technologies, interesting offerings, products, innovations, things of that nature. Yeah. And so consolidation was an absolute, in my humble opinion, because if you don't have the time, given that sometimes you have to make fast moves, if you don't have it, you buy it. And because sometimes the regulatory time frame on how long it takes to complete something may go beyond what you might actually have time to do, given how quickly the industry will move, especially if regulations come down. So I think consolidation is inevitable. I think what's also unique about consolidation is that it will actually offer you the ability to expressly get into other places that others have figured out more differently, such as the digital space, online. Whether we like it or not, the digital space right now is very, very difficult to meander through the marketing online, unless you were one of those early adopters, like let's say Charlotte's Web. You were early online and you had a lot of interesting opportunities early on. Other companies have to struggle. It's very expensive. And so someone that has that digital experience would give you an interesting leg up. So we look at M&A as a very, very important consideration from helping to bring this industry together and grow it differently. It'll also help companies that may be undercapitalized but have wonderful opportunities and wonderful assets. And so I think coming together now, I think even beyond M&A, I think companies that are well established should be operating in more of a conscious capitalism sort of way, and looking at ways to collaborate so that you develop a sort of co-opetition. I know it's kind of an interesting word, but the fact is that, cooperatively competing doesn't mean that you don't compete, doesn't mean that you're fighting for the same shelf space and the same dollars, but cooperatively you could probably lift up, or rising tides float all ships in that manner. Right. And there can be shared industry technology that can be quite important. And I think that's how either consolidation or collaboration will create a very healthy environment for co-opetition. So,
well, that sounds like a good place to leave it. I don't know. They gave me the red light a while ago. I don't know if Elliot's going to come in. I could talk all day, but I can't buy myself more time.
Yeah.
There he is.
Yeah.
Speaking of co-opetition, you and I never found ourselves in the audition room, Elliot.
Yeah, we will. There's still a pandemic happening. But I do want to say these discussions are not through here. We talked to Deanie last week. We talked to Jason a couple weeks ago. Damien will ideally be on our podcast to talk more soon. And Nick, as always, tons of video content out there with him already. But ideally, we'll get him back on soon as well. with more video content to come there. So Tony, wonderful job. Thank you all to our panelists. Very insightful discussion that I wish was longer.
Thanks, Elliot. Thanks, everyone.
Thank you. Have a good
Bye,
day,
everybody.
everybody.
Bye.
All right. Thank you all so much. Really insightful discussion. Deanie, Jason, Nick, Damian, and Anthony Noto. I might get crap for that one later. It has been a heck of a day. We have seen so many amazing companies on this track alone. I don't even know what's happening on the other track. This is the Cool Kids track. But if there was ever a term or a time to use, last but not least, it is now. Ayr Wellness is just on the warpath when it comes to growth and doing so incredibly successfully. So I'm going to turn this over to my good colleague, Andrew Ward, who is going to walk us through this with Jen Drake.
Thank you so much, Elliot. I'm still laughing over Tony Toto there. He's going to give you crap, but it was worth it.
Yeah.
Jen, thank you so much for joining us. Really excited to speak with you. Thank you so much for joining us today.
Well, thank you for having me.
Yeah, so can say possibly an understatement that Ayr started the year off very exciting with lots of big activity going on. So congratulations to things so far. You are now in or pending to be in 7 states, if that's correct. How are you feeling about the progression of cannabis regulations on the state and federal level in the U.S.?
Well, listen, I think that Georgia, the Senate move in Georgia made things a little bit, basically made it so that the expectation is that pace is going to be faster than we otherwise thought it would be. Which is definitely exciting for the industry. So exciting for the industry. And I think really a little bit unexpected. I think people did not really expect that January 6th activity, but I think everyone is, and now everyone's really working to make sure we go at the changes in regulation the right way. I've had a lot of really great conversations with really thoughtful people on kind of the finance side, on the exchange side, legal, constitutional lawyers, people even in the, in the trademark patent and trademark office. There's a lot of really important and interesting stuff going on now in terms of conversations. And it's really, I think people are really taking seriously the need and importance of doing deregulation or legalization. Certainly decriminalization will happen, but doing legalization the right way.
Absolutely. Yeah. And, I think you're uniquely positioned that unlike not many other people in the space with, your background in Wall Street, working regulatory as well, and just the interactions that you've had along the way. What does that experience, help bring into you? Ayr was born out of several M&As and things like that. So, how does all that experience help develop Ayr and as well as just bring you to the forefront of the cannabis conversation?
Well, listen, a lot of people at Ayr do come from a finance background, so we know what it is to be in a highly regulated industry, and that's been super helpful to us. We take the regulatory and compliance responsibility super seriously, and we're accustomed to living in that environment. So it's almost second nature to us, to be honest. But what does that mean? That means that we can easily permeate our entire culture with one of taking compliance very, very, very seriously. But that's just really, I think, one of the things that has been really important to us culture-wise. We'll talk more about that later, but in terms of how we approach the business, certainly compliance is first and foremost. And we think it's really important for the regulator to be your friend, not your best buddy, but you got to treat them with incredible respect, and you have to give them everything that they want, because ultimately, they're your lifeblood. And if we move forward with if we move forward with more liberalization, we're just going to have more and more regulators. Right now, it's mostly the states. In the future, it will be more kind of at the federal level, and there's a lot of wood to chop there. So we look at it this way: we come from a super regulated kind of background. We put ourselves out there as an open book. So we've done this at the state level, and we want to do this at the federal level as well. Any regulator who wants to talk to us about the business, we would love to be a resource to everyone.
Yeah, and I think that's a great point. You've mentioned company culture, and we'll definitely dive in on that a little bit more. But I think the culture of compliance is really huge. And when I mention Ayr and I talk about Ayr to people in the space, one of the biggest things is your compliance and your ability to cultivate. How do those two work hand in hand? And what is the emphasis and the focus on cultivation for Ayr?
Well, I mean, cultivation, I mean, it all starts with the plant. And I think that's the most important thing in this industry. And a lot of people are very focused on building brands and making pretty boxes, and all of that is great. But if Nike were to put terrible shoes in a beautiful box, no one would buy another pair of Nikes. And it's really important for cannabis. It's an industry that is all about wellness and wonder together. And that really comes uniquely from the plant. So for us, cultivation is where it all starts. We think it's super important for that culture of respect for the plant to permeate kind of every aspect of our business. We think you can't be a great bud tender who's really passionate about the quality and consistency of the products that you're helping your customers learn about if the products themselves aren't great. And if you're a bud tender and you don't feel great about the products that are in your store, then you don't feel great about coming to work every day. And if you don't feel great about coming to work every day, it's not going to be an amazing team and an amazing culture. So it all fits together.
It absolutely does. And, I think that you're about 1,500 employees now. Is that
1,500 employees across the 7 states. Yes. And probably growing, because I think Florida is going to be a huge area of growth for us.
It absolutely will. And before we jump into Florida, I've heard that, you really the top-down approach, and, you kind of touched on it, I feel like, from there, but, can you kind of delve in a little more about like how that company culture was cultivated and how it's maintained at Ayr?
Yeah, absolutely. And it's so important to us because we do think that is like the key to being a great company is having a great culture that starts at the top and is driven by the way that everyone acts, not just what they say, but what they do, and you have to walk the walk and talk the talk right at the top and all the way down. And that means diversity and inclusion. That means mentorship. That means respect. That means treating your people well, just as you want to be treated. That means basically thinking of Ayr as a family, where the key people in the family are not just our teammates, but also our customers and our communities, because cannabis is, if nothing else, a super, super local business. And the health and wellness of the community itself is equally as important to us as our teams and our customers.
Absolutely. One of the things that I saw too is, a real dedication to recruiting top tier cultivation talent for that company culture, as well as, the appreciation to your consumers. Can you talk about, what that process was like and what it entails to go about finding the right cultivators?
Well, because it all starts with the plant, you really have to have the best cultivators that you can find. And because we understand that it starts with the plant, we do. It's almost like giving an artist a great canvas and a great studio with amazing light. So if you give them the materials to really do what they do, which is grow great cannabis, then they will. First of all, they'll love to come and work for you. Second of all, their enthusiasm and the quality of what they do will permeate every aspect of the business. And it's just a virtuous cycle that starts at the very base with that cultivation, which means it starts with the cultivators. And I think if you go and have that approach when you're talking to people about joining, then by definition, they're going to be incredibly happy to come.
Absolutely. And, I think that one of the things that you touched on too, the expectation for Florida. What are your thoughts heading into Florida now? Obviously, some really big, exciting stuff about to happen.
Yeah, we're really excited. I mean, I think Florida is a huge opportunity for us. There are 31 dispensaries open currently. We expect to close the acquisition of Liberty Health Sciences quite soon. The shareholder vote went through on Tuesday, so that's very exciting. But we'll have 31 stores open day one. Listen, those stores have a little bit of improvement to make, but the reason that they have improvement to make is because of their cultivation. You have to be vertically integrated in Florida. Liberty's cultivation has not been historically as excellent as it could be, and we have 2 of our cultivators on staff have expertise already in turning around a troubled Florida cultivation facility. So they've done, 2 of them have done it before. So we're super excited about the opportunity. We have an enormous 300,000 square foot facility in Gainesville with a ton of outdoor, and that's just the indoor facility. We have tons of outdoor space as well, where we can do some outdoor grow as well as indoor grow. All of that, with the with kind of the excellent kind of secret sauce from our cultivators, both the new hires as well as people who have been on staff for a while. They're all coming together, getting the brain trust down in Gainesville, and going to hit the ground running on day one of us taking over that business. And we're super excited because the Florida team is amazing. And really, this cultivation has been the missing ingredient for them to take their 31 dispensaries to the next level. And we're super excited about the existing retail footprint in Florida, but there are also another dozen or so dispensaries that are pretty much ready to go, and they just need to be built out, and we don't want to stop there. So we're super excited about Florida.
Yep, lots of excitement. I would love to dive in more just on that subject alone. I feel like we could talk for days about what you got going on there, but we do have to wrap up really soon here. So I just want to put it over to you. Is there anything more in the Florida market or just about Ayr in general that people should be on the lookout for in next coming months?
Well, listen, I think that we announced 7 acquisitions in 5 states over the space of the last 4 months of 2020. So we were busy. And as we move through the next couple of months, we'll be closing a number of those. And I think people should be expecting us to have some really interesting results once we close those acquisitions and are able to incorporate them into our growth as a company. And candidly, our business is still pretty undervalued relative to other people who have a similar footprint. So I think the market is maybe a little bit waiting for those things to close, but I wouldn't wait too long because the first one's going to close shortly, and then it'll be pretty quick thereafter.
So get in on it while you can, everyone. That's for sure. Well, Jen, thank you so much for taking time to speak with us. This is really exciting, and we're really excited to see where you're going next with Ayr and yourself. And thanks so much for taking the time.
Excellent. Thank you so much, Andrew. Have a good one.
Thanks. You too.
Jen. Thanks, Andrew.
Thanks, Elliot.
Awesome discussion to end the day. Ayr Wellness. If you don't know them, now you do. Now I bring back the man, the one, the only. He gives you your daily cannabis knowledge. It is Javier Hasse. What is up, Javi? How's your day gone?
This guy. Never a dull moment.
Never, man. We got to keep it lively over here. All right. So listen, we're going to let Javi do his thing here and drop some knowledge bombs on you. But I do want to say it has been an incredible day. This is all replayable. You can go back and watch whatever you want. This content is there for you guys, for our audience, for the investors, retail, accredited, institutional. It's there for you. See these growth opportunities, see where you can get in, and then come back to us at the next event and see how they've updated. I do want to say tomorrow, so many more public and private companies. I just put a bunch of tickers in the chat that will be there tomorrow, and I didn't even get all of them. You're going to have GTI. You're going to have Consortium. You're going to have the parent company. If you don't come back tomorrow, you're just straight up missing out. So I'm super pumped to do this again tomorrow. And we also, if you are an investor, stay tuned to Benzinga, subscribe to Benzinga YouTube, like our channels, Benzinga Events, but Benzinga YouTube, we have content all day, every day. SPAC Attack. Cannabis Hour once a week, but Power Hour with Jason Raznick, our CEO, and Hot Stocks Luke, our number 2 guy over here. They drop knowledge every day about stocks. And then, of course, I'm sure everybody on here knows Pre-Market Prep. I listen to those guys every day, and I adore it. So without further ado, Javi, what do you got for us? How about a little knowledge to end the day?
You were talking about getting in. Definitely AYR, Ayr Wellness now. The company that just presented is one I really like. They trade on the OTCQX, AYRWF. Also interesting, right? I know probably most people watching know, but this week, New Jersey Governor Phil Murphy signed a trio of adult use cannabis reform bills, effectively legalizing and decriminalizing cannabis in the state. What's interesting is, following the news, Cantor Fitzgerald analyst Pablo Swanich recommended investors to keep an eye on 3 companies. These are Curaleaf, OTCQX, CURLF, Green Thumb Industries, GTBIF, and Columbia Care, CCHWF. We will drop all of the tickers in the chat right after this. Also, this week we saw Parallel announce it will go public through a merger with Ceres Acquisition Company or Corporation for $1.9 billion.
That's awesome.
And since this morning, we saw a slew of news as well, right? Since we last discussed some of the news of the day this morning, more happened because the cannabis industry moves really fast. We saw Indus Holdings buy Lowell Herb and Hacienda assets for $39 million. MJ Holdings announced it will buy a cultivation and production license for the farm, and PharmaCann opened a new Verilife dispensary in Illinois. Also this week, Alabama legalized medical marijuana, and New Mexico saw a committee approve a marijuana legalization bill. Finally, interesting one, the Advisor Shares Pure U.S. Cannabis ETF, New York Stock Exchange MSOs, that's the ticker MSOS, surpassed $1 billion in assets under management. That is huge. Wow. It's an ETF focused solely on U.S. based cannabis companies, plant touching or not.
And guess what? Advisor Shares spoke today. They were here at the event along with pretty much every other company you listed. You know what that tells me?
Here. Where are you?
Benzinga's voice in the cannabis industry is self-explanatory, but it's all thanks, really to a few people, Javier being one of them. Benzinga.com/cannabis. Javier, Tony, who we saw leading the CBD panel, Andrew, who we just saw lead the Fireside chat with Jen, and Natan led the Fireside with Fire and Flower. These people write news every day. This is what they do. And it has been awesome to be a part of that and to read it. So Javi, props to you and your team. Keep up the good work. And please, everybody, go check out benzinga.com/cannabis. Just make it a tab on your computer and you're going to get the knowledge and you're going to get it quick because that's Benzinga's MO, is streamlined, efficient content.
And if you like our banter, every Thursday, 1 p.m. Pacific, 4 p.m. Eastern, we have the Benzinga Cannabis Hour. Dude, it's fun. We have 3 guests every week, women on every show. We keep it focused, we keep it diverse, we keep it always interesting and always fun. So make sure bzcannabishour.com.
Yeah, we're fun. We're entertaining. If we're entertaining, drop a 1 in the chat. Sure. Like, come on. Drop a 1 in the chat for me. We're entertaining. I'm going to go have a Bud Light seltzer after this. Getting crazy over here. Javi doesn't find that funny nor amusing. Awesome. So I do want to say this is the first of 3 cannabis events this year. In June, Grow Generation will be there. A lot of these leading companies love to come back and update you all, being our audience, on what they're doing. So please tune in. Please follow Javi. Please come and see us talk every week, Thursdays at 4 p.m. Eastern time for some Cannabis Hour discussions. Outside of that, how about we end the day with a little Cannabis Hour reminder? Let's go. Let's do it. And we will see all of you all tomorrow for a ton more content.
Peace and love for cannabis.
Welcome to the Benzinga Cannabis Hour.
There are more people who are in favor of legalization.
I saw the benefits of it for myself.
I just have to ask, was there pot pasta in the cannabis cookbook?
Oh, it was gorgeous. There was pot pasta.
We were talking about cannabis pasta.
That opened my eyes to the cannabis industry.
It's this new industry where now billions of dollars are being made.
We're here to bring cannabis into culture.